earnings and revenue that topped Wall Street expectations. The company guides for a stronger than expected sales in the fourth quarter. Stock up 4% in extended trading. Markets in Asia and Asian chip stocks rally as investors cheer Nvidia's hotter than expected earnings and bullish forecast. The GIFT Nifty is indicating a positive start for the Indian market. Crude prices fall after reports indicate that the US is pushing to end the Russia-Ukraine war. Meanwhile, gold rises 1% on safe haven demand ahead of the key US data points. Starbucks CEO Brian Niccol says India is one of the fastest growing markets. Will double down on growth plans ahead of the 500th store opening in India. He adds that they remain committed to growing the portfolio here. That's an exclusive. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Motiwala. Thank you so much, as always, for tuning in. And let's look at what the Asian markets are doing. US market surely ended on that positive note, and Asian markets are taking cues from there. Look at the Taiwan index managing to hold on to gains of 3.37%. Hang Seng is holding on to gains of 0.5% as well. So good opening that's coming even for the Asian markets. ASX 200. Nikkei, that's the Japanese index, is holding on to gains of more than 3.5% as well. Shanghai, good gains on that front as well. So obviously what we saw coming in, especially on those AI-related stocks, Nvidia earnings that came in that beat the street estimate, is keeping the Asian markets on the positive side as well. All the chip makers in the Asian markets are also managing to hold on to very good gains. And that's the cue coming in for our Indian market. 75-point uptick today for the Indian markets as well. That is what we'll be keeping an eye out on. 79 now, so keep an eye out on the Nifty as well. Nifty implied open, 79-point uptick. But like I said, a lot that's happened in the global market as well. So we'll get you set up for today's trading session. And for that, we have a team of research, as always, joining in with us for that. Before I go to Sudha and Upasana, let me actually tell you all what are the important market cues that came in overnight. US market, like I said, right, major indices, they rebounded. There were multi-day fall that came in for this, and now we saw that rebound coming in. S&P 500 snapped that 4-day losing streak, and obviously Nvidia stock, when you look at that, that was running up in the trading, extended trading hours that the markets had in the US, and obviously that was because of the good set of numbers, validating that those investment AI bubble concerns doesn't seem like it's a major concern, and that's why the run up in Nvidia as well as the other AI related stocks as well. US stock futures as of now are surging in trade as well. Other key data points that came in the US market was the Fed's minute. That was an important update there, so we'll watch out for that, indicating that maybe there may not be a further rate cut in 2025. So that will be a key data point to watch out for going forward as well. FIIs on the domestic front are buyers, 1,581 crore buy coming in from FII. DI has also continued to see their buying on that front as well, 1,360 crores. Today we'll watch out for a listing, which is Fujiyama Power Systems. The IPO was subscribed around 2.14 times, so that will be important to watch out for. Cues for today on the global front, obviously we'll watch out for UK EU CPI data point, as well as in the US later today, that jobs data, the delayed jobs data that is coming in, will be key to watch out for. UK inflation data point that came in 3.6%, cooled off to 3.6% in October. That is something that we'll be keeping an eye out on. And other than that, Piyush Goyal is visiting Israel. There'll be trade talks on that front, technology, investment talks on that front. So any update on that will be key to watch out for. Finance Minister Nirmala Sitharaman, pre-budget consultations are starting with industries. So that is also something that we'll be keeping an eye out on. Stock specific, keep an eye out on textile stocks. Target has actually cut the profit outlook for given them subdued demand that they were seeing. So that is what they'll be keeping an eye out on. IT stocks because of Nvidia earnings, and Infosys obviously share buyback that is opening today and will close on 26th of November will be key to watch out for. Nifty yesterday 26,000, that psychological market closed about that. Today implied open is indicating surely a strong start. 75-point uptick is what we'll watch out for as of now in the market, whether 26,000 sustains. But let's move on to some stock specific action now and go across to Upasana for that. Good morning, Upasana.
Good morning, Vinny. First up, let me start with Adani Enterprises. It has received LOI for acquisition of Jaiprakash Associates after the COC approval. Next up is Info Edge. Chintan Thakkar ceases to be the whole-time director and CFO of the company with effect from 19th of November, and Ambarish Raghuvanshi takes over as the interim CFO with effect from 20th November 2025. Next up is NBCC. The company gets an order worth 2,966 crores from Nagpur Metropolitan Authority. Next up is CG Power on our radar. The company gets a tax demand worth 365 crores from the IT department for the assessment year 2018 and 19. Next up is MediAssist Healthcare. The arm experiences cybersecurity incident affecting some of its system and services is what the company has indicated. Godavari Power Spat is the next one on our radar. It has invested 125 crore in the arm Godavari New Energy to set up an energy storage system plant which is as big as 10 gigawatt. Next up is Capri Global. The company has formed a wholly owned subsidiary, that is Capri Global Insurance Broker Private Limited, as the company forays into insurance broking business. Next up is NTPC Green. The company has entered into a MOU with Singarneri Coloniers for development of various projects is what the company has indicated. Next up is Mahindra Holidays and Resorts as the company enters into leisure hospitality new line of business. And lastly, Samman Capital was a stock on our radar yesterday's trading session as well. The company says that the litigation in Supreme Court relates to a former chairman that has been repaid, and now the key that is that the IHC investment deal is under the renewed scrutiny, so we'll be keeping an eye out on that as well. So all in all, we are closely tracking all these stocks today.
Okay, thank you so much for that, Upasna. But let's go across to Sudarshan now, who is here to tell us what to watch out for in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So it was a good day of trade and we saw a huge recovery after opening yesterday and comfortably closed above 26,000. So now one hurdle is 26,100, but today GIFT Nifty is indicating that we are going to open above that, and if we manage to close comfortably above 26,100, the door opens for 26,300 and 26,500. One minor risk I would say is that FIs remain heavily shorted, and the recent buying or recent uptick that we have seen in market has been mainly on the back of the big buying that we have seen in DIs. But good part also here is that at least selling by FIs has stopped. Yesterday also in the index futures we have seen FIs buying more than rupees 200 crore in the as far as positioning is concerned, we have seen a minor decrease in the long side, but at the same time, also we have seen that they have reduced short positions by around 1,200 contracts, and their longs exposure remains around 12%. As far as options data is concerned, 26,300 on the call side has seen an increase in the open interest. There was an increase of more than 19 lakh shares. Also, good part is that premium for that call option has moved higher. In the contrary, on the put side, premium for both 25,900 and 25,800 put options has fallen. So for now, support for Nifty remains in the range of 25,800 to 25,900. First resistance 26,100, but will open above that. The next resistance comes around 26,300. For Nifty Bank support, bigger support is 58,200. It's trading near record high, so obviously resistance will keep moving higher. Lastly, stocks in the focus, two stocks are in the band. SAIL and Samman Capital has entered into the band, and apart from this, some of the candidates, likely fresh long candidates, are Samudra Motherson, Kalyan Jewelers, and from IT stocks, Emphasis.
Okay, Sudarshan, thank you so much for that, keeping an eye out on all the stocks in the world of F&O. But let's move on. And Starbucks CEO Brian Niccol says that India is one of its fastest growing markets as the company prepares to open its 500th store here in the country. In an exclusive conversation with CNBC TV18, Niccol outlines India's growth plans, store expansion, and the impact of tariffs. What more came in here? Mangalam is here now with the highlights of this exclusive conversation. Good morning, Mangalam.
So it was a text interview that Brian Niccol gave to us, and on multiple factors, he did say a lot of things. Let's start with India. He said that India is one of their fastest growing international markets, and that's not all. They remain committed to growing their portfolio in India itself. In fact, they are very soon opening their 500th coffee house in India, which will offer the second Starbucks Reserve coffee experience in the market as well, catering to India's growing community of coffee enthusiasts. And he said that over time, they're looking at expanding the Reserve as well as overall coffee house formats in India. With regards to the partnership with Tata's, they did say that they're proud of their partnership with Tata and the success that they've seen in India. This is a key partnership for them, and over a decade, they've worked closely with the Tata's to expand and elevate India's coffee industry and build a strong coffee culture in India. As they continue to grow together, the focus will be to continue to create a differentiated and elevated coffee-first experiences for the customers. Was there a problem with regards to US tariffs, the revisions out there affecting their sourcing from India? They said no, there is no impact on sourcing from India. In fact, coffee in India is sourced and roasted in India, and India has a localized supply chain with most ingredients itself sourced from India itself. The question on what is India's role and significance in Starbucks' overall global strategy, Brian said India is a key part of their overall global back to Starbucks plan. In fact, they're here to invest, share and grow with India, building India's coffee culture for the long term. As part of this strategy, they are reaffirming their long-term commitment to the market, to farmers, to customers, to coffee culture and to India's future. But India is not the only thing that we spoke about. We spoke about China and other markets as well. And he said that the China JV is about accelerating growth and not fixing any problem out there. The team in China continues to drive demand in a competitive marketplace, delivering consecutive quarters of positive comps and continued store growth. For them to succeed in each market, they must show up with their global scale and local relevancy, ensuring that every coffee house they operate in delivers a great experience for their customers and the partners. So that was the exclusive conversation across a whole host of topics that CNBC TV18 had with Brian Nicol.
Thank you so much for that, Mangalam. Interesting updates coming in there from Brian Nicol. But on that note, we are going to actually sip into a very short break. But after the break, we'll talk about what's happened on Wall Street. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18. Now let's get that update on what happened on the Wall Street today. Now Wall Street in yesterday's trading session is what I mean. Yesterday they ended higher, and this is following the 4-day fall that they had seen coming in, especially for technology stocks. Now S&P 500 in yesterday's trading session gained around 0.38%. Closing at that 6,642 level, while the Nasdaq actually added around 0.6% in yesterday's trading session, settling at 22,564. Dow Jones climbed 47 points as well. That's around 0.1%, finishing somewhere at 46,140 levels. Now, the Federal Reserve, they released the minutes of the October FOMC meeting, and it shows that the central bank officials are divided over that further rate cut, and several members don't see room for more rate cuts in 2025. So that was the update that we had coming in from the US market. But let's talk about Nvidia, the AI chip maker. They reported their third quarter numbers, and revenues were better than what the street was expecting. The company guided for a stronger than expected sales in a fourth quarter. For that, we'll go across to Hormaz now to give us those details. Hormaz, good morning.
Good morning, Vinny. And it was an absolutely blockbuster result from Nvidia, if you could want to call it that. And the revenues were better than expectations. Its EPS was better than expectations. The guidance for the fourth quarter of $65 billion in sales also better than expectations. And that is what has led to the stock surging 5% in after-hours trading, and of course the abatement to the 4-day sell-off on Wall Street that we have been seeing over concerns of AI being in a bubble. And that was the big question that Nvidia CEO Jensen Huang answered during the earnings call. He mentioned that there has been a lot of talk about AI, but from their vantage point we see something very different, and that is what he mentioned with regards to the AI bubble. He also mentioned about the Blackwell chips, where the current generation chips sales are off the charts, is reaching unimaginable levels, is what Jensen Huang said. Now, how big has Nvidia become? It's on track to report $100 billion in profit for the year. The first 3 quarters has resulted in profits of around $77 billion for Nvidia, and that is more than the combined sales of its rival companies Intel and AMD put together in the first 9 months of the current financial year. The stock was up 5% in extended trading, as a result of which other chip stocks, be it Broadcom, Qualcomm, all of them surged anywhere between 2.5% to 4% as well in extended trading. So Nvidia, a blockbuster quarter, delivering on expectations, and as a result of which the Nasdaq futures are up well over 400 points this morning.
Thanks so much for that. In fact, let's listen in to what Nvidia CEO had to say about the company and their earnings in their post-earnings conference call.
No company has grown at the scale that we're talking about and have the connection and the depth and the breadth of supply chain that NVIDIA has. The reason why our entire customer base can rely on us is because we've secured a really resilient supply chain, and we have the balance sheet to support them. When we make purchases, our suppliers can take it to the bank. When we make forecasts and we plan with them, they take us seriously.
And let's move on. The US president once again doubled down on his criticism of the Federal Reserve Chairman Jerome Powell for not lowering interest rates more quickly, saying he did love to fire him. Listen in.
Mortgage rates are down despite the Fed. I mean, Scott, you got to work in this guy. He's got some real mental problems. No, he's something wrong with him. It's just sweet. I'd be honest. I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. I'm building a ballroom that's going to cost a tiny fraction of that, and it's bigger than the whole thing put together. You got to work at him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
And President Trump has signed a bill to release files related to the sex offender Jeffrey Epstein, ending months of resistance to making records public. This comes after the U.S. Senate swiftly passed legislation to compel the Justice Department to release files. The president announced on his Truth Social account that he had signed the bill. Okay, on that note, we're going to slip into a very short break now, and we'll come back with cues in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV18. Now, let's go across to Manisha, who's here to tell us what we are keeping an eye out on in the world of commodities. Good morning, Manisha.
Morning, Vinny. Thank you for that. Well, I'm looking at the US dollar index to begin with because that's holding above 100, which is very close to its 6-month highs. Couple of factors here. One, the FOMC meeting minutes do show that the street was divided when it comes to a rate cut for the month of December. The markets are playing with the probability of a 33% right now on a rate cut for December, and that in turn has been supportive for the for the US dollar. Having said that, it also is ahead of the US jobs data. The non-farm payroll numbers come in today, and this is a number that's coming in after a long time. Remember, it was the longest US government shutdown. So there is delayed data, and this is one number that the street will want to watch out for ahead of the US Fed meeting on 10th and 11th of December. The strength in US dollar is also keeping pressure on various other commodities. Crude oil prices have seen a decline come in yet again. Apart from the strength in US dollar, it also has to do with the peace talks that US president is pushing with Ukraine that is putting pressure on prices. Gold and silver are also off its highs because of strength in US dollar. Having said that, silver seems to be holding around that $50 an ounce and gold at $4,000 an ounce. So the market's holding near very psychological support levels for both of these precious metals.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast. Nifty indicating a very strong start for the Indian markets. Your Bazaar Morning Call up next to take you through all the market action.
morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Thursday morning, lots happened overnight and lots ahead. And we will track all of that for you. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning folks. Morning Prashant, morning Nigel. I guess the big global event is out of the way. Those Nvidia numbers are done. They're good. Their guidance is good. And the AI trade is back. We've actually got the Asian markets roaring far more than what we saw on Wall Street.
Yeah.
What does that mean for us? Now, that is the question. Again, at 26,100.
We are going to be at all-time highs in November itself. 1% away, I think.
In November, wow.
I mean, it's just a few sessions away. We have expiry as well that plays out. And actually, the feeling you got yesterday looking at the screen itself was good because we ended virtually at the high point of the day. So I'm feeling good. And I think getting into this festive season, Indian markets will participate.
Yeah. All-time highs, but without too much enthusiasm.
Yeah.
Right?
That's the problem. Portfolios are not feeling like that.
IT was the big star,
Yes.
3%, and no real discernible reason except that nobody has it in their portfolios. Earlier it was Reliance. So, I mean, the index, and these are all heavyweights and important for the index to do well. Maybe, the thing to focus on, perhaps we say, well, focus on stocks and not the index. Maybe the thing to focus on is the index because the index is kind of being held up. Okay, well, let's just quickly run you through what you need to know as we begin this session. US equities rose. S&P was up 0.4, NASDAQ was up about 0.6%, NVIDIA was up 3% going into results. And of course, it posted results after close. Basically, it posted another set of beat and raise, earnings, a set of earnings. Basically, they beat what was the consensus and then they raised their expectations for the Jan to March quarter. After hours, the NVIDIA stock is up 5%. By the way, Jensen Huang essentially has said in the conference call which happened, and the call essentially is, and he addressed a whole bunch of things, nothing on China, but everything else he addressed. But the critical thing he said is that as far as the Blackwell chips are concerned, demand for Blackwell chips, the phrase he uses off the charts, it's kind of sold out. So this is, and I think the market's, of course, taking heart from it. Now, NVIDIA, we'll talk more about this a little later. Google parent Alphabet was up 3.5% and, we're close to a new high on that one. Oil prices, meaningful move, and that's the reason why I'm pointing to it, 2% lower, $63.5. There was this headline in the Financial Times that, US and Russia are working on a new plan for peace in Ukraine. Dollar index went up. The other one was dollar, which has been absolutely muted, right? But the dollar index went up 0.5%, and we are above that 100 handle. So did something happen for the dollar to move? And we'll sort of discuss this with our guests as well. But, we are back above the psychological 100 handle on the dollar index. All eyes on Thursday for the delayed September NFP. We got confirmation that the October jobs report in the US will not be released. It will be most likely bunched up with the November number. But September data we will get, later tonight out of the US. And I think markets will watch this closely. IT stocks did well yesterday, just to kind of sort of come to our markets. So index was up 3%. And as I said, maybe under ownership, perhaps the biggest factor. Otherwise, not very much out there, which kind of explains this kind of a move. Stocks were up between 3, 4, 5%. The other indices, the PSU Bank Index continues to do very well. And the capital market space also did well. Those are the three, indices, IT, capital markets, and PSU banks. So this is the setup then in terms of levels for the Nifty. 26,100, which is 50-60 points away as far as the upside is concerned, and that's been the upper end of the range. Support, which has moved higher and higher. Basically the 20 days, being dragged higher, and that is 25,820. For the Nifty Bank, support is the 20-day, which has again been dragged up. 58,200, or you could use hourly averages, but because the 20-day now is almost 1,000 points away for the Nifty Bank from where it closed yesterday. And of course, it's still in that rising channel, and the upper end of that channel is 60,000. 650. It's a level we've put out over the last couple of days as well. So that's the setup as we come back into this Thursday morning session. GIFT Nifty gives you a quick sense of how we are starting. 60 points on top of the 140-odd points yesterday. So it's going to be a decent start. Nigel has walked across with the F&O stats and positioning. Nigel, over to you.
Well, NVIDIA's numbers as well as the way ahead indicate that things will look up for the company. Will this rekindle the AI rally? Well, that's what we saw in after market hours, in terms of the US market. All those future stocks, they were higher. But will it spook the IT stocks? Because yesterday, that one went up by close to 3%. Remember, they have been missing in action from the AI trade. However, I think that under ownership, as well as there was some delivery-based buying. So this as well could continue to trend along, even though NVIDIA has given a good set of numbers and the AI trade could be rekindled. But this one appears, the markets appear that they're looking ahead with regard to the IT stocks. So that's going to be an index that's going to be on our radar. Yesterday, if you look at the FI data, on all fronts, actually, it was positive. They bought in the cash market, both the FIs and the DIs on the same side, which is good. Institutions net buying. If in the futures market, if you look at the index futures, well, out there, in fact, you did have on Nifty futures, first of all, there was some kind of covering that we saw. While on the Nifty bank, there were signs of long build-up out there, and that's the one that will have to lead us ahead. But getting back to the FI data point, well, the FIs on index futures, well, they covered some mild shorts out there. The short position continues at around 88%. What about on stock futures? Well, out there, in fact, it was quite interesting because they added more longs than short positioning. And on the option side, they wrote more puts than calls. So put everything together, the cash market buying as well as the F&O data points coming from the FIs, it appears this market is looking good for more. Moving to, the PCR has moved to around 1.29 odd. Remember, we have the monthly expiry that will play out in the next 4 trading sessions or thereabouts. And the reason that the PCR has moved up is because the put writers, they feel that they're in the game and they believe that now, in fact, the fight back is on. So the 25,900 put, solid open interest build up. Premium out there is at around 80 rupees. While on the upside, this 26,050 call had a good amount of open interest build up. And normally when you see premium at 100, 150, 200 rupees, you sense that there is writing being seen at that particular strike as well. So punching in these levels, 25,900 put, 80 rupees premium, you just deduct that, you get around 25,820. And that's spot on where the 20 DMA is at as well. So that becomes the first level of support that you're looking at. Resistance 26,100, 26,200. That's as per the options data. And the Nifty bank, yesterday that was a star yet again. And you'll have to say that will have to lead us ahead because the 20 DMA is close to around 800 to 900 points away from yesterday's close to around 1,000 points actually on the Nifty bank itself. Stocks that I'm looking at, Saman Capital, towards the end of trade yesterday, the stock got slammed. There appeared there was some cash market selling. And as we indicated at around 3:30, 3:20 p.m. itself, that is likely the stock goes into the F&O ban. That's what's happened. The management has put out some clarification. That stock will continue to remain on the radar because of the news flow that's coming in there. The street is a little bit skittish on this IHC deal, though the management is saying they're working towards closing off that deal. And with the stock in the F&O ban, it adds that element of volatility as well. So that's going to be a stock that we'll be keeping on our radar.
Okay, all right. So we'll keep Saman Capital definitely on the radar. I mean, will there be any pullback? Will there be any clarity on the road ahead? That was a big newsmaker last afternoon. By the way, like I said, Asian markets are mostly having a great run, particularly Japan and South Korea. The Japanese market is running away, almost 3% up now. There's the added excitement around a potentially large stimulus, which the government has been promising, and it could be announced as early as tomorrow, which is why the yen has also been falling. So that's the added, excitement in Japan. But yes, I mean, all the other chip-related, shares, even SoftBank, all of them are driving that market higher. The dollar yen still at about 157. The other markets in the region, South Korea is up about 2.7%. We just had Hong Kong on the screen. Hong Kong is actually not, sharing too much of that enthusiasm. You can see the Hang Seng absolutely flat, but Taiwan's doing really well, 2.5% up, largely up. Now, what does that mean for us? Let's see what the implied open is indicating. Can the bulls continue their winning streak? Well, that's the sense right now, with about a 60-point start, and then we'll take it from there. So let's get to the equity call of the morning. Herald van der Linde of HSBC says that there is only so much AI exposure that investors can build in Asia, especially in Taiwan and Korea. In 2026, he expects to see a pivot away from these crowded trades with more focus on India and Indonesia. He says while retail investors continue to power the China market higher, we need to see signs of an earnings recovery. So that's a slightly favorable view on India that HSBC is maintaining. Now,
I don't know what the notice title. I think it's titled Anti-AI Trade.
it is?
I mean, look at what he said. He just read out the quote, right? There's only so much that people can buy into the AI stocks. And in 2026, they'll focus on the non-AI stocks.
I've been waving the anti-AI trade flag for a while. Everyone's been laughing at me, but let's see. Hopefully, we see a little bit of it. It's just normal portfolio management, right? You do that. You do not put all your eggs in one basket. It's rule 101 of portfolio management. Anyhow, let's, before we introduce our guest, let's actually play out a very interesting soundbite that we got from the US president once again. He's again doubling down on his criticism of Federal Reserve Chairman Jerome Powell, saying that he's not lowered interest rates fast enough. And once again, there is a threat that Trump wants to fire Powell.
Mortgage rates are down despite the Fed. I mean, Scott, you got to work in this guy. He's got some real mental problems. No, he's something wrong with him. It's just sweet. I'd be honest. I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. I'm building a ballroom that's going to cost a tiny fraction of that, and it's bigger than the whole thing put together. You got to work at him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Oh, good God. Now, there were a lot of chuckles in the audience, but, I mean, is it theatrics? Is it more than that? Is it a veiled threat? Well, Mr. Trump, you never know. So he's looking to fire not just the Fed chair, but now the Treasury Secretary as well. We'll see. Need to watch this very, very carefully. Anyway, we have Neeraj Sheth, founder and CIO at 3R Investment Management with us. Neeraj, always a pleasure to be speaking with you. Thank you so much for joining in. So I'm not going to ask you whether you believe what the US president just said or not. Let's park that aside. But the more important question for us here in India, is there a real anti-AI trade that people are thinking of? And if yes, can we hope to be beneficiaries of it? Your thoughts?
So first of all, I don't think you need an anti-AI trade. I think you need a diversification trade.
Yes.
And that works in favor of India. Obviously, India missed out on a lot of the rally if you look at the last 12 months. And some of it is obviously the whole AI euphoria, and that has been going on. And with the NVIDIA results, basically, it just reinforced that trade is still there. But I think where India plays, in my view, is as we go into the year end and next year, is one, the GST cut. Obviously, it's playing through the system now. You see some cyclical recovery in the earning after the bottoming out. And I'm still keeping my fingers crossed on the trade deal. India is still waiting for, obviously, the trade deal, which will bring some impulse for the market rally. And from a diversification standpoint, when I look at the globe, I think India actually looks good going into next year.
Yeah, no, absolutely. India looks good from a diversification point of view. Neeraj, just a quick word on the December meeting from the Fed. We get the jobs data for September tonight. October will be bunched up with November whenever we get that. Most likely, I guess, in December. But what's your sense? Will we see another rate cut? Will we see a pause? I mean, I guess it's gotten much more divided now.
I think it's much more divided, and hence, to some extent, Chair Powell's word carries more weight, in my view. And he did give a preview in the last press conference around December not being a done deal. And you've seen the market repricing the December cut down to now less than 40% chance for a cut. If I look at, obviously, where things are, the financial conditions are still easy. The inflation is still sticky. And the data is, one, absent for a while. And you have some level of potential distortion because of the shutdown and reopening that's happening in the US. I think the December is not a done deal. I still think Fed has 2 to 3 cuts in the pocket over the next 12 months. But the chances are that the Fed pauses, waits in December, and waits till more data to go again in January. So I think that's a real possibility of no rate cut. And you've seen that playing through, obviously, the dollar rebound and to some extent the gold price moves in the last few weeks.
All right. Yeah, Neeraj, I was going to ask you on gold. What's going to happen to gold? You know, the call out there was that, in fact, gold's going to trend higher, and suddenly you have some kind of stiffening with regard to the dollar index, some uncertainty with regard to those rate cuts as well. And the dollar index has been looking a little bit skittish. However, central bank buying as well is something that's been pushing the gold prices up. Where do you see gold headed from here on?
So I remain positive. I don't think I'll change my view on the short-term moves. The positioning and the shift in terms of the Fed expectation did cause, obviously, some volatility in the gold price. And we've seen, obviously, in the last three discussions we had, every time we were close to 4,000, we cross, we come back, we cross and we come back, and we're still there. But it's still above 4,000. If you take a huge step back and think about the drivers between the central bank demand, the debasement of the currency risk that people are worried about, now, I don't think that the gold price is something which is in a secular decline here. It's correction. It's a healthy correction. In a 12 to 18-month view, I think gold still has meaningful upside from here. So I would keep gold as a hedge in the portfolios.
By the way, on the dollar, Neeraj, dollar is now it's above the 200-day moving average last night. It's taken that out. And we were talking about the Fed, right? What it'll do. And the October-November bunched up data we will get in December, but after the December FOMC. So in that sense, it's kind of it's flying blind, so as to speak, right, Neeraj?
So two things. First, on the Fed, I do think they still have access to a lot of data. Obviously, the job reports and some of the critical data is getting delayed because of the shutdown. And hence, I do think the risk of Fed pausing in December, because obviously they would like to see more data before they continue on the easing path. The second, from a dollar index standpoint, I do want to highlight there's one currency on the other side of this index, which is the Japanese yen, which has seen a meaningful move over the last few weeks since the elections. So it's not just the dollar strengthening against everything. Dollar obviously has seen strengthening, I would say, more in the third quarter than the fourth quarter. And if I take a step back again, think about the question around, obviously, the Fed cuts path forward, the point about the new Fed chair appointment that will come in the next couple of months, the whole question around the Fed independence, the fiscal sustainability. I'm still in the camp that as we go into next year, we'll see potentially more dollar weakening rather than strengthening from here.
Got that. Neeraj, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV18. Well, I think, we'll just quickly run you through the interactions which are lined up. At 8:35, we have the management of Dodla Dairy to talk about the quarter which has gone by. Remember, these companies have done phenomenally well in that space. 9 o'clock, Shweta Daptardar of Elara Capital will discuss the NBFC demands from FM and Samman Capital matter with regards to, of course, what the Supreme Court observations were. Sandeep Tandon joins us from Quant Mutual Fund at 9:20. He's a market master of the day. 9:35, we will have we'll bring you a discussion around demand trends in the auto space. Basically, the big question is, are both for two-wheelers and four-wheelers, the GST cut induced demand trends continuing? We'll also be speaking with Neha Agarwal of JM Financial Institutional Securities. Their conference is underway, and we'll sort of do that in terms of what deals they're seeing out there. And Lata will be speaking with HSBC's Pranjal Bhandari on It's the Economy. That's at 10:15.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you in a special Top 10 segment. For the time being, I give you a sneak peek. We're looking at Adani Enterprises, Vedanta, Ambuja Cements, NBCC, Mahindra Holidays, Godrej Properties, Samman Capital, and City Union Bank. All of them will be reacting to positive news flow. On the flip side, we have MediAssist Healthcare and Sula Vineyards that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Well, like we've been telling you, cues across Asia are fairly optimistic. Actually, global equities are feeling rather well after those NVIDIA numbers and their guidance. No problem there, selling those new Blackwell chips. So most of the regional markets are up. We're getting an indication that we'll probably start at least 60 points up. 70, almost 70 now. The question is, can the Nifty take out 26,100 in a decisive manner or not? That's the biggest question for the day. Well, we'll get to it as the market opens up, but we also have lots of stocks to watch. So let's straight away get to our team with the CNBC TV18 list of top stocks to watch. Guys, morning to all of you. Today, cement is going to be in focus because it seems this JP Associates resolution could finally get underway, Nigel.
Well, that's right. Yesterday it was widely reported that, in fact, this could be the case that the Adani Group gets Jayaprakash Associates assets. And, post-market as Adani Enterprises, they say that they've received the letter of intent for the acquisition of Jayaprakash Associates after the Committee of Creditors, that COC, has given the approval. Now, implementation of this particular plan is subject to the LOI terms as well as the NCLT approval. So we'll wait by for that. Now, Jefferies is saying these JP assets, they have a lot of assets, whether it's hotels, cement, real estate, as well as ENC as well. So it will be distributed across Adani Group entities. So, one of the beneficiaries could possibly be, obviously, Adani Enterprises, because they are the one that have won the bid. But the other one could be Ambuja Cements, because the cement assets from JAL, cement is roughly around 9.5 million tons, or clinkers around 6.7 million tons. There is a bit of a dispute for around 2.2 million tons. But all in all, it's a large capacity. And this will be good for Ambuja Cements because they have the least exposure in central region, where as a percentage of the total 110 million tons or that they have, only 8% comes from central India. So it's a strategic fit for Ambuja Cements. Thumbs up out there. For Vedanta, the shareholders will be very, very happy because they will say that they are the lucky losers. They didn't want them to be too adventurous, put 15-20,000 crores and go into a non-core asset. So that's why I think a bit of a relief for Vedanta shareholders and good news for the Adani Group, namely Adani Enterprises as well as Ambuja Cements. That said, Vinny is on the screen as well. She's joining in to tell us about some stocks in the news. Vinny.
Hi, good morning. So first I'll start with NBCC. Now they've received an order of around 2,966 crores. This is from the Nagpur Metropolitan Region Development Authority. Mainly this is going to be for a project management consultancy services project which they'll be implementing. Obviously it's a massive order win for the company. Significantly will boost the company's order book as well as revenue visibility in the future improves. So that's why we'll see green on the screen for this one. Mahindra Holidays, that's the next one. The company has entered into a leisure hospitality business segment through a subsidiary under the brand name Mahindra Signature Resorts. They are aiming at around 2,000 skis by FY30. So obviously a strategic step moving beyond that core membership club model. So that is a positive there for them as well, and we'll expect green here. MediSS, that's the next one, a material subsidiary of the company, that is Paramount Health Services, said that there was a cyber attack, an incident that took place for the company. This affected the systems of the company, but that has been restored. So neutral to slight but negative move that we could see for MediSS. Sula Vineyards, that's another one we'll keep an eye out on. Now, ICRA has reaffirmed the credit ratings for Sula Vineyards and one of its subsidiary. The long-term rating remains at ICRA A+. And short-term ratings also stay what they were given before, but there's a revision that's coming in terms of the credit outlook. So that is where it is moved to negative, and that is a bit of a red that we could see for Sula Vineyards. Godrej Properties is the last one. We'll expect green here as they've announced an acquisition of around additional land of 3.8 acres. This is in Bangalore, south of Bangalore. This will unlock around 2,400 crore rupees in terms of revenue for the company. So positive there as well.
All right, Vinny, thanks very much for that. Well, we're going to talk about Saman Capital from the financial space. I mean, the stock was absolutely smashed by close. And of course, City Union Bank is the other one. Gaurav has got details on both. Gaurav, take it away.
Well, as Saman Capital, for investors, it was a complete disaster, at least yesterday, because we saw the stock tanked almost by 12%. So let me tell you what happened earlier. So earlier in 2019, there was a case filed against the company and the earlier promoter, Mr. Samir Gehlot. In 2024, Delhi High Court actually dismissed the PIL. And after that, there was an appeal made against Delhi High Court in the Supreme Court in October 2024. Now, what happened yesterday is that now the Supreme Court said that there are no actually open investigations pertaining to the allegations notifications in the PIL for Sanman Capital, either from the investigative agencies or from the regulatory bodies. They also made clear that they have not expressed any opinion against Sanman Capital, which means that they have not made any negative observations against the Sanman Capital. They also said that the proceeding was centered around the petitioner's submission for the earlier promoter. Now, when we look at earlier promoter, is he a part of the company? Well, the answer is no. In fact, company says that Mr. Gehlot completely exited the company in 2023, and specifically about the court proceedings, there was no negative reaction for Sanman Capital. Now, what about the IHC deal? Company said that both IHC and Sanman Capital continue to remain focused on obtaining all the required regulatory permissions and to make IHC a promoter of the company. So that is something which is coming positive for Sanman Capital, at least for today. Apart from that, if you look at City Union Bank, they have also received the credit rating upgrade from ICRA from AA- to AA with stable outlook. So definitely, let's watch out for this stock as well.
Okay, Gaurav, thanks very much. And indeed, let's see if that explanation from Sanman Capital can put some sort of a floor on the stock, because that's really important. They're saying that they continue to get the necessary approvals along with IHC for that deal, which is what the market was getting very, very nervous about yesterday. So we'll watch out for the stock for sure. Thank you for that, Gaurav. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow are Adani Enterprises, Vedanta, Ambuja Cements, NBCC, Mahindra Holidays, Godrej Properties, Sammaan Capital and City Union Bank. Those with negative news flow would be Meri Assist Healthcare and Sula Vineyards. Okay, so that is the equity list for this morning. Let's head across to Manisha for the latest in the commodity world. Manisha, good morning.
Morning, Sylvia, and thank you for that. I'll start with the dollar index because that really seems to be setting the narrative right now at 100 plus kind of levels. The dollar index is very close to its 6-month highs. Couple of factors here. One, the FOMC meeting minutes do suggest that it was a divided house when it comes to a rate cut for the month of December. And the second thing really is about the U.S. non-farm payroll data that comes in today. So ahead of that, we've seen some strength come in for dollar. The other all currencies seem to be languishing, especially Japanese yen ahead of that stimulus measure that the street is anticipating there. There is pressure or profit taking that we've seen in precious metals right now. Silver has seen a decline, so has gold. But the important thing with precious metals is with every decline, there is some central bank buying coming in. So $50 for silver and $4,000 an ounce for gold seems to be forming like a psychological support. Profit taking is what we have seen continuing in base metals as well. So yet another day when copper has seen a decline. There also is a decline in the crude oil prices right now as we see increase in U.S. inventories and U.S. president pushing in a peace plan yet again with Ukraine are some of the factors that have led to profit taking in crude.
All right. Manisha, thank you very much for that. Commodities in focus there. What we're going to do is go across to Sud now, who is standing by with the top brokerage calls of the day. Sud, what's on the list?
So I'll start with Banks Financial. Jefferies has written on the company and it says that it has a buy call and target is 2020 per share and believes that IRDAI has withdrawn its appeal in Supreme Court against merger of Shriram General Insurance with its non-insurance holding company, and that might be positive for Max Financial, which is considering the merger of company with Axis Max Life Insurance. Why? And if this goes through, Axis Max Life will get listed and also it will reduce the holdco discount. And as far as the growth is concerned, Max Finance has been growing well, and also on the valuation front, Jefferies finds it attractive. Now, HSBC has returned on metals and mining. It has initiated coverage with a broadly constructive stance. First one is Hindalco, where it initiated coverage with a buy call and target is 980. Initiated coverage on Nalco with a buy call and target is 291. For Hindalco, it believes that impact of setbacks suffered by Novelis may start fading from FY27. Also, it has initiated coverage on Tata Steel with a buy call and target is 215. For this also, it believes that losses in Europe should start fading very soon. It has a hold call on Hindustan Zinc and target here is 470. It likes silver, but on valuation front, it finds it rich or expensive. It has initiated coverage on Coal India with hold call and target is 374 and initiated initiated with a reduced call on sale and NMDC, and target here for sale is 140 and for NMDC target is 59. It says that both companies are disappointing on the profitability front. Last one is Hero MotoCorp. Yesterday we have seen that JP Morgan had initiated coverage with a buy call. Basically it had upgraded the stock, and now today Macquarie has upgraded the stock to outperform. Target here is 6,793 per share. It says domestic market share for the company has stabilized over the last few months. It sees upside risk in both motorcycles and scooters led by recent GST cut, also because of the festive season boost, and Street is willing to assign a higher multiple for Hero MotoCorp. Some of the catalyst market share gains in ICE two-wheelers and also the ramp up for electric two-wheelers that company has been taken, and also on the margin front, it has been performing very well consistently for the last few quarters.
Okay, all right. Thanks very much. We'll keep all these stocks on the radar as well. So I need to take a quick break right now. Coming up on the other side, we'll be connecting with Dipan Mehta, Director of Lexer Equities, for some fundamental stock ideas. Also, we'll have the management of Dodla Dairy to talk about their business performance in Q2 and the outlook for the rest of the year. Welcome back. So we have, as promised, Dipan Mehta now joining in with some thoughts. Dipan, great to be with you and good to have you on the show. So let's start. Where do we start? We have to start with Sammaan Capital, right? I'm sure you saw all the drama play out yesterday on the stock. Now, the company has clarified. They're saying, A, whatever the court ruled yesterday, whatever that order was, it did not say anything negative against the listed entity, Saman Capital. Whatever their issues are with the erstwhile promoter, Samir Gehlot. And B, they're saying that we're still trying to get the deal done with IHC. We are continuing to sort of apply for all the regulatory approvals. Do you think this is going to repair the damage?
Yes, Shilpi, thank you for having me on your show and good morning. See, I think that certainly there is no connection directly, but Samman Capital has been a big value destroyer over the past several years or so. And some or the other controversy keeps cropping up over there. Of course, the ownership changes on the way, and that should improve their sentiment. But on the whole, I think its performance also has been quite disappointing. But only thing in favor of Samman Capital is that it's really attractively priced. It is very, very cheap. And it's operating in an industry where there is good growth dynamics, considering that real estate is picking up and therefore housing loans also should do well per se. But let's see, I think if you're a deep value player or a contrarian investor and a high risk taker, then certainly you could look at Samman Capital, because I think once things kind of settle down over there and the company starts to report steady earnings, the stock price can easily, grow by 30-40% because of better P multiples.
Okay, all right. Hi, Dipan. Good to see you, Ben. What about Adani Enterprises getting the asset of JAL, Jaiprakash Associates? It appears, as per what reports suggest, is they managed to pip Vedanta because of the terms of the payment. Not the quantum, but the terms, a higher upfront payment. That said, if this deal goes through, then what's your view? Ambuja Cements could be a potential beneficiary because they have low exposure, to central India. And Vedanta could actually be the lucky loser. Your take?
Yeah, good morning and thank you for having me on your show. I think, yes, there was some kind of concern amongst investors about Vedanta acquiring Jaiprakash, especially going into another kind of a business, which in a way is unrelated. So from that point of view, there is a sense of relief, but does show that the management is keeping on looking outside its core area of operation, which is not very positive. If they missed out on JP Associate, they'll buy something else. I don't know. That's certainly a risk factor when it comes to Vedanta Group. Especially coming back to Adani Enterprise, I think the stock is pretty much well priced. Look, it's a conglomerate. Many businesses operating under a single roof, difficult to track and analyze. But what I like best about the company is that once the businesses reach maturity, they tend to spin it off and actually split the company and give free shares to the shareholders. And that's a great value creating exercise from a minority shareholder point of view. So I would say that if I'm an investor in Adani Enterprises, remain invested. But from a fresh investment perspective, I think there are better choices elsewhere.
Okay. All right. Dipan, stay on. We'll have more questions for you in just a second. We have our first management joining in, first corporate that we are talking to this morning, and it is Dodla Dairy. We have Mr. Sunil Reddy of Dodla joining in, Managing Director of the company. Mr. Reddy, thanks so much for being with us. So let me quickly first run the numbers so our viewers have the right context. Let's put up the Q2 performance of the company. Revenue is up about 2%. You've got gross margin expansion, which has been looking good. So margin has moved from about 25.5% to northwards of 27%. And that's been the big sort of North Star. Overall EBITDA margin performance, is at around the 9.1% handle. And the PAT has grown. Milk procurement volumes were up 13% year on year. So Mr. Reddy, let's break this down. How are you seeing volumes play out? And what is the outlook both on pricing and your own margins? This gross margin expansion that we saw in Q2, is it sustainable or was it a one-off?
First of all, thank you for having me on your show. Coming to the thing of the revenue growth, it should have been higher, but we did have a bad first quarter, which was due to the lack of summer and early monsoons, which in turn made our sales in dahi, lassi and other value-added products come down. And therefore, we didn't have a significant growth in sales in the first quarter, which of course carried forward for the whole of the half year. Regarding the gross margin expansion, we were able to manage to get it done because of all the three lines of between our international operation, domestic and our cattle feed operation. Going forward, we will see margins to be more stable at the levels which are already there, because this particular flush season, as we call in the dairy industry, where we get a lot more milk has to come in the procurement, has not yet happened. It's also, again, I guess, due to the weather, unseasoned monsoons and or excess monsoons in the areas where we operate. So overall, we think we will maintain the growth in revenue, but we'll have margins will be around the same percentage that we have now.
So let me just clarify. When you say you'll maintain the same run rate on revenue, I mean, revenue has been low single digits. So full year, you're expecting the revenue to be flat?
Full year, we will expect the revenue to go into maybe the higher single double digits. Around the 10% mark is what we expect to be there, instead of the 10 to 12% is where we land. And that is also subject to February and March, which we normally are good. Again, the summer's coming in, but mostly we should be able to cross the 10% in revenue.
10% revenue, and you said margins will be stable. So I'm just reiterating what zone, what level, because gross margin is at around 27.5% right now. Your EBITDA margin is at around 9%. So if you could just give us some idea, some ballpark range, that will help.
So the ballpark range should be in the same 8 to 9% margins that will come in as the regular margins, and 10% growth in terms of our revenue should be where we will be.
Got it. Hi, Mr. Dodla. Good morning. Good to see you in as always. A quick question then with regard to the growth that you're talking about, 10%. That's the organic growth. And Osam Foods will be on top of that, which you were guiding for around 150 crores, or all inclusive it will be 10%?
Mostly it will be without Osam 10%, and Osam will add a little more to it because our revenues this year will be crossing the 4,000 crore mark. So Osam will not make a significant change in terms of the revenue that we are doing, because it's only going to be consolidating for the 8 months of the operation of the current year.
So ballpark around 100 crores from Osam?
Yes, 100 crores from Osam.
All right. Give us two more numbers then. VAP as a percentage of the mix, that's come down in the first half of the year to around 33%. I think that if I compare it on a like-to-like basis, first half of last year was around 37%. Where do you see this number stabilizing at? And I think in terms of market share, your ballpark 6 to 6.5%. How do you see this number as well panning out? If you could give us the way ahead on both these two numbers.
Regarding the VAP number coming down, it was predominantly because we had a large quantity of bulk sales that we did last year, which was our powder and butter that we sold, because we had an inventory buildup which we had sold. That is the reason you see the 37%. And the drop is this year we didn't have enough of inventory to sell. But overall, I think as VAP as such has continued to grow in that 1.5% as a like-to-like of VAP minus the bulk sales. Regarding the market share, we continue to maintain our market shares of 6.5% overall, which is mostly our numbers that the way we look at it. They've not grown significantly, but we're holding on to our market share.
What about Orga Feed, the animal feed division? I think the first half of the year you have done around 83 crores with EBITDA of around 12-13 crores. How does this number shape up by the end of the year?
At the end of the year, this will be better than last year. We will be growing 25 to 30% compared to last year is what our Orga Feed will grow, and the margins will continue to remain the same. And we have almost reaching 60% of our capacity utilization, although it's been a year and a half since we created new capacity, and we're very confident that we'll continue to do well.
So 170 crores or odd would be the revenue for this year?
Yes, sir.
Okay. What about Maharashtra, sir? Your expansion plans here, you've acquired land. So what are the timelines? And also just give us, your reading of the lay of the land in terms of whether this state, which is where we are, I mean, whether the margins will be comparable to your current business. Is it very competitive? Not. But what's your reading of Maharashtra and your own timelines in terms of the launch here?
The launch here, we were looking at it at anywhere to come into production in terms of 27, let's say 27 March is where we can look at it coming into commercial production. Regarding Maharashtra as a state, although we are looking at Maharashtra more from a production point of view, that is for our procurement, which will cater to our own requirements that we have as we keep growing. Maharashtra is a highly milk available state. There will be competition coming in there. Right now, it's not only the southern companies that have entered into Maharashtra. We will also see a few of the companies from the north entering Maharashtra. But we are confident that the farmers there will continue to increase their productivity and the milk availability will still be strong in Maharashtra.
Okay. So 27 March is when you're launching in the state, right? You gave us a specific date.
Around 27 March is, yes, when we'll come into production in what it is. So Maharashtra for us, although it is basically not more from a sale point of view, it's more from a procurement point of view.
So March 2027, right?
Yes, 2027.
March 2027, just to
I thought March 26, yeah.
I just wanted to help out Surbi there because she was expecting, March 27, 2026. But that's March 2027. We got that on board. Earlier this morning, Mr. Dodla, I was thinking about Kenya. I had a beautiful trip last year out there. But that discussion for another time. I noticed that Kenya and Uganda, they contribute close to 11% of your mix. How do you see this number scaling out and how is business looking out there?
business there is looking quite good. In fact, our volumes have grown significantly from what we were trying to fight for the market share in Kenya, and hope you had a product of ours when we were in Kenya.
No, I missed it.
The margins will also maintain the same profile. Kenya will have a little lower margin, but in terms of percentages, but the volumes in Kenya are larger. And it being 18 years for us, we rather grab market share. So overall margin profile compared to the last year will be the same or a little bit higher, but volumes will be significantly larger.
We'll look out for your product next time, sir.
Okay.
We'll look out for your product next time in Kenya whenever I plan, because I saw a lot of, Indian products there, whether it was autos, whether it was a tractor, we'll look out for your product as well. But thanks a lot for joining in, giving us a fair analysis about the business. You've revised your guidance a little bit in comparison to what you spoke the last time around. 10% growth is what you're guiding for now in terms of organic growth, and 8 to 9% margins. Thanks a lot for joining in. Have a good quarter. We catch up soon.
Thank you, sir.
Well, time to slip into a short break. On the other side, we'll connect with Sudarshan Sukhani and Mitesh Thakkar. They'll be joining in to give us their technical trades. Stay tuned. Welcome back. You're tuned in to Bazaar Morning Call. Well, it's that part of the show when Hormuz joins us to tell us about all those big movers in trade yesterday, and some of them that were backed with delivery-based buying. Hormuz, morning.
Morning, Nigel. And new listings continue to garner attention. And one such name yesterday was Tenneco Clean Air. Made a very clean debut as well. As a 27% surge from its issue price. Ended well over 20% higher as well. And it was among the top contributors to the NSE turnover in yesterday's trading session. Shares worth well over 5,000 crores that were traded on its listing day. And over 10 crore shares were traded, out of which around 4.5 crore shares were marked for delivery. Now, Venus Remedies was one of such movers. It's gained in 8 out of the last 9 trading sessions now, and in this 9-day period, the stock has risen almost 50%. And yesterday's session saw around 8 lakh shares traded. The 20-day average here is less than 90,000 shares. So gains on very strong volumes, and out of those 8 lakh shares, close to 3 lakh shares were marked for delivery. Here too, the 20-day average is just around 33,500 shares, and the stock has more than doubled already in 2025. IT stocks were in the outperformers yesterday. LTTS led that charge with a gain of around 8 to 9%. There was close to 12 lakh shares were traded. The 20-day average here is less than 70,000 shares. HCL Tech also saw volumes that were 3x its 20-day average. Coforge saw volumes higher than its 20-day average. And even on the delivery front, almost 2.5 lakh shares of LTTS marked for delivery. The 20-day average is only 41,000. And for HCL Tech and for Coforge as well, the delivery volumes higher than their 20-day average. Of course, IT stocks will continue to remain in the spotlight today as well after NVIDIA's results. And lastly, Avanti Feeds and all of these potential US trade beneficiaries are continuing to move higher on anticipation of that deal. The 5th straight day of gains yesterday for the stock has gained in 6 out of the last 7 sessions now. The volumes yesterday were the highest in 2 months. More than 1 crore shares were traded, almost 1.5 crore. The 20-day average is 4.9 lakh shares, but even out of those 1.5 crore, only 16 lakh shares were marked for delivery. The 20-day average here is only 1.5 lakh.
All right, Hormuz, but the first mail that we got from you earlier this morning was on NVIDIA, and I think most social media posts, whether it was mine or anyone, it was on NVIDIA. Good numbers, good outlook. CEO sounding extremely confident as well, but tell us, how big is NVIDIA?
Oh, great numbers indeed, and we'll tell you greater about how big NVIDIA is over the course of the day. But the entire concern regarding the AI bubble was put to rest by these numbers. The revenues were better than expectations, EPS was better, the guidance was better, and Jensen Huang, the CEO, answered one very key aspect, whether AI is in a bubble, and he mentioned very categorically that from their vantage point, they see things very differently, and that was enough to soothe the market, and that shows in the Nasdaq futures now almost up 450 points. And you tell you how big NVIDIA is. NVIDIA in the first 9 months of this financial year of FY26 have reported a net profit of $77 billion. That's a net profit figure. That figure is more than the combined sales figures of both Intel and AMD put together. If you put those together for the first 9 months, that comes up to around $60 billion, and that figure is still lower than NVIDIA's net profit for the first 9 months. So that is the kind of extent to which NVIDIA has moved its stock from its current lows that it made this year from the tariff tantrums has more than doubled. It's up over 5% in after-hours trading as well, and as a result of which the Wall Street futures are rebounding after the recent sell-off.
Hormuz, one more statistic to that question. Interesting phrasing. How big is NVIDIA? And there are so many ways to do it, right? NVIDIA's market cap is 25,000 times the market cap of the median Russell 2000 stock, right? 25,000 times. So yeah, it's interesting. The other bigger question, thanks very much, Hormuz, for that, is whether this will put to rest nerves. Nasdaq is pulled back 7% from the highs, and will this NVIDIA, which is the poster boy, put to rest the debate whether this, this trade has more to run or not? That question is tougher to answer. We'll only find out in the next couple of days. Markets are smarter than one company. It's collective wisdom. But I don't know. Deepan, do you have any thoughts here?
Well, I've also been reading NVIDIA since morning. And all I can say, the first thought which came to mind is that if NVIDIA was listed in India, its market cap would be 2.5 times its present market.
That's a nice one.
Trading at a 41p multiple. And in India, we would have given 100p multiple easily. So I think it just kind of reflects that how expensive our markets are compared to NVIDIA. I mean, the company grows 50%. and is available at 41 times, I think. And there are some people calling it a bubble. I don't understand. I mean, it just shows that maybe, we are extremely overvalued beyond bubble territory, or that these companies are really undervalued compared to our universe. So, but nonetheless, I think I wish there was some way Indians could buy such companies and take advantage of a relatively lower P multiple. The Max 7 trades at a P multiple far, far lower than most of our high-performing technology companies like, say, a Persistent or Tata Elxsi or even a KPIT, and much, much cheaper than some of our consumer-oriented businesses, which are anyway 70, 80 times trailing 12 months or so.
Yeah, I think that's well put, Deepan. So the other one I wanted to ask you is IT services. The IT services index was up 3% yesterday. Just a factor of under ownership, etc. Because I mean, it's still a very live debate whether this is, what will AI mean, and whether it'll increase productivity, but then, how much is it going to take a bite out of these companies and their revenue pies? Will it add to it? What are your thoughts?
No, see, Prashant, I've been tracking IT companies for last 35 years or so. And this is the first technology trend in last 35 years plus, which has completely been missed by the Indian software services companies. You go back to Y2K, internet, application development, remote management, all of these trends came and they matured, and Indian IT companies really rode that wave. But this AI, very, very perplexing that why it's not driving revenues. I think industry experts understand it better. And I think some of the investors also understand it better, which is why the P multiples of large cap IT companies are at all-time multi-year lows. So I want to avoid the sector. But look, there could be a trading rally at any point of time. It is cheap. The base effect will come into play. Order book position is decent. If execution starts for these companies, they could have a situation where for a few quarters, they start to report double-digit growth rate. But on the whole, I think it's not great from a long-term investor's perspective, and I would remain underweighted. But from a trading perspective, I think it may be poised for a 15-20% above a rally. That's certainly possible at any point of time.
Got it. All right. Deepan, always appreciate your thoughts. Thanks a lot for joining in, giving us some ideas on how you view it. And what stood out today was the NVIDIA bit. Well put. I like that. Interesting one. Thanks a lot. Well, time to slip in a short break. On the other side, we'll get the pre-open rate. We'll also have Shweta of Elara Capital. She'll be joining in to help us out with the NBFC demands, and also what's her view on Saman Capital. Stay with us.
Okay, welcome back. There's about a minute to go for the pre-open session to kick off. 15 minutes plus 15 minutes plus to go for the market open. Sudarshan Sukhani is with us, and so is Mitesh Thakkar. Gentlemen, good morning. Great to have both of you with us here. Appreciate it. Mitesh, you go first. How are things set up? Another up day. This time it was IT which fired in a big way. It's something or the other, right, every day. And the Nifty is kind of getting closer to that 26,100. What's your sense?
Morning, Prashant. So I think today, we'll be most likely open around the 26,100 mark. And I think immediately after the opening, we'll figure out whether there's strength to continue beyond that and test the all-time highs. Or do we see, again, some kind of profit booking at 26,100? My sense is that there could be a chance of continuation on the upside post the gap. As you rightly said, the Bank Nifty is outperforming. IT, which was the entirely underperforming path, has started getting into upside traction again. So good chance of things happening over there as well. And Reliance remains, positive on the near to medium term chart. So in that sense, I think good chance that we might actually now be heading towards the all-time highs.
Okay. All right. Got that. Mitesh, you want to go ahead and give us a couple of your trading calls as well?
Yeah. So I have a mix of buys and sell calls. On the buying side is the IT name and a banking name. Before just something which made a flash swing breakout. So buy here with a stop at 1832. Look for targets of 1905. And ICICI Bank also had, a positive candlestick pattern across overs on indicators. So buy with a stop at 1369 for targets of 1410. And on the negative side, a breakdown on the charts of JSW Energy. So keep a stop at 526, look for targets of 485. And AP Apollo, very similar kind of a breakdown pattern. Sell with a stop at 1745 for targets of 1670.
All right, let's bring in Sudarshan as well. Sudarshan, morning to you too. The pre-open rates have started coming in right now a little all over the place. Sensex is down, Nifty is up. So I think we'll just let it settle down. But Sudarshan, what would the approach be for you now that the index is at 26,000?
Yeah, good morning. See, from Monday onwards, I have been saying we should be long. The trend is in the mild uptrend persists, and we are also seasonally entering into an area where the markets usually end up higher towards the end of the year. That view continues. Now, the world markets are also conducive. That's an extra sort of icing on the cake. But even otherwise, we would have done well. So stay long. If you don't have a long position, buy. Move your stops to 25,800. Expect volatility in between. That's nothing to be worried about, and we can't avoid it. But be on the long side of the market.
Okay. So stay long. That's the advice. Let's also talk about stocks. What are you working with today?
Well, Indian Hotels is a buy with a stop under 705. Granules is a buying opportunity, stop under 545. And after a long time, Hind Unilever has come in my list. Maybe something is going on in FMCG, maybe. With a stop under 23.95, it's a buy. And finally, 361 is a buy with a stop under 1100. It's an all buy list. And I would recommend stay on the long side for stocks also.
Okay. All right. Sudarshan and Mitesh, thank you very much for the trading ideas. We'll come back to you once the pre-open session settles and then get some final trading cues from you. For the time being, let's shift the focus to the BFSI space. Yesterday, the representatives from the BFSI body, FIDC, they met Finance Minister as part of the pre-budget consultations, and they had a bunch of demands. One of the main demands was to seek a refinance window, something similar to what the National Housing Board has, and so on and so forth, and some higher thresholds as well when they're looking at the SARFAESI Act. Shweta Daptardar is with us, who tracks this space quite closely. Shweta, I don't know if you caught some of these demands. We also had the FIDC CEO with us explaining why they want to push for these changes, with the centre. Your first thoughts on this and how you're looking at the NBFC space overall?
Good morning, Surabhi. So yes, these FIDC demands, in fact, especially pertaining to having a refinancing window for NBFCs, has been a long-drawn demand. Like I'm hearing this for over 3 years now, and rightly so, because larger part of NBFC business model success is largely contingent upon liability structures. And if you look at the recent periods where a year ago RBI or the regulator had turned pretty stringent, so there were constraints on growth. Thankfully, things are turning around for better. Going forward, we believe, especially post Q2 FY26 earnings, NBFCs are standing at a vantage point. Things are only looking up going forward, especially in the second half of the fiscal.
Okay, all right. Hi, Shweta. Good to see you win. Looks like you're set for the winters, huh? All right. So that's about that. But the big question is going to be on Sammaan Capital. What's your view? Valuations, there is support. The question is whether or not that deal is going through. What's your view?
Yeah, look, Nigel, market doesn't like uncertainties, and for good or bad reasons, whatever, Sammaan Capital has been in news for a fairly long period. More so I would definitely refrain from giving a sort of a value view on the stock per se. But if you look at the whole HFC space, especially for NBFCs, it has been a slightly tough going because banks have been proactive in terms of interest rates. Also, if another 25 bips rate cut is in offering in the forthcoming RBI policy, then there is no way that NBFCs or HFCs can deal with this kind of competitive rates. So I believe slightly not very bullish on HFCs. Even for AHFCs, affordable housing finance players, the going was slightly tough in the quarter gone by, where we saw some stress in the micro lab segment.
So a little cautious on housing finance and even the micro housing or the affordable housing finance companies. Got that. So what do you like, Shweta? Tell us that. I mean, gold financiers, they've done so well this year. Then there are the wider, bigger retail plays. Bajaj Finance, what a move on the stock this year, right? So for 2026, what's the best or couple of the best NBFC stocks to own?
Yeah, so Q2 FY26 earnings through three important trends. One is we clearly saw asset quality challenges bottoming out for NBFCs. So barring CV, micro lab, two-wheeler loans, and a little bit of AHFC stress, most of the segments have started easing. Personal loans and credit cards have started easing. There is some amount of stress in unsecured business loans, but second half, as the activity picks up and GST simplifications continues to fuel demand, and post festive season demand is looked to sustain, then second half is definitely better. Against this backdrop, we definitely see diversified NBFCs, say likes of Bajaj Finance, L&T Finance, even Shriram Finance, wherein 60% of the AM mix today is largely coming from non-youth CV portfolio. So these names definitely stand to benefit. Gold financiers have definitely seen a very strong bull run, but considering the fact that gold prices will continue to stay higher, I mean, that's what we are hearing from the industry experts, gold financiers will remain in limelight. Having said that, we continue to maintain positive stance on Muthoot Finance even a year ahead because of course, the growth today is driven by gold prices, but Muthoot Finance definitely have those right fundamental ingredients in place to post 20% loan CAGR even for next 2 years. So yes, gold financiers will remain in limelight.
Okay, all right. And final question before I let you go. SBI Cards, you believe it's time to swipe it? It's been a big underperformer. I look at the ROAs, I recall they should do ballpark around 5%. That number dipped to around 3%. Various issues on credit quality on their mix as well. You believe things are now getting sorted out and should look up from here on?
Yes, Nigel, so absolutely right. After a huge, strong string of 5% ROA for 5 long years, those dip in FY25 to 3% odd. Now, where they are standing is where credit cost challenges are bottoming out. The 2020 and 2023 bad customer portfolio write-offs is largely behind. So 2 quarters down the line, wherein we see credit cost materially declining, that's exactly the point where cards in force accretion will start picking up. And that's actually the starting point of revenue driver for SBI cards. So just like most of the NBFCs, SBI card today is standing at a vantage point where we start seeing things looking up as asset quality challenges are bottoming out. So we definitely see 4.5% ROA on horizon by FY28. And we definitely see spends traction supportive. So if you see post Diwali spends traction this year vis-a-vis last year has been holding up pretty well. So asset quality challenges bottoming out, spends traction picking up, definitely bode well for SBI cards ROA trajectory to start picking up from here.
Okay, all right, Shweta. Good to have that chat and stay safe. It's getting cold. We can make it out. Thanks a lot for joining in and giving us your call. We look forward to hearing your thoughts in the time to come. But it's 9:10. Let's get Sudarshan back on the show. Sudarshan, what's your 9:10 call?
It's Indian Hotel buy with a stop under 705.
Checking in. Got it. Thanks, Sudarshan, for that. Mitesh, what about you?
I'll go with a negative call on JSW Energy. It's opening with a 2-3 point gap up, but I think, good time to take a short with a stop at 526.
Short on JSW Energy. Got that. Thanks a lot for that, Mitesh. Well, let's focus on a couple of names. And HSBC has written a note on metals and mining. They've basically initiated coverage on a lot of names, and they're broadly constructive on the sector. Let's talk about a few of them. On Hindalco, they have initiated a buy rating, target price around 980 rupees per share. They say the impact of the setback suffered by Novelis will gradually start to fade from FY27. On Nalco, they have initiated buy rating. Target price out there they have is around 291 rupees per share. And on Tata Steel, they have a target price out there at around 215 rupees per share. What are they talking about? They're saying the losses in Europe should gradually start to fade away as well. And on Hindustan Zinc, they have a target at around 470 rupees per share. Though they like silver as well as the zinc exposure that the company has, but they're saying that the valuation is rich on that front. On the PSUs, they don't appear too enthused because on Coal India, they have a hold rating. Target price at around 374 rupees per share. While on SAIL as well as NMDC, they have a reduced rating out there. On SAIL, the target price is 114 rupees. On NMDC, is around 59 rupees per share. They make this point that both companies have muted profitability and they're also increasing capex. So that's what HSBC has to say on the mines and metals space with regard to the initiating coverage notes today. Okay, all right. Let's focus on the chemical space then. Navin Fluorine, there are a lot of brokerage notes that have come in there. Sudarshan is stepping in for Sonal. Sudarshan, tell us, what are they saying?
So if you remember, in Q2, Navin Fluorine had outperformed the peers, and the very next day to the earning, the stock had moved 16 to 17% higher. Now, yesterday, Navin Fluorine had held analyst meet, and the commentary is looking largely on the positive side. Company is saying that one of the molecules in CDMO business delivered well in Q2, and for the same, it's expecting a repeat order in Q3, and debottlenecking of MPP capacity in Dahej announced post Q2 results indicates visibility on capacity utilization even of existing facilities. And global demand for R3 is of 3 lakh tons, and companies in discussions with Honeywell to increase HFO production with rupees 100 crore revenue potential. And new HF capacity expected to be commissioned by January of 2026. Brokerages largely remain positive. Jefferies has a buy call with a target of 6,635. It expects 44% EPS CAGR over FY25-28. Citi has a sell call with a target of 4,900, and Centrum has a buy call with a target of 6,000. Now coming to the auto sector, Hero MotoCorp, another positive note. Today, Macquarie has upgraded the stock to outperform, and target here is 6,793 per share. It says domestic market share for the company has stabilized over the last few quarters. It sees upside risk in both motorcycles, scooters, and that would be led by GST cut, recent festive season boost, and also company has been undertaking new launches. Catalyst are market share gains in ICE two-wheelers and EE electric two-wheelers volume ramp up that company has been undertaken. And also on the margin front, it has been performing consistently over the last few quarters. And on the back of all these, even valuation gap that company has against the peers might narrow.
Okay, all right, got that. We'll keep Hero Moto on the radar as well as, of course, Navin Fluorine. Thank you for that, Sud. Quickly looking at some interesting stocks from yesterday, the ones that got a big drubbing, they're seeing a revival and recovery. Saman Capital in the pre-open is up about 3%. And remember KEC International, that 10% slam dunk on KEC, it's also up about 2% right now. I've not pulled up Grow on the list. It'll be interesting to see if that 10% down move on Grow, whether that was just a one-day phenomena. Okay, that's pre-open. Grow down another 7% in pre-open. Seems fairly sharp. So we'll see how this plays out. Overall, Nifty managing to hold on to a gain of about 80 points as we start off. And it's just above that zone, which became a bit of a resistance. That's 26,100 thereabouts. So let's see if we get a decisive breakout above it or not. The leaders, Hindalco, Adani Ports, Bajaj Finance, Infosys. By the way, IT is still running quite well. Yesterday was a blowout IT move on a whole bunch of mid-cap IT stocks as well, not just large cap. And some of that is continuing. The IT index up 0.5%.
Absolutely. And, maybe just a couple of seconds to go for market open now. 0.5% higher on the Nifty IT index. PSU banks is the other area which you should keep an eye out on. Many of these stocks have had stealth moves. They've all done well. Keep in mind that. So if you're trading, you've got to see the recent performance and the run-ups, etc. But that's the other area. So just a second to go and we'll have the opening bell. A third higher on the Nifty. 26,100 passed on the Nifty. 59,280 on the Nifty Bank. We're about 0.1. Actually, that's really flat. The Sensex is up 0.17. The small cap index is up about 1/3%. And I think the mid-cap index will come up with some gains as well. It's a super, super strong start, especially, I think, for many of these mid-cap, small-cap movers, which we will come to in just a bit from now. But otherwise, at the index level, it's kind of quiet. 3-1 in favor of advances. The number of stocks up and down is early, but it's indicative of a decent kind of spread. The Adani stocks are all higher. Adani Enterprises, Ports, occupy the number 1, number 2 gainers list. And the bulk of the market, at least on the Nifty 50 heat map, shows we're opening in the green. HCL Tech is down and a few others, but just 6 or 7 names on the Nifty opening lower. Otherwise, it's all green. Surabhi.
Look at Grow. It was 10% yesterday. It's down 8.5% today. Now, these kind of technical issues, they do make investors nervous. Not the best of experience you want with an IPO. Touch sky-high levels and then such sharp drawdowns coming through, extreme volatility, and investors are having to stomach it for the time being. The other one is Saman Capital. We're just telling you that in the pre-open it was up about 3%. Well, it's not able to sustain. It's lost that gain and it's actually down about 0.5% right now. So two important stocks, need to see how they shape up. On the large cap screen, like Prashant is saying, Adani is still in leadership position. Big asset they're looking at, obviously, taking over Jaiprakash Associates. So 1% up on Adani. Tata Motors, passenger vehicles, finally manages to rise on the green side of the screen. About 1% up there as well. Reliance is a big support for the market today. 0.6% up on Reliance. Then you have a couple of financials doing well, which includes names like Axis Bank, Jio Finance, Shriram Finance. Even Bajaj Finance is up about 0.5%. Financials are actually, NBFCs are doing better than banks this morning. That's one trend that's very, very clear. On the downside, there's HDFC Life, there's ICICI Bank, there's Bharti Airtel. That's pretty much it. And some of the IT stocks, they're cooling off from yesterday's smart run. So HCL Tech, Infosys. Some of these stocks on the lower side of the screen, Nigel.
Well, as Saman Capital started in the green, but just take a look at that stock. Slam dunk from the high. It's down close to around 5% from the high. So for the time being, the stock actually has got sold into that little kind of bounce that we saw. Grow, that's recovered a little bit from the lows of the day, though it's still down close to around 5%. It was down 8%. Physics Wala, the other one, in fact, that is lower, and it's fallen on decent volumes, down close to around 3%. So both those two newly listed companies actually trading in the red, with a fair bit of volume in the first few minutes. Tenneco, one of the newly listed companies, came on board yesterday, trades at more than 20 times EV upon EBITDA, but they believe that there's a good penetration scope out there. As you move from BS6 higher, the cost per vehicle will in fact move up. Exports is another big potential. So that one, after the fund-based buying that we saw yesterday, it's up another 3% in today's trading session. What's losing out then? Both those two, Physics Wala as well as Grow, both of them a little bit lower. Sagility is down just around 1% or thereabouts, but volumes quite high on that particular name. I think Vedanta was seeing some green just to kickstart trade, so I think we should get that as well up for you on the screen. Vedanta, yeah, it's good news if in fact they don't go and get over adventurous, so the street is reading it on that way. And besides that, yeah, I think that's about it. Nifty holding with a gain of around 40 points, 26,100. Nifty Bank still to get off the blocks as we speak.
Just wanted to mention, by the way, that while the JP Associates resolution finally gets underway, Jayaprakash Power is the one that's running with a lot of excitement. 10% up on that stock. It's only a 22 rupees stock, but yeah, it's running and the volumes are picking up. Fairly high volumes actually at this point of the morning. We're talking, I think, almost 85 lakh shares trading. So yeah, a lot of excitement there.
A lot of excitement, and where are we at now with regards to Nifty Bank is now kind of in the slightly in the red. Maybe just put up two indices. One is the Nifty IT Services Index, and I think that'll give us a quick sense of what's happening after the 3% pop. It's up another 1/3% higher, and maybe just look at the Nifty PSU Bank Index as well, where I think you will have some change coming up. It's absolutely flat. So. It's done very well, but I mean, this is another area, at least if you look at, just the overall mood, people seem to be very, very bullish. Okay, individual names, etc., are still coming on. Maybe we look at something like a Loris Laboratories, where there's been some buzz of a block for the last couple of days. I think it was part of Nimesh's chatter list as well. It's down another 10. It's been coming off last 2 days. Another 1% odd lower at this point in time. So enough and more activity coming up at this stage. The Mahindra & Mahindra stock, right? I mean, it's the analyst day at Mahindra & Mahindra. And, it's a big one. It's a big affair with all the group and company-specific CEOs there present. We'll have something very special from that. For you, later. But I think, long-term guidance, etc., is something which markets will wait out for from the Mahindra management and, of course, individual company CEOs from the group as well. Okay, Sandeep Tandon is with us, founder and CIO, Quant Mutual Fund. Sandeep, good morning. Great to have you with us here. Thank you very much for joining us. It's been a while since we've had you on the program, so good to see you. So just update us with your view, Sandeep. Just to begin with, and then we can build on that. What's your sense, markets?
Prashant, I have been slightly more constructive than the market participants in general for last maybe for 1.5 months or so.
Yeah.
I'm saying that on a couple of reasons. See, first of all, let's talk about the important concern and why we're positive. The most important thing which we think we believe will support the market, the USD INR pair long-term depreciating cycle is peaking out. Okay, which means the probability of appreciation from the current level is very high, and at least the downside is getting capped. So that's a very important phenomenon. Second thing, we are also looking at exhaustion seen the FIS selling. The FIS selling exhaustion we have seen, and we all know December it will die down further, and January is the new year allocation. So that could be a second trigger. The third most important thing is the earnings cycle. We have been quite vocal. We have been saying that September quarter earnings should bottom out. And I believe it has bottomed out. The earnings were much better than the consensus. Don't compare YOY or quarter-on-quarter, but compare with the consensus. So it was far superior. Now you look at additional trigger like GST or income tax benefit or even the lower interest rate. And last most important point, the sentiments. The sentiment is extremely bearish. People have not made money. The frustration is clearly visible. Rotation has been stuck. So it's a psychological problem. The background is constructive that what is required for a pullback rally. And we have talked about that you will see all-time high as early in December itself. And I'm talking about not only the Nifty and the many frontline indices. So we are net constructive, and we are nearly 98% invested in the market.
Okay, Sandeep, hi. All right, so more constructive than most. That's how you're describing it. Good to know. And good to have you with us this morning as well. So tell us then, what's the thinking and what's the approach at this point in time? Because, it's not barring financials, where I think there's a broad consensus. Most people are optimistic on financials. I guess it's been a far more bottom-up market. Within the Nifty, look at the variance. You have a Maruti and Bajaj Finance on one side. You have a Tata Motors, now it's PV on the other side, or other such stocks, that have had a very, very rough year. So how are you looking at, portfolios and fresh allocation at this juncture?
So, Survi, frankly speaking, we are trying to identify the sectors or stocks which are in neglected territory. Let's take example within BFSI. Insurance looks better to me, okay, as compared to banks. They have now traded in a neglected zone for a while. Similarly, within the BFI space, the NBFC we have been positive for last few months. We felt that they are more constructive than the private sector bank. Now, Obviously, some of the large private sector bank has also corrected in last few months. So even those names looks pretty attractive from the current level. So our strength comes from the background. We try to identify the neglected territory, hated zone, where people are not keen to build. And you just look at the new age companies. Last 1 year when the opportunities was not there and new age companies were showing at least the top line growth, if not the bottom line. Okay. So the people with money got shifted there. I think that trend has reversed. Money is moving out and moving toward these neglected large cap names where the quality of management is good and earning visibility is even better.
All right. Hi, Sandeep. Good morning. Good to see you. And as always, in terms of your contra call, tech as well, you all were creeping in. Have you increased allocation over there?
On the banking side?
No, tech. Tech, ignored, underperformed, maybe under-owned as well at current reckoning, suddenly showing signs of coming back to life. Tech, are you all increasing exposure?
So we were actually have zero exposure, this exposure. Now we have 5-6% type exposure across various schemes. So we have built. So yes, if they were neglected, it fits into the thesis, and frankly speaking, earnings were better than the expected. Right? So I think they are. But if you ask me, if you're seeing any visible trigger for these names to rally sharply, it's maybe pullback rallies are very much on the card. So I think I will like to capitalize on the current rally and then maybe reassess down the line few months or maybe a quarter or so.
Sandeep, can you talk about some of the unloved, with full disclosure, any specific kind of course, not an inducement to buy anything, but just as an example, where are you seeing opportunities?
As I said, that opportunities is very clearly in some of the private sector because they have some of the large private sector name corrected sharply. Okay, they are being consolidation or correcting phase. I think they are now reaching those neglected zones sort of thing where people have slightly, and these were the names which were in the admired territory for a while. So I think those could be a trading opportunity. Insurance I talked about. I also talked about pharmaceutical as a sector, which I have been generally very bullish for a while. I think US concern has been sorted out and people still don't want to participate in that space. Again, grossly neglected zone. FIs don't own these names, only some of the domestic institutions have some of these names. So these are the areas which I think there could be opportunities. See, we at Quant, we always try to assess our downside. So we always say we are in the business of risk management. Returns are byproduct. So if you can identify, if you can cap your downside, then it works psychological better rather than chasing the momentum, rather than I will look for at this point when we are very certain that Nifty will make all-time high. I will not be surprised if it makes this month. Okay. So with that background, I will like to look for neglected and beaten down names where we have seen correction and quality or earnings is slightly better. Maybe various reasons people have not liked it or ignored it. So I will prefer to take advantage of this opportunity and build these names in our portfolio.
What about something like a Saman Capital?
We don't comment on individual stock. We don't own and we don't like it.
Okay.
Okay, but since we're talking financials, let me kind of move to another part of it. That's your business, the business you know so well and you've been running for years, Sandeep. Mutual funds, asset management and wealth. And let me also take this opportunity to get your take on the latest proposals, right? So there was that 5 basis points additional charge that was levied in lieu of exit loads when they were banned. So now SEBI saying, let's not do that. There is some talk of rejigging the TER itself. I'm not talking about the brokerage debate, and I think we've spent enough time on that. But just chip in, generally, if these rules are implemented in their current form, what does it mean for margins and business for AMCs?
So it will affect more the smaller names or the budding mutual fund who are just building up. Because see, if you really look at, if I go by all the cost structures in the mutual fund industry, it takes typically 8 to 10 years to achieve a break-even. Okay. Now, if these new rules are implemented exactly in this form, obviously we expect that break-even can extend it to 12 to 15 years. And that will be not a good news for the mutual fund, particularly for the new players. The existing large players have crossed that boundaries. Okay. So it doesn't affect them. Actually, in fact, they will be actually indirectly beneficiary if the smaller names or smaller companies get affected. See, See, the one is the not only tier part, the second most important is also the brokerage piece. I will touch base again because if you cut down to 2 bps, okay, this is the area where people actually put in effort on the intellect side. Okay, so what we have requested to the regulator is that please look into all the cost structures of other entities, okay, who are the supporting system of mutual fund. They have grown along with the mutual fund industry, but the rules are not applicable in terms of capping their income, where we are capping our revenues of the mutual fund, and we are now talking about on the brokerage side, because if the brokerage rates cut down, simply the incentive of a market in terms of research will be impacted, because ultimately sell side do a better job in terms of depth, and the breadth of the market is very important. We cannot cover 1,000, 2,000 stocks. Neither we have bandwidth, nor we have that much capital to do it. And one client-centric research is always going to be challenging. So what is very important is that we should not hold. If you make it 2 bps and someone, let's say today any smart money manager wants to move and set up his own company, nobody will service him. And 2 bps he will not get the service. And then if he has to build the entire cost structure of 10 analysts or 15 sector-specific
It's
people.
not viable.
It's not viable. Even if it's not break even, he will never able to actually break even in his life. That's the way I define it. Because it will take long time. So what is our urge to the regulator is that we are very happy. I agree, the cost structure should come down as the size has grown, the benefit should be passed.
Yeah.
But this should be applicable to the other supporting system also, okay? And that is very important because all other supporting system are largely electronic. They are still charging on AUM basis, not on the transaction basis. So on the intellect side, we are trying to cut it, but on other side, we are not. That's, I think, a lot of messages and the presentation has gone. I'm sure the regulator will look into it. So we remain optimistic on that side. And so far, yeah.
Yeah, no, absolutely. Take your point, and I think I've heard a similar argument from a lot of other AMC heads as well. That mutual fund houses do not have the capacity to set up full-blown research teams, and for the smaller guys, it will be very costly, like you explained. But the other proposals, if TER changes, are what that consultation paper has indicated. And if that 5 basis points additional charge is no longer, applied, then will that hit profitability? And if yes, by how much? I mean, from the point of view of investors who are investing in mutual fund stocks, I mean, I'm asking from their perspective, what should, what can the outcome be with the current proposed TER structures and this 5 bips?
So the way I understand that 5 bips, obviously it was a temporary phenomenon, the SEBI explained, which is it will not make any meaningful difference. The difference will come if you cut down that 15 bip structures and other thing that will affect, I said, smaller names. As far as large AMC and listed AMC space is concerned, I don't think there'll be any impact because they will pass it back. So basically, the net, the distribution, it will impact the distribution circle. So the people who are distributing, or the market intermediaries, MFD sort of people will be impacted much more the AMC because the AMC will pass.
Right.
All right.
Before we run out of time, Sandeep, you have a broader view on other asset classes, etc. as well. You track so much. The big debate has been whether, what's happening in the US is set up for more than a garden variety. NASDAQ is already about 7% off the highs. So is this just a technical shakeout which will correct itself and things will be back on track, or what's your sense and how does it affect us, if at all?
See, in fact, I will say in last many quarters, India is actually becoming a low beta market, okay? And we have a negative correlation with the global markets, not the historical, but I'm talking about last many quarters, we have seen this phenomena. So with that background, if the global market corrects, India will be beneficiary in terms of money flow, okay? But so it will always be a psychological impact. In fact, we have seen recent few days or last 1 month where US and developed market corrected, emerging market also corrected. We have not been impacted. It's just the opening is slightly weak and then we recover. See, we have to also understand India has underperformed for last many quarters. So with that background, we should be constructive. As far US is concerned, for last many months, I've been highlighting the risk is not in India. It's the global market, particularly US, where complacency was on a higher side and hence this correction you are seeing. But if you really ask me, this is a bubble, and then answer is big no. When everybody believes this is a bubble, and I don't think anybody really able to identify 2008 bubble was good. So if from that perspective, my only point, and somebody is even identified to say that this guy has identified previous one bubble, so he's the his track record is great. So I think just one cycle or two cycle you catch it and then you try to conclude because somebody has got it and somebody is making a statement. As a behavior analyst doesn't gel well very much with that thesis. And I always say when it actually peaks out, that's a time when people will not believe it. People say, oh, we heard this phenomenon in 2025 also. So let's go and participate. That's the time the real problem starts. So I think this could be a small trailer. Maybe the ugly picture is which is pending much later.
You know, Sandeep, it's the individual investors who are raising this bubble noise, etc. The mainstream, global research banks, etc. They're all very clearly saying that no, it is not.
If you ask me, they never do it. Even 2008, none of the bankers.
That is why I'm asking the question. If they were all saying yes, it is, then that is the question. Because actually the consensus is not that it is a bubble. Consensus is not a bubble, and hence the question. But I take your point that you can't bet on not one-hit wonders, but just because someone got a call right, you can't kind of sort of say that well they'll get everything right. We have enough of those experiences.
If you say small hype, answer is yes. Okay. But if you say it's a real bubble, because it is backed by earnings, it's backed by numbers. It's not like the P just expanded. Like in fact, I will say if there is a bubble as compared to US, Indian new age companies have much far bigger bubble. If I go by this definition, then Indian companies have far bigger bubble than the US because US companies still show numbers. Okay, so valuation-wise, they're still attractive as compared to Indian new age companies. So bubble is actually here, not in the US.
Any of the newly listed companies did you all get in? Any of the newly?
No, we very rarely subscribe these names because it doesn't fit into our thesis of. See, Nigel, if you recollect, we have been taught, we used to give 2-3 times sales multiple only to the branded companies, and that's the way we learned. From market cap to sales perspective, or if not market cap to sales perspective, it's largely few brands used to get 3 times, 4 times, 7 times only in the pharmaceutical space as a FMCG. Now none of the companies make money and we want to give multiple of 10 times sales, 20 times sales, okay? Because earnings will not be visible. So we have been taught about cash flow, but nobody looks into it. So that's the way the phase comes. Majority of the even smart people get carried away. That is the phase which we are going through. You have to live with that.
Because, Sandeep started by saying that he's looking at the unloved parts of the market and these new listings are getting a lot of love. They're getting 10 times sales love, 11 times sales love. So too much love is happening over there. But take your caution on board. Sandeep, great conversation as always. Thank you so much for joining in. And you have a good rest of the day as well. Okay, quick check on the market before we move on. And the green is sustaining on the screen, 26,100 precisely, exactly on the Nifty. For the time being, the Bank Nifty is a little sluggish. It's absolutely flat with a slight red bias. The Nifty is okay for the time being. Okay, a couple of interesting stocks to take note of. NBCC, which announced a big order win. There's some news on Cummins as well. Vinny's here with more. Vinny.
Hi, good morning. So first I'll start with Cummins. There's a brokerage note that's come in from Citi. They've given a target price of 4,875 buy rating. Now, they mainly met with the management of Cummins. So key highlights that came in over there. They said Cummins India, they're expecting steady demand, especially for the power generator side, as well as from real estate, construction, as well as infrastructure side of the sector. They're seeing good demand there. In terms of data center demand, they said providers are seeing steady demand there with lumpy hyperscale demand. So that is one thing that one will watch out for. Industrial segments, weakness in Q2 is what we saw, and that we had spoken about it, and that is transitory. That will start seeing an improvement going forward. They see potential in the railway, defense, as well as marine side in terms of improvement for the infrastructure, industrial side of the segment. And that is why they're maintaining the buy rating. Target price is at 4,875. Now, the other one is NBCC, good big order win coming in for the company, 2,966 crores. This order is from Nagpur Metropolitan Region of Development Authority. This is for a project management consultancy order. And obviously, this is a very big order win for the company. So it turns out to be positive because the order book continues to be healthy, as well as future revenue visibility improves. And that is why NBCC also is seeing a positive move.
Okay, all right. Got that, Vinny. Thanks very much. Let's now shift gears and actually move to the auto space. Growth seems to be holding up well post the festive season. At least that's what the latest Vahan data is indicating. Let's try and understand this better. We have with us Saharsh Damani, CEO of FADA, and also Shailendra Luthra, Director of Bright Group. Gentlemen, thank you so much for being with us. So we were just looking at the trends, right? And Vahan put out the latest data. This is 1 week after the festive season versus 1 week after the festive season last year. So calendar, the dates don't match, but it is like to like in that sense. And it seems, if I go with those numbers, that on the passenger vehicle side, the growth is 14%, and the two-wheeler side, the growth is 29%. So that's the real question, gentlemen. This burst of festive GST cuts, all of that excitement, was that just a festive season phenomena? Or do you think demand is going to stay strong for the next couple of months ahead as well? Ms. Luthra?
Well, the market sentiment is quite positive. And at the dealer side, the dealers are seeing a surge in the demand. The customers are lining up. There's a good order book which is in hand. And as far as you quoted Vahan data, there is an upsurge in Vahan data also. These are the registrations post the festive seasons. So from my perspective, from the outlook that I see, I don't see the demand going down. There's a robust demand, and which will continue, and it will be sustained demand with the new affordability and thanks to the GST cuts.
Okay, let's actually bring in Mr. Damani and get the FADA view in as well. What are you hearing from dealerships, from the entire network? Is it as strong as what we saw around Diwali? Because the big fear in the market is that this will taper off. You know, it may not extend into the remainder of this year and next fiscal year.
Yeah, so good morning and thank you for having me on your show. But before diving into your question, I just wanted to acknowledge an important milestone, and it has now been 7 years since FADA began publishing the Vahan-based retail data. What started with a fair bit of skepticism has today become the industry's most trusted lens to assess real demand. Coming to your question, I think what we are hearing from all across the country right now is demand is robust. And it is not only a festival phenomenon, but this month, the month of November, you're seeing a lot of marriage days coming in. So that's keeping the demand healthy. Going forward in the month of December also, since it is the year end and the calendar year change, we will witness great schemes coming in from all the OEMs across the board. And that will again, once again, pull market in the green. So till December, demand is good. What we need to understand is there are customers available at the right price point. So we need to see that beginning the new calendar year, OEMs continue to attract the customers with excellent schemes, the way the schemes are running right now in the market. If those continue, demand will continue to remain robust till FY end.
So Saharsh, I know it's a bit of a tough question, but some sense, say if we talk about October, November, December, you know, this last quarter of the current calendar year, what is the growth that you would expect? And I'm talking about, you know, end level retail growth, those registration numbers, which that 1 week that was reported is looking very, very strong. But as we normalize O&D, how much growth for two-wheelers and how much growth for four-wheelers would you expect?
So if I give you an historic data, from April to October, we have seen two-wheelers growing at the rate of 12.5%, and passenger vehicles again growing at upwards of 5.5%. At the beginning of financial year, we had estimated that the passenger vehicle growth will be in low single digit. But because of the GST 2.0, which has come into picture and come into play, the run rate has gone up. And for this October, November, December quarter, I think the run rate will be above the average of 4.5%, what we had seen until September this month. So that's what we are looking at in the passenger vehicle segment. In the two-wheeler space, the growth should be in high single digit. That is what we are expecting.
Okay, but that's not saying much, right? Saharsh, you're saying that it should be above the 4% run rate. That it has to be, that we know with the demand thrust. Okay, let me ask you a broader question. You started the year saying on the passenger vehicle side, growth should be around, 4%, right? Yeah. Now what are you expecting? Double-digit growth for passenger vehicles this year, fiscal year?
No, we don't expect double-digit growth, but we definitely expect growth to be above 5.5% mark, maybe somewhere around the 6% mark. So that is what we are expecting. And this growth has been upwards because at the beginning of FY, we had estimated around 2 to 3% growth. So if 5.5 to 6% growth comes, this will be double of what we had expected. So I think this will be a good number to close the year with.
And what about passenger vehicles? That's helpful. So what you're saying, from an expectation of 4% growth in passenger vehicles, you're now hoping the year will end with at least 6.5% growth. Similarly, for passenger vehicles, if you could give can you give us some sense?
So this was for passenger vehicles.
For two-wheelers, I beg your pardon. Two-wheelers, yeah.
Yeah. So for two-wheelers, we expect that 9 to 10% growth should be easily achievable by the end of FY.
Okay, all right. Hi, gentlemen. Good morning. Good to see you all in. Mr. Luthra, you know, there's a bit of a split verdict with regard to the tweak in the emission norms based on the weight of a vehicle. What is your view on that?
Well, on the emission norms, the government is changing certain policies and certain decisions, but the manufacturers would be supporting that. The OEMs would be supporting that and ensuring that the customer sentiment doesn't get hampered with it. And on the society perspective point of view, we should be having some more stricter norms considering the environment we live in. But let me also tell this to you, India is a torchbearer as far as emission norms are concerned. We are way ahead many other countries of the developed world. And I'm sure both the consumers and the OEMs would be lapping it up easily. We have geared up to come to that level.
But this not change actually, it's this hike in the price of re-registering your vehicle, basically getting that fitness certificate again. That increase, you know, do you expect it to spur demand a little more? And is that only at the entry-level segments? I'm guessing in the premium segments, these things don't really matter anyway. But Mr. Luthra, would you expect this to add to it?
You are talking about the re-registration of the vehicle after the end of life.
Yes, yes. Those charges are going up, right?
Yes, that is going up. But after the end of life, there would be not a big percentage of people who would be going in for re-registration, because the overall aspiration and the demand to change is very high. And it is also possible that in the coming future, this is my appeal from your medium to the government, we might see some good incentives for scrapping of the cars and buying new cars for the recycling. So overall, I don't think it will have a significant impact that many people would be going in for re-registration. But yes, it would act as a deterrent for sure.
Just, gentlemen, one quick question. We haven't discussed EVs. Now, in this new era of lower GST, the whole ICE versus EV debate, Saharsh, if you could come in on this as well, because it seems the growth in EV sales is not as high as what the OEMs would have liked. What are you seeing on ground? What is the and what are the estimates between ICE and EV looking at the next couple of months?
Yeah, so just to give you a perspective, two-wheelers right now in the EV space, they have around 8 to 9% market share. And in the passenger vehicle market share, the EV contribution is around 5%. Barring the month of October, we have been seeing slow growth coming in both these categories. And the growth is largely coming because more established players are now coming into the market in the two-wheeler space, especially with the likes of Hero, Bajaj, and TVS. Also in the car segment, if you see, more and more products are getting lined up in the EV space and also in the alternative fuel space. So as customers get more choices, I'm sure these numbers will go up. But if I were to talk about, say, next six months to 9 months period, two-wheeler should see EV penetration of at least 15%, and electric vehicles in the passenger vehicle segment should see again 8 to 9% growth.
Okay, all right. So perhaps the EV penetration will pick up in the months ahead. Thank you very much, gentlemen, for joining in and giving us some perspective on how the auto sector is shaping up after a bumper festive season. So trends looking good. And FADA saying that for the passenger vehicle space for the year as a whole, they now think that growth should be in the vicinity of 6 to 6.5%. Let's take a quick break on that note. We'll come back on the other side and we'll get chatting with Neha Agarwal of JM Financial Institutional Securities.
Welcome back. This is Corporate Radar, and the markets continue to hold in the green as we speak, marginally 30-40 points or thereabouts. But as promised, we have Neha Agarwal, the MD and Head of Equity Capital Markets, JM Financial Institutional Securities, who joins us on the show. Hi, Neha. Good morning. Good to see you again. Well, let's address the point with regard to the fundraisers that we've seen this year. It's been very, very strong. My query to you is, do you expect this sort of a momentum to continue? If you could, break it up in terms of a number as well. And also the worry is, India is turning out to be the IPO factory. Are you worried about the quality of paper that's hitting the market?
Am I audible?
Yes.
Thank you for the question. I'm actually not worried. I'm very enthused with what's happening. You're actually seeing a confluence of entrepreneurial energy with investor appetite. It's really not an array of indiscriminate issuances which are happening. I think investors are evolving to proper filtration of data, strong management equivalence of corporate governance. They're believing in business models. And wherever we're seeing that there's even an iota of doubt on how the business will evolve, markets push back. So I think that filtration is becoming extremely key for the success of markets. Let me give you a few data stats, right? Calendar year 24, we saw close to 1.5 lakh crores of equity issuances on the main board. Continuing the trend, calendar year 25, with another 6 weeks to go, I think that we will probably beat the last year's high. As we speak, there are more than 200 documents filed with the regulator. If I really had to put some bit of probability, some bit of filtration, with many more transactions to file, I wouldn't be surprised if the next 12 months we see 2.5 lakh to 3 lakh crores of equity raise with a lot of filtrations in the way the investors are valuing it. So I think it's a great time for Indian primary markets.
This is a spirited defense, Neha. Not that it needed to be defended, but point well taken. Morning, Prashant here. I spoke with Vishal yesterday, and he said, well, the pipeline is going to be a bumper into 26. Of course, all of it depends on markets and what secondary markets hold up like, and that no one knows. So if the demand goes down, supply, I guess, will recalibrate accordingly. But I mean, with NSE lined up and others lined up, I mean, I guess the numbers will be much larger. Which sectors, Neha, if you can give us a sense, are you seeing the maximum activity in? You're expected to see maximum activity in as we look into 26.
Now, I think what is really different from raises, what we've seen the last 5-7 years, is this time it's all around. We're seeing sectors from new age tech, investors really giving credibility to large business models. We're seeing in renewable energy a lot of interest. We're seeing manufacturing take a large part of the mind share of the investors. If you see precision, R&D involvement in manufacturing, autocoms, I think we're a great bull over there as a house. We believe anything which involves the precision element into it, investors are lapping it up. They're expecting a large deluge of fundraise, in fact, in these three subsectors. I'm actually not a fan to see hot sectors, only some subsectors get capital. I think it's well bound this point of time. I think that's great for Indian markets.
So in a way, manufacturing, right, Neha? You think we'll see a much larger share of manufacturing businesses come into the market in 26?
In all our conversations, we're definitely seeing that mirror through primary markets. I think a lot of the growth capital is going to get infused via IPOs in probably the next 12 to 15 months to come. But I must caveat that this is to do a lot with, it's not commoditized manufacturing. It's, like I mentioned, it's a lot to do which is R&D backed, this technology. You're seeing the essence of precision come into manufacturing. And I think that itself will be spearheading a lot of our growth.
Neha, just one more question, just playing the devil's advocate here. I spoke with Sanjeev Prasad of Kotak yesterday on the sidelines of a forum, and he gave a statistic. He said over the last 5 years, there's about $100 billion worth of money which has been raised through IPOs. Only 15% of it, according to him, has gone into building assets, plant and machinery. Bulk of, everything else is basically exits. So it's a slightly broader question. It's about the so-called smart folk are selling, which is early investors, promoters, and it's, of course, en masse being bought by retail because foreigners aren't really there at this point. So just wanted you to address that. I mean, the number, that statistic was pretty stark.
No, I think the data point is correct, but I would put it in a very different perspective, right? So of the $100 billion, it's about $20 billion, which is primary infusion, and primary infusion has been to delever our balance sheets largely, or primary capex. But let's not forget, in the 80 billion, a large percentage of it is private equity monetizations. Now, how do the capital of PEs really come in, right? In the last 10 years, we've seen close to $400 billion of private equity raise for corporate India. They've incubated businesses. They've helped entrepreneurs grow. And after the company has reached a particular maturity in operational metric, they've gone and monetized their stake sale, which gives a huge vote of confidence to the boardrooms of those private equity investors sitting globally for them to infuse more money and incubate new businesses. So I actually think private equity monetizations is a great thing for Indian markets. Yeah. So yes, they've not gone to delever balance sheets, but they've gone to help businesses evolve.
Absolutely, and that's an argument that we've heard from some of the larger private equity giants as well, exactly that unless they monetize, how will they fund the next wave of ventures? But Neha, that's the morality argument that Prashant raised with you. I have the money question now, which is probably the most juicy part of this IPO debate, right? the pricing and the valuations that you folk are able to negotiate and get through. And kudos to you, I mean, the investment banking community, because you're able to secure whether they're exits, whether it's fresh money for the company. Now, that valuation, conversation, I just want to understand what's going on behind the scenes, especially when you're talking about new age businesses, these consumer tech, companies or platform companies. Is the pricing going higher and higher because there is a FOMO in the market? We don't have too much AI, we don't have deep tech, but we have a lot of consumer tech, and everybody wants to be on that train. Is that what is driving the pricing higher? Just walk us through the pricing mechanics.
Like I've always said this multiple times, IPO pricing in India, there's really no math or science to it, right? It's literally an art. It's a judgment. Investors are out there backing ideas, they're backing concepts, they're trusting the management team. I don't think now markets have matured. I don't hear investors telling me, let's look at 1 year forward revenues, like look at guidances. I think they're graduating to quality. I think what's very, very important to the point of filtration, which I was telling you all earlier, is investors are backing business models. And to my mind, that is extremely refreshing when they're pricing transactions. And these aren't centered by 2 or 3 funds deciding valuation, right? You've gone out there, you've met more than 100 investors globally, domestically. And after consciously having those conversations, they're backing models. And that's how the IPO pricing, the judgment as to and if you see the last 5 to 6 months, the IPO pricing has been very accommodative. I think issuers have respected investor feedback, they valued it, and thereby you see at least 20-25% return on listing. I think what's important right now, to my mind, is the sustenance of this listing price, which will be backed up only by good corporate earnings in the quarters to come.
Which just reminded me about Lenskart. I'm just checking the price on the screen right now, 420, because every time we have such high-profile issues coming up, that debate rages. So just to complete this point, Neha, for investors who need to understand how the new valuation parameters are working, so say a price to sales, is that here to stay? I mean, what is the learning curve that regular retail investors need to kind of, go up with? Because this is no longer about traditional price to book or traditional price to earnings, right?
No, I agree with you. I think there was inertia even with institutional investors probably a few years back because they were backing new business ideas. The point of validation wasn't proven in the markets. But off late, if you see with all the listed comps, the unit economics is working in their favor. They've delivered to their promises. And I think that itself is confidence building for retail. I'm a better fan of retail investors also plugging in some bit of the capital via mutual funds. Mutual funds, let them do their work. That's what they're meant to do. And those business models are being priced on revenue going forward. However, there is an implied multiple that they're working off on the PE or EV/EBITDA for those businesses going forward by the institutional investors. So I think, again, the point of validation is the listed peers have done extremely well, delivered what they had promised to the investors at large. And I think that is giving the confidence to the new issuers when it comes to pricing discussions.
Well, it's a pleasure, Neha. We wish you all the best of luck. Thank you very much for joining us. Interesting chat here on CNBC TV18 from the sidelines, the JM conference, which is underway. Thank you. Okay, well, we'll take a quick commercial break here. We're going to come back in just a bit from now. I think past 10 now. And it's quietened down, 29 points higher, 26,080. There's grow at the bottom of the screen, another 7% cut. So Ruby, I was just looking at, we were talking about NVIDIA. We don't have NVIDIA here, although Deepan said if NVIDIA was listed here, it would command some double valuations and all. No NVIDIA, but we have NetWeb.
Yeah, that's true. The closest we get to NVIDIA.
We should have, I mean, to be fair, they are one of the...
They're a supplier, right?
Yeah, there are less than 10 licensed suppliers of NVIDIA globally. That's a pretty big deal, right? And NetWeb is one of them. And the stock should come up. It's up about 6%. Of course, it fell 1,000 rupees quickly from the highs. So there is that element of this as well, the lift that it is getting now. But it's interesting. If you can have NetWeb up, please. There you go. That's the stock, about 200 rupees higher, back to close to about 3,500 rupees. We'll take a quick commercial break here. We're going to come back, Vinay Rajani of HDFC Securities, for technical trading ideas. Stay tuned, coming up. Okay, welcome back. 40 points higher, 26,100, just under that level, by the way, holding on at this stage. Vinay Rajani is with us, Senior Technical and Derivative Analyst at HDFC Securities. Vinay, good to have you with us here. Good morning. On the indices, any trades, Nifty Bank and specific stocks?
Yeah, good morning. So Nifty has crossed the 26,100 in the morning, definitely because of the positive global cues. But somehow the cash market stocks are not moving that much with that much momentum. So though the trend has been good, but the trend is good for the large caps only, the F&O stocks only, and sector rotation is going on. So we need to be vigilant about selecting the sector and stocks. So yes, IT has been supporting capital markets, defense. Have also been into a positive trend. So selectively we are bullish, and Nifty is definitely into an uptrend, and we should not take trade against the trend. The yesterday's low, which was around 25,850, should be the stop loss in trading long position, and ultimately Nifty can take out the previous all-time high, which was placed around 26 to 77. So yes, overall trend is positive, though the choppiness is there, but keeping a stop loss at 25,850, one can remain long with a target of 26,300. And right now, the capital market and defense space has been showing strength. IT is the another sector which one can look for the trading. Cash market stocks one should avoid because momentum is clearly missing there. So yes, overall stock specific markets are good. Banking have been performing well, but since IT has taken the lead since yesterday, banking stocks can consolidate a bit for a time being. But overall markets are looking good, and 25,850 should be the stop loss in trading long positions.
Okay, Vinay, so what are the specific stock trades for today then?
Yeah, so as I said, the capital market theme today has been doing very well. So MCX is one of the stock which we like on the charts, and it is making all-time highs day by day and looking strong. So MCX is into a clear-cut momentum, bullish momentum. So 9930, 9950 should be the entry price. 9770 should be the stop loss. On the upside, we are targeting a level of 10,250. So this is a trading target for MCX. The second stock I would take from the defense space. This is another space which is doing well since morning and overall into an uptrend. So Bharat Electronics is looking good. 425 should be the entry price. Stop loss should be kept at 418. On the upside, I'm expecting a target of 435.
Okay, all right. Thank you very much, Vinay, for the trades and for the technical advice on the index as well. The index is still up about 50 odd points. Let's go back and revisit Sammaan Capital. Stock has been a little volatile. It's still down about 0.5%. Gaurav, fill us in on the latest and what the company has said about the whole court order yesterday.
Well, yes, when we look at Sammaan Capital, yesterday was a disaster, but now company has come up with a clarification. So before I go to what happened yesterday, let me tell you a background story. In 2019, a PIL was filed against Sammaan Capital and the promoter. In 2024, Delhi High Court actually rejected the PIL, saying that the proceedings that they had filed and appeals that they had made were not right. Apart from that, company also said that the PIL, which was specifically filed for the 5 specific accounts, they have recovered most of the money in 2019, and there is no account receivable from these accounts as of now. Now, what happened yesterday? In October 2024, there was an appeal made in front of the Supreme Court against Delhi High Court's judgment that was given. And based on that, what company now says is that there are no open investigations specifically pertaining to the allegations which were made in PIL earlier against Sammaan Capital, neither from the investigative agencies or from the regulatory bodies like RBI. Apart from that, they also said that the court did not find any wrongdoings against Sammaan Capital in this case. And lastly, the Honorable Supreme Court also said that we have not expressed any opinion against Sammaan Capital. So this is important to note. Apart from that, the current proceedings which are ongoing are for the petitioner's submission for the earlier promoter, Mr. Gehlot, and who has fled the country and now has settled in London. Apart from that, Mr. Gehlot is not a part of the company right now. And when we look at the IHC deal, now company also says that both IHC and Sammaan Capital continue to remain focused on making this deal happen and make IHC as a promoter of the company. So definitely, company has shown confidence that the business ongoing is sound. And apart from that, there are no concerns raised by the Supreme Court. And on back of that, we will definitely watch out on this stock today.
Okay, all right, Gaurav, thanks very much for that. Stock's actually absolutely flat, unchanged from where it was yesterday. So a sharp slide at open and then it's picked up from there. Hero MotoCorp has crossed 6,000 for the first time since September 2024. I think we've had 2 upgrades in the last 2 days. Yesterday, I think there was an upgrade from JP Morgan, I think. And then I think there's one today as well, this morning as well. So more on that a little later. We'll take a break. We are back. Lata in conversation with HSBC's Pranjul Bhandari on It's the Economy segment coming up in just a bit.
Welcome to It's the Economy. India's macros present a very pretty picture. Most economists are now expecting the second quarter GDP numbers that will be announced next week to come in well over 7%, and indeed some are even moving the full year GDP forecast to over 7%. Meanwhile, the CPI inflation, consumer inflation, is expected to be lowered by the Reserve Bank to 2% for the current year, after the record low of 0.25% that the CPI touched in October. The only fly in the macro ointment is the record high trade deficit that the country reported in October because of high gold prices, high gold imports, and lower exports to the US. The other fly in the ointment is the continuous outflow of dollars by foreign investors. To get a handle on all things macro, I have with me Pranjul Bhandari, the chief India economist and strategist for HSBC. She's also the ASEAN economist for HSBC. Good morning, Pranjul. Thank you very much indeed for joining me. Let me start with the GDP numbers. our poll is only halfway through, but it is giving a very clear indication that we may get a number above 7% for the July, August, September quarter. Where do you stand?
Yes, absolutely. I think September is going to be a number which is going to be close to 7.5%. I think December too, we could be in the 7% plus range. So we're talking about pretty strong growth over, the first 3 quarters of the fiscal year. I think a lot of things have supported this, from good monsoons, low inflation, which raises purchasing power, tax cuts, front loading in fiscal expenditure, especially in capex. I think all of this has come together very nicely. But Lata, once I say this, I think it's also very important to look ahead. And my sense is that some of these things could reverse in the March quarter, which is the final quarter of FY26. And there are a few uncertainties which we can't ignore. I think one uncertainty is that all of this GST boost we are seeing, will that continue or will that fade? My sense is we are already seeing auto companies taking away some of the discounts. Some of the passenger vehicle registrations have come off. So we'll have to think about the longevity carefully of all of the GST boost. The second is the fiscal drag. The government has spent a lot upfront, but now nominal GDP growth is very low. Tax revenues are lower than budgeted. So they may not have the firepower to spend very much in the March quarter. In fact, they may have to cut back on spending, and that could be a fiscal drag. And the third is exports. We are finally seeing in the numbers that exports are slowing, especially to the US, but it's not that we are being able to increase exports in a major way to the rest of the world either. So I'm not seeing evidence of rerouting of exports. So my sense is we could see 7% plus numbers for the first 3 quarters, but suddenly in the fourth quarter, the number could dip to as low as 6%.
Oh, really? Actually, you kind of answered the question that I had, just an optimistic spin. Are we all being overcautious about our economy? Has the country's potential growth actually increased for various reasons? The demographic dividend, when China was in the same situation as we were, they were reporting 12 to 14% GDP. So probably we are in the 7 to 8% bracket, you don't think, for the coming few years?
Well, I think, the uncertainties that I spoke about are uncertainties which we should think about very carefully. Globally, growth in 2025 has been pretty strong, higher than expected across the world. But a lot of it has also been led by front loading of exports, because a lot of people fear what will happen once the tariffs kicking in a major way. And our sense is that because so many countries have already imported what they wanted for a year or so, actually exports in 2026 could be much lower. And globally, growth may be weaker in 2026 compared to where it's been in 2025. And, India will be a part of that as well. So while I'm very happy with all we have achieved, and we have achieved a lot, I do think we need to be careful about the uncertainties in the global growth environment in 2026.
No, I take a point. The world is not as clement to us as it was to the Chinese in the 90s and the 2000s. Let me come to inflation, where you will have a better picture since you also look at ASEAN. We have this 0.25% CPI number, and much of this is because the WPI numbers are way negative. We have probably the 5th consecutive month of a minus wholesale price number, deflation. Does that continue? Because, Asia is getting flooded with cheaper exports, which couldn't go to the US. So do we have an Asian disinflation-related low inflation in India as well for the better part of 2026?
Absolutely, Lata. I think low inflation is going to be a new trend out there. And on the back of that, I'm going to argue that the RBI can remain growth supportive for a pretty long time. When I look at very short-term data, we got this amazing 0.25% CPI number for October, and that did not even include all of the fall in the GST taxes. It only included a very part of it, about 1/3 of the impact. So I think that is also likely to come in a bigger way in the next couple of months. So inflation could remain low in the next couple of months too. And coming to 2026 and beyond, I have done a structural study in which I've looked at previous periods in which core inflation fell as dramatically as it's falling now. Every time in the past, it was led by growth falling. It was output gap widening that led to lower inflation. And therefore, it used to be very short-termist. As soon as growth would rise, inflation would go back up again. This time, when I'm looking at the drivers of disinflation, they are structural. It's China's overcapacity in manufacturing and therefore, cheaper imports. And that has been built over 4 decades. So that's not going to go away very quickly. And it's also RBI's credibility that has been built over 10 years as the inflation targeter, that they will keep inflation low, and markets have started to believe that. These are all structural drivers that are driving today's disinflation. And my sense is that's going to continue for a fairly long period of time. In terms of numbers, I would say for FY26 average, I think inflation can be below 2%. About 1.8%. And for FY27, I would say it can be a tad below 4% at about 3.8, 3.9%. So these are pretty low numbers for several quarters.
Okay, this actually makes the Reserve Bank, renege on its promise. It's a renege on its mandate. It's supposed to keep inflation above 2%. So how many cuts? And what in December?
Yeah, we do think that there is a cut in December. Although I must say, I think markets are right now 50-50 on it, because they are saying, yes, we understand inflation is very low, but growth is extremely strong. Why should the RBI cut? And my argument there is that actually the primary mandate of RBI is inflation targeting. So at this point of time, they'll be looking at inflation a little more closely than they look at growth. And even when I speak about growth, yes, it's strong today, but I think in early 2026, things look a little bit uncertain on the growth front. So on balance, my sense is that the RBI will be cutting in December. And beyond that, my sense is, look, we do have space for a rate cut, another one. But it could be in February or April. But right now, I'm going to focus on the December cut.
Okay, your terminal rate, therefore, is 5% for India, the repo rate.
Closer to that,
okay.
Yes.
Now, while it's very good that inflation is coming in lower than what RBI thought and growth is coming in higher than what RBI thought, what you are saying gives me the feeling that nominal GDP is going to be, sub 9%, not even sub 10% for FY27 as well.
Look, my sense is that, WPI is a funny animal. If it's going into deflation for next 2-3 months, it could be a very strong positive number just 1 year down the line. So from that perspective, GDP deflator could be a little higher in FY27, and we could just about touch double digits in nominal GDP growth, just about 10%. That's what.
Okay.
That's what I would
the
think.
reason why I'm asking is it's not just the government's fiscal deficit. It's also EPSs of companies that are linked to the nominal GDP. And if that continues to come between 8 and 9, we have a problem in terms of earnings. Since you are also a strategist for HSBC, this is my question to you. Do you see foreign funds, therefore, changing tack? The second quarter EPS growth has been far better. It ends a long 5-quarter drought. Do you think that, we can upgrade the earnings forecast for the next 4 quarters? And do you see any sentiment change in FPI? Does it change into inflows anytime soon?
Right. So to the extent corporate earnings link up pretty well and are very correlated with nominal GDP growth, my sense is that December will not look very good, in the sense that we think it's going to be a quarter in which the real GDP growth will be higher than the nominal GDP growth, which basically means that the deflator will be negative. So, you have to keep that at the back of our minds when we think about corporate earnings. But as soon as we hit 2026, my sense is that the base effects will turn favorable. And for FY27, nominal GDP growth could be closer to 10%, whereas in FY26, it was more like 7.5%. So some improvement on the margin there. But a broader point there is, my sense is that globally speaking, when we look at the region, our sense is that because Indian equities haven't done that well over the last year, some of the valuation gap vis-a-vis, the region has actually corrected at this point of time, and things are beginning to look attractive. In fact, we are overweight on equities at this point of time. We've been so for the last 1.5-2 months, and we can see, I meet a lot of sort of clients, investors around the world. I can see the interest in India has crept back in.
Oh, okay, that's good. So just a final word, do you think the currency stabilizes below the 89 mark, or do you think 89 gets overshot? Just any view that your team will have on the rupee?
Yeah, so look, we've had a trade deficit number which has been extremely large. And my sense is while it could soften going ahead, it's not going to fall dramatically. I think gold imports will remain elevated for a while. My sense is exports will remain challenged for a while. In fact, for FY26, we think current account deficit will be 1.4% of GDP, which is almost $60 billion. Remember, last year it was $25 billion. So the pressure on the currency, I think, could remain at this point of time, especially if we don't see a deal between the US and India very soon. If we see a deal, it could be a game changer. Sentiments can change very quickly. Markets might realize that a lot of the real adjustment has happened, and now maybe it's time for the currency to perform. So it's a very binary view of the world. No deal, my sense is we can go towards 90. And if we have a deal, we could spring back to about the 87 range. So it's a wide range. A lot of it depends on the India-US deal, which is not just good for taking away a growth drag from the economy and bringing back equity flows, but over time, it could actually increase FDI inflows into the economy as people start seeing India as a good manufacturer.
Fair point. Well, a lot hinges on this very binary event. Thank you very much, Prajwal Bhandari, for joining us with a 360-degree perspective of the Indian economy. That's it.
Lovely to be here.
Thank you. That's it on this edition of It's the Economy. It's time for a break, and Chartbusters will come up thereafter.
Samman Capital issues a clarification as the Supreme Court questions the probe into Indiabulls housing finance case. The company says the case is related to former promoter Sameer Gehlot, also emphasizes that the IHC deal remains on track. Stock recovers from lows but still in F&O ban.
Citi issues a buy rating on Cummins with a target price of 4,875 rupees a share following a meet with the management. Citi expects industrial segment weakness to be transitory and is bullish on demand from data centers. The stock is up close to around 2%.
NBCC rallies after it wins a near 3,000 crore rupee order from the Nagpur Municipal Authority. The stock, however, has given up some of those gains.
Mahindra Holidays surges over 5% after announcing the entry into the leisure hospitality business with an investment of around 1,000 crore rupees. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Manglam. Markets in a pretty okay space as we speak. The Nifty holding higher. Nifty Bank yet to perform, but the breadth of the market is pretty much okay. Hey, Manglam.
Yes, Nigel, the breadth of the market is pretty much okay. Let's see, whether we're biding time around the 26,117 odd mark, just about 150 points away from an all-time high on the frontline index, doing fairly well for the current frontline indices. The Nifty Bank is the one that needs to power up for the Nifty to go further higher from here. But let's talk about a couple of listings then. We have the solar energy products manufacturer Fujiyama Power Systems, which saw a flat listing on D Street, listed at a 3% discount to its issue price. Pawan Kumar, who's the chairperson at the company, joins in to discuss their post-listing strategy. Thanks a lot, Mr. Kumar, for joining in. Congratulations on listing on the bourses as well. Just a couple of questions. I wanted to understand that after this listing, the money that you've raised to repay some part of your outstanding debt and part finance the cost of your manufacturing facility in Ratlam, how much debt will remain on the books? How much will you save in interest? And this Ratlam facility, how much will that add to your overall revenue?
Yes, sir. Regarding the debt, I think 50% of the debt will be repaid through this issue. And regarding the interest, so if we check percentage of interest in related to revenue, it will be we will try to reduce it 50% or further.
Okay.
And regarding the new capacity, so regarding the new capacity will enhance the total capacity to double.
Okay, all right. Hi, Mr. Kumar. Good to see you in, and congratulations on listing. A lot of hard work would have gone into making this day happen. So congratulations to you, your family, as well as the team.
Thank you, sir.
Give us a few details. You're saying your debt comes down. What is the debt post the repayment? If you could give us the absolute number, point number one. Point number two, as you're saying, the capacity basically doubles, post the expansion that you're undertaking. So that would mean that the revenue potential of the company also moves to around 3,500 crores. Would that be fair?
I cannot say about the revenue, but definitely by enhancing the capacity and if we see the market opportunity, so there is a good opportunity in the market. If we see the CAGR in rooftop solar, so it is about 40 to 60%, especially in rural market. तो एक मार्केट का जैसे सेंटीमेंट्स है और इतनी अपॉर्चुनिटीज है, तो डेफिनेटली हम उसका पार्ट बनेंगे और जितनी भी अपॉर्चुनिटीज हमें मिल रही है मार्केट में रूफटॉप सोलर में स्पेशली ड्यू टू पीएम सूर्य घर योजना एंड अदर, तो अवेयरनेस इतनी आ गई है मार्केट में कि मार्केट में काफ़ी बड़ी अपॉर्चुनिटी है और उस अपॉर्चुनिटी को कंपनी डेफिनेटली कैश करना चाहेगी और डेफिनेटली वो आपको नंबर के रूप में भी दिखेगा.
बिल्कुल, हम समझ सकते हैं. पवन जी, आपका डेट कितना रहेगा बुक पर और आपके जो इंटरेस्ट एक्सपेंसेस हैं, मैंने देखे पिछले साल कुछ 27-28 करोड़ के थे, तो ये आधा हो जाएगा तो करीब 10-15 करोड़ वहां पे भी बचत हो जाएगी.
एब्सोल्यूट नंबर के रूप में तो मैं नहीं कहूँगा, बट रिवेन्यू के अगर हम रिलेशन में देखेंगे डेट टू लाइक सेल, अगर रिवेन्यू डेट टू रिवेन्यू देखेंगे तो डेफिनेटली इट विल कम टू 50%।
ऑल राइट, आप अपने मार्जिन्स के बारे में कुछ बता सकते हैं, क्योंकि आप एक बैकवर्ड इंटीग्रेशन प्रोजेक्ट भी ला रहे हैं। पिछले साल आपके मार्जिन्स कुछ 17% के आसपास थे, 16-17% के आसपास। तो ये बैकवर्ड इंटीग्रेशन से आपके मार्जिन्स कितने बढ़ेंगे आगे जाके?
देखिए, अगर बैकवर्ड इंटीग्रेशन की बात करें तो हमारे पास 3 मेजर प्रोडक्ट है रूफटॉप सोलर में: सोलर पैनल, सोलर इन्वर्टर एंड सोलर बैटरी। तो ये तीनों में ही हम बैकवर्ड इंटीग्रेशन और अधिक से अधिक कर रहे हैं। अगर सोलर इन्वर्टर में अगर हम बात करें तो चाहे उसमें ट्रांसफार्मर हो, वो हमारा इन हाउस प्रोडक्शन है, सीट मेटल कैबिनेट्स है, वायर हार्नेस है, और इसमें EMS टोटली कंपनी के पास अपना है। और अगर हम लाइक सोलर बैटरी में अगर हम बात करते हैं तो लेड एसिड बैटरी में बिल्कुल स्क्रैच से, लेड और एसिड बेसिक कंपोनेंट से टोटली इन हाउस बैकवर्ड इंटीग्रेशन कंपनी के पास है। अगर हम लिथियम आयन बैटरी में बात करें तो BMS से लेके, वायर हार्नेस से लेके, सीट मेटल कैबिनेट, तो ये सारा बैकवर्ड इंटीग्रेशन है। और सोलर पैनल में स्पेशली हम DCR सेल के साथ आ रहे हैं। तो 1 गीगावाट का हमारा DCR सेल का डोमेस्टिक जो है, इंडिया मेड सेल का हमारा प्लांट लग रहा है, जो कि खास तौर से अगर हम देखें जो सब्सिडी वाला बिजनेस है मार्केट में, जो अभी तक हम अचीव नहीं कर पा रहे थे बिकॉज उसमें डोमेस्टिक सेल की रिक्वायरमेंट थी और वो मार्केट में काफ़ी शॉर्टेज है, तो वो उसका भी हम पार्ट बनेंगे। ड्यू टू अवेयरनेस नॉन सब्सिडी बिजनेस में तो हमारी ग्रोथ आ ही रही है। और लेकिन अब
नहीं, मैं ये जानना चाहता हूं कि आपका
बिजनेस में भी,
हाँ, मैं ये जानना चाहता हूं कि इससे आपके कॉस्ट में कितना फायदा होगा और आपके मार्जिन्स कितने बढ़ेंगे?
कॉस्ट में डेफिनेटली इसमें अगर हम देखें तो अब मैं नंबर के रूप में तो एक बार अभी नहीं बता पाऊंगा, बट आप देखेंगे आने वाले टाइम में डेफिनेटली इसमें आपको एक बेटर रिस्पॉन्स दिखेगा सर।
और आप 90% रॉ मटेरियल चाइना से इंपोर्ट करते हैं, वो कितना कम होगा आगे जाके?
तो सर इसमें अगर इंपोर्ट की अगर हम बात करें तो टोटल हमारी परचेज का अराउंड 25 से 30% ही इंपोर्ट है, बाकी सारा हमारा डोमेस्टिक है। हाँ, इंपोर्ट का जरूर 90% हमारा चाइना से है। तो इस तरह से अगर हम पूरी हमारी परचेज का देखेंगे तो 20 से 25% ही हमारा चाइना से इंपोर्ट है। बाकी अगर हम देखेंगे तो 70 से 75% या इस रेंज में हमारा डोमेस्टिक मटेरियल, मतलब डोमेस्टिक परचेज ही है हमारी। और डेफिनेटली अगर हम फर्दर आगे और ज़्यादा बैकवर्ड इंटीग्रेशन में जाएंगे तो ये परसेंटेज कहीं ना कहीं हम रिड्यूस करने की अपनी तरफ से पूरी कोशिश करेंगे।
ऑलराइट पवन जी, और फाइनल क्वेश्चन मेरी तरफ से ये है कि आपका जो वर्किंग कैपिटल साइकिल है वो काफ़ी लंबा है, तो वो कितने दिन पे आप उसको सीमित रखेंगे आगे जाके? वो कहाँ पे एफिशिएंसीज लाएंगे? और दूसरी बात कि आपका जो डिस्ट्रीब्यूशन सिस्टम है वो आप कितना ज़्यादा बढ़ाएंगे जैसे जैसे आपकी कैपेसिटी बढ़ेगी उसको?
बिल्कुल सर। तो सर इसमें अगर आप इन्वेंट्री साइकिल की बात करें तो कुछ साल पहले अगर हम देखेंगे तो वो हमारा 180 डेज तक था, उसको रिड्यूस कर करके हम 90 डेज तक लाए हैं। इसको फर्दर हम रिड्यूस करने की पूरी कोशिश करेंगे सर। और अगर हम लाइक डिस्ट्रीब्यूशन नेटवर्क की बात करें तो अगर हम पिछले 3 साल में देखें तो अराउंड हमारा डिस्ट्रीब्यूशन नेटवर्क डबल हुआ है। तो आज हमारे 7,000 से ज़्यादा डिस्ट्रीब्यूशन पार्टनर्स हैं, मतलब चैनल पार्टनर्स हैं। और आने वाले टाइम में हम इसको और भी, क्योंकि साउथ में भी हम एक्सपेंड कर रहे हैं और ईस्ट में भी हम एक्सपेंड कर रहे हैं, तो ये चैनल नेटवर्क भी हमारा, और जहाँ पर हमारी प्रेजेंस है वहाँ पर भी हम और डेंस इसको करने का पूरा प्रयास कर रहे हैं, क्योंकि मार्केट में अपॉर्चुनिटी बहुत है, काफ़ी अवेयरनेस आ गई है। जो पहले अवेयरनेस की कमी की वजह से उतना ज़्यादा नहीं था सेल जितना होना चाहिए, जितनी हमारे देश में आवश्यकता है इस चीज़ की, तो अवेयरनेस आने की वजह से वो काफ़ी सेल में इंक्रीज हुआ है।
और ठीक है, थैंक यू आप जुड़ने के लिए, कॉन्ग्रेचुलेशंस वंस अगेन। वी विल हैव अनदर कॉन्वर्सेशन विद यू जब आप नंबर्स हमें दे सकें, होपफुली आपके क्वार्टरली रिजल्ट्स के बाद, तो हम आपसे तब विस्तार में बात करेंगे। थैंक यू पवन जी, आज लिस्टिंग के लिए कॉन्ग्रेचुलेशंस।
थैंक यू।
With that, we'll take a short break. Come back on the other side. We have the management, or in fact, we have Sachidanand Tekar who joins in from Trade Bulls to give us some trading strategies. Welcome back. You're watching us here on Chartbusters. Look at a couple of these stocks which are doing well. Reliance has definitely moved to the high point of trade, a top contributor to the Nifty right now. We have Axis Bank, which has moved higher as well. And alongside that, a couple of these oil names, ONGC has moved higher, and oil marketing companies like BPCL, etc., too, are at the higher end of today's trading range so far. But the top contributor on the Nifty definitely remains Reliance. So good time to get in Sachidanand Tekar from Trade Bulls for a quick technical check on the market. Sachi, you know, it's one of those so near yet so far from the all-time high that we've been facing for the last month and a half or so. Do you think now this time around we'll get lucky and with all the ingredients in place for the market towards the end of this year, before that we hit a fresh high?
Good morning, Mangalam. Good morning, Nigel. Absolutely. In fact, last session that we discussed, we were expecting the Nifty to close confidently above the 26,050 mark. We've already seen that breakout in place, and there are no major hurdles before 26,330. I won't be surprised that in the coming week we may see the Nifty scaling towards 26,500. So I think the trajectory is pretty much clear after almost 10 attempts to close above that 26,000 mark. Nifty has already managed to sustain above the same. The kind of data that we are seeing, plus the participation of stocks, it is likely that we may see this particular rally unfolding in a vertical way. So even right now at this point of time, even if we see some consolidation, I think that consolidation would again be a healthy sign. One can keep a stop loss at 26,040 on closing basis and still continue to add fresh long positions when it comes to Nifty. The target that we have projected is around 26,330 on an immediate basis, and we see that particular level coming in a couple of trading sessions itself. So I think the bias remains positive, and we don't see the momentum fizzing out soon. So we may see this particular rally extending towards 26,500.
26,500. Got that, Sachi? Individual stocks, what's on your radar?
Good morning, Nigel. Nigel, on Tuesday, in fact, we highlighted the trade setup for Moscow Dock. So I'm continuing with that particular setup. The stock is confidently trending above its 50-day exponential moving average support, which is at around 2,800. We have already seen a good, strong breakout in place. If you look at the weekly charts, there was a declining sequence, a declining channel kind of formation. Now that particular pattern has also been activated right now. The weekly RSI was steady at around 50. So we are expecting that there could be a very strong short covering move unfolding in this particular counter, which may push the stock towards 3,100. So from a trading momentum perspective, one can trail the target towards 3,010. Second target would be 3,100. Fresh long positions are recommended with a stop loss at 2,806. Disclosure would be that we have also recommended this particular stock to our clients. And the next contributor from the major names would be HDFC Bank. We have already seen a very strong up move in this particular counter, followed by consolidation. Now, if you look at the daily chart, the stock has been trending above its 20-day exponential moving average very well. In fact, it has also managed to sustain above the 50-day exponential moving average support. The RSI on the daily scale has been very steady, and we need a trigger above that 1,000 mark, which could set the short covering mode active. So we are expecting a good rally in this particular counter unfolding towards 1,056. From a trading momentum perspective, the first target would be around 1,032, followed by 1,056. And we are recommending building long positions in HDFC Bank, keeping a stop loss at 988 on closing basis.
All right, Sachi, thanks a lot for that. That's about his stock picks on the Nifty target of 26,500. Just before we move further, just keep an eye on Kalyan Jewellers. That stock too has moved to the high point of trade. They've announced to the exchanges that they will be meeting some analysts over the next few trading sessions, maybe 25th November, thereabouts. So the street likes it. There were good numbers that came by, and importantly for the jewelry sector, as the prices of gold have come by, demand has come back as well. So that's a positive. Kalyan Jewellers and Titan should come up for you as well. With that, let's get you some more ideas for profit. Our colleagues from Money Control Pro today join in Anant Chaudhary as a stock.
We are talking about a recently listed company, LG Electronics India, which is emerging as a quiet compounder in India's consumer durable space. Yes, Q2 was muted due to lower demand for cooling products, but please note that the company is strengthening its leadership across categories. In home appliances and air solutions, LG held a dominant 33% market share in washing machines and expanded its refrigerator share to nearly 30%. In premium refrigerator, it now commands 43% market share. It focuses on new launches like French door fridges, AI-enabled washing machines, which are seeing strong traction. Company took a selective price hike of 1.5 to 2% in Q2, which will help margin recovery. In their second segment, home entertainment, LG continues to dominate in LEDs with a 63% share. TV industry growth remains steady, but the premium segment is expanding faster than entry levels, an area where LG continues to outperform as consumer preference shifts towards large size screens. The biggest trigger is capex of 5,000 crore into their third new plant in Sri City, which will be commissioning in phase-wise, starting with RAC, followed by AC compressor, and then washing machines and refrigerators. Company is also focused on increasing its localization in own manufacturing from 55% to 70% in the medium term. Stock trades at 43 times on FY27 earnings, appears reasonable to us.
Thanks a lot, Anand. Well, as we slip into a short break, a quick reminder for all our viewers as HSBC presents Future Female Forward Season 3, co-presented by Cognizant. From New Delhi, we bring you the newest state chapter edition with powerful perspectives, actioned, focused agendas, and a collective vision for accelerated equity. Tune in on the 25th of November, Tuesday, 5:30 p.m. onwards for insightful conversations only on CNBC TV18 and CNBCTV18.com. Welcome back. Well, Nifty is now trending higher at the high point of the day, 90 points higher on the Nifty. Good going out there. But let's focus on a couple of stocks. Cummins, that's trading with gains following a bullish note from Citi. Vinny joins us to fill us in with a quick analysis on that. Vinny.
Hi, good morning. So yes, Cummins, Citi has written a note, buy rating target price of 4,875 rupees. Now the brokerage firm actually met with Cummins management where they said, and the highlights that came in, that Cummins India, they're experiencing steady demand, especially from power gen, coming in from real estate side, construction side, as well as infrastructure sector. Now, apart from that, when you look at the industrial segment in Q2, obviously there was weakness in this segment, but that is likely to start improving now going forward. There's clear potential in terms of the railway, defense and marine side for the industrial segment. In terms of data center side of the business, future data center demand from co-location providers, that's quite steady. And they're seeing lumpy demand coming in from hyperscaler demand as well. So that is something we'll keep an eye out on. Also, the key highlight coming in is that they are continuing to expand furthermore their distribution reach. And that is something positive. And that is why they're maintaining the buy rating on the stock. And the stock is basically trade today.
All right, Vinny, thanks a lot for that. That's about a big mover today. But the other big mover is also Hero MotoCorp, which has moved higher to the high point of trade. And Radico Khaitan continues to do well. All in all, a decent session so far. The Nifty up 80 points. All you got to do is look at the Nifty Bank. Once that gets into the green, the Nifty gets further into the groove. Thank you for watching Chartbusters. Trading Card comes up next.
Hello and welcome to Trading Hour live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormis Fatakia. Yesterday we saw that sharp recovery from the lows of the day, ended at a 3-week high. Today we are adding on to those gains. So the Nifty very close to the day's high right now. It's above the 26,100 mark as we speak. We do have the FMCG index which is contributing to the gains that we are seeing right now. Oil and gas doing well too. The mid-caps in line with the benchmark, up 0.3%. Bank Nifty, which did well yesterday, has not been able to keep pace with that. So that one is absolutely flat with some negative bias as we speak. The small cap index higher, actually outperforming the mid cap and the benchmark as well. So that index is up around 0.5% at the day's high as we speak. So a lot of moving parts in the market, and we do have the PSU banking index, which is leading to the losses that we are seeing on the Nifty bank as well. But there's so much to talk about now, right? So let's go across to Hormis first up. He's here with all the movers in the market as we speak. Hormis.
Never devoid of action in the broader markets, and we'll start off with a news flow driven name, NetWeb Technologies. And NetWeb, courtesy its partnership with Nvidia, is up 4.5%. At one point was up even 6% in reaction to the results that were reported last night by Nvidia. And today's volumes have already crossed Wednesdays, and almost at a similar level a few minutes ago. So they've crossed them now. There are 20 lakh shares that have been traded on NetWeb so far. The 20-day average is around 9 lakh shares, but the stock has been a bit of an underperformer this year. It's down around 13%, but from the recent peak of around 4,500 rupees, the stock has corrected even further, which is at 23% lower. But of course, from the IPO price of 500, well up almost 6 to 7x. Radico Khaitan is the other name that's doing well today. It's in very high spirits at the moment, 10% higher on the stock. It's gained in 4 out of the last 5 trading sessions. The volumes are the highest in a month. 7 lakh shares have been traded already in the first 2 hours. The 20-day average is just over a lakh. So 7x of its 20-day average when it comes to the volumes for Radico Khaitan. And the kind of move that the stock has seen, it has gained every single month this year starting March. So it's been had 8 to 9 months of positive monthly returns, and this is also turning out to be the 3rd straight year of positive returns for the stock, so far up 31%. Now Aztec Life Sciences has seen double-digit gains as well in today's session. This one has gained in 5 out of the last 6 sessions. The volumes here too are the highest in a month. Today's session I had 15.5 lakh shares traded. The 20-day average is 15,500 shares. So you see the kind of volumes at which the stock has surged. Despite this, the stock remains below all key moving averages, and as a result of today's move, the stock has turned positive for the month of November after 4 consecutive months of losses. And lastly, Universal Cables is making a move on the upside today, 6% higher today as well. 8th straight day of gains for the stock, is almost 40% now in these 8 sessions. But on the volumes front though, starting this week, the volumes have declined every single day. Even today, we have had only 2 lakh shares that have been traded. The 20-day average is 90,000 shares. So still above its 20-day average, but declining on a daily basis. The stock is up around 20% so far this year, and it's turning out to be the 5th straight year of positive returns for the stock, Sonal.
Okay, some interesting names there. Thank you so much, Hormis, for joining us with all those details. Let's talk about more stocks then. Sudarshan is joining us now. There's a Macquarie note on Hero MotoCorp, an upgrade coming by as well. Sudarshan, tell us more.
So 2 upgrades in 2 days for Hero MotoCorp, and what a run the stock has seen in 2025, up almost 45%. And today in the trade, stock is up and currently up almost 3%. And it's on the back of today, Macquarie has upgraded the stock to outperform and target. It has given is of almost 6,800 per share. And it believes that domestic market share for Hero MotoCorp has stabilized in last few quarters, and it sees upside risk in both motorcycles and scooter segment. That would be led by recent GST cut that government had announced, and also company has been undertaking new launches that will also boost the demand. And Street is now willing to give or basically assign a higher multiple catalyst. For the last few years, the gap between Hero MotoCorp and the peers on the valuation front is huge. So now it might narrow down going forward. Some of the catalysts that it has mentioned: first, market share gains that company has been seeing in the festive season. Also, it has seen a market share gain, and especially in the entry-level segment has seen a huge demand. And it was led by first-time buyer. And that first-time buyers' contribution in the festive season had increased to 80% versus a historical average of 70%. Another catalyst is electric two-wheeler volume ramp-up that company has been undertaking. That also is expected to boost the demand. And now, on the margin front, company has reported margin of almost 15% in Q2 of FY26. That was at multi-quarter high. So considering all these factors, there is another or second positive brokerage note for Hero MotoCorp.
And the stock is now heading towards its all-time high levels as well. Sudarshan, thank you for that update. At the highest point of the day now is Hero MotoCorp, 2.75% higher at 6030. The record high 6246. That's the level you need to watch out for. The stock had hit that in September of 2024, and from where the stock had seen a bit of a correction there. So that's Hero MotoCorp for you, having a good day. But what's not having a very good day, or the last couple of days, has been these new listings after the initial euphoria has died down. Both Grow and Physics Wala are not having a very good day. Grow and Physics, both of them are down around 7.5% each in today's trade. But the other talking point of yesterday's trading session was Sammaan Capital. The stock fell 13%, entered the FNO ban. And what are the latest updates now? Gaurav is here to tell us more on those. Gaurav.
Well, yes, it was not a good day for Sammaan Capital yesterday, because let me take you back in time. What happened is that in 2019, there was a PIL filed against Sammaan Capital in the Delhi High Court. And in February 2024, Delhi High Court actually dismissed the petition. Apart from that, when we look at the timeline again, in October 2024, there was an appeal made against Delhi High Court's judgment in the Supreme Court of India. And that is what is actually causing this trouble for Sammaan Capital right now. But company has made a few things very clear. First is that there is no open investigation pertaining to the allegations in the PIL against Sammaan Capital, is what the company is saying. Apart from that, they say that no wrongdoings have been found against Sammaan Capital, even in the affidavits filed earlier. Third is that the Supreme Court's judgment or any comments that were given by Supreme Court were not made in the negative sense for Sammaan Capital. In fact, Supreme Court also said that we have not expressed any opinion against Sammaan Capital yesterday. And lastly, company also said that the proceedings that we are seeing right now in Supreme Court are against the erstwhile promoter Mr. Gehlot, who is now settled in London. Now, is Mr. Gehlot still a part of company? The answer is no. In 2023, company said that he has sold all the shares and he holds 0 share in company right now. And the company is professionally run company and it is not a defaulter. Apart from that, it also raised some speculation about the deal with IHL. Remember, it was going to be the biggest deal, given that they were going to invest more than 8,000 crores in the company and be the promoter. Company said that both IHC and Sammaan Capital continue to remain focused on the deal. So definitely, company is optimistic about it. And the valuation, they also seem to be in favor for the company right now at 0.6 times price to book value. And on back of that, we will be watching out on what happens in Sammaan Capital in coming days.
Okay, all right. So that stock continues to be on our radar. Massive recovery from the lows of the day after the fall that we saw yesterday. Thank you, Gaurav, for joining us with all the details that we have on this particular stock. We'll slip into a short break. When we come back, we'll talk about the big story of the day and analyze what's happening there. Welcome back. Well, the big story today, of course, has to be the AI chip maker Nvidia reporting its third quarter earnings and revenue that topped Wall Street expectations. The company guides for stronger than expected sales in the fourth quarter as well. Hormuz is back to the big wall with more details on this one. Hormuz.
Too good to be true. That's not possible. Mano ya na mano. You can use all of these phrases when you look at Nvidia's results this time around, but the numbers don't lie. It is what it is. Yet another blockbuster quarter from the world's most valuable company, and markets across the globe are breathing a sigh of relief. Now, we all know that Nvidia's results were a beat on expectations, but that's not it. Here's a bigger picture. For the first 9 months of the year, Nvidia has reported sales of close to $150 billion. Its profit is around $80 billion. For the fourth quarter, the company has guided for sales to be around $65 billion. Now, despite the issues in China, now if this guidance holds, the company could well end the year with revenues of well over $200 billion and profits in excess of $100 billion. But how big is too big? Now, here are some illustrations to show how big Nvidia actually is. Now, Nvidia's profit in the first 9 months is $77 billion. Now, compare that to the sales reported by its closest competitors, Intel and AMD, for the same time frame. That's close to $60 billion. Now, this shows that Nvidia is earning more than two of its closest rivals put together are managing to sell. Now, that is some statement. Now, more than the results, the global markets are also breathing a sigh of relief from Jensen Huang's remarks. He mentioned on the earnings call about the AI bubble. He said that from their vantage point, they are seeing something very, very different. And when the CEO of the world's largest AI chip supplier says all is well, the market surely takes note of it. Nvidia recently hit the $5 trillion mark in market capitalization. Yeah, it was $5 trillion. Now, the journey from $4 trillion to $5 trillion took only 79 trading sessions. Now, this was $2 trillion in February of 2024. We went to $3 trillion in June. Then we went to $4 trillion in July of 2025. And very recently, we went to that $5 trillion mark. Now, when Nvidia had hit that $4 trillion market cap mark, we tried analyzing what if Nvidia was a country. Today, we tell you what if Nvidia was a stock market on its own. Now, after a brief post-listing slump, the stock's market cap is below the $5 trillion mark. But even at $4.5 trillion, one stock of Nvidia, the entire company, of course, is smaller than the stock markets of only China, Japan, Hong Kong, India, and of course, the United States. Now, here's another illustration of how big Nvidia actually is. 12 quarters ago, in the fourth quarter of FY23, Nvidia had sales of around $6.5 billion. For the fourth quarter, it has guided for $65 billion. That's a 10x jump in 3 years. Now, this exponential growth shows up in the stock price as well. Between 2020 and 2024, Nvidia's stock has doubled or even tripled in value in 4 of these years. Now, even in this year, the stock has more than doubled from its tariff lows, but such was the damage during that time that the year-to-date gain is only 35% in 2025. CLSA has retained its high conviction outperform rating on Nvidia with a price target of $270. Now, despite this surge, only 1 out of the 79 analysts that track Nvidia has a sell rating on the stock. Now, if you think CLSA's target is higher, there are targets of as high as $350 on Nvidia. So, in this battle of David versus Goliath, the Goliath keeps getting bigger and better, than the Davids around it are also cheering the results with share price moves of their own. Nvidia has categorically said that the AI boom is here to stay, and it wants to have the largest share of that pie, one chip at a time.
Okay, getting bigger and better, no doubt about that. What an unreal rally, and the guidance that the company has been giving has been better than what the street expected as well. Just quickly take a look at Netweb Technologies as well. On the back of all the commentary that has been coming in from Nvidia, that stock continues to be on our radar, and it is surging. It's up 4.5% as we speak and has been a big performer throughout this year as well. We'll do one thing, we'll slip into a short break. When we return, we'll discuss latest trends from the chemical space with Krishna Chandra Parvani from GN Financial and discuss the top bets. Welcome back. You're still tuned into Trading Hour on CNBC TV18. Krishna Chandra Parvani, who is the chemical research analyst at JM Financial Institutional Securities, is joining us now to understand the outlook on the sector going forward. Mr. Parvani, thank you so much for joining in. Well, what did you make of the chemical sector earning this time around? Because we did see some companies reporting strong numbers. Of course, it was the result of a low base as well. But what did you make of the commentary? Do you think we're out of the woods when it comes to demand and inventory destocking?
Thank you. Thank you for having me on the show. You know, the quarter gone by has been a mixed quarter for a majority of the chemical companies. We have seen very strong earnings from the companies manufacturing refrigerant gases or pharma intermediates. That's where the silver lining has been. While the domestic focused agrochemicals players have had a forgettable quarter. Because of the excessive rainfall in the country. You know, we expect HFC prices to continue to be very strong, and as a result, the refrigerant gas players will continue to report good earnings going forward as well.
Mr. Parvani, thank you for joining in. You know, but what is something that is not working out for companies that are not doing well? Is it the China issue? Is it the tariff issue in the US? Or it's just a proper demand situation that is not working out for a lot of these companies yet after years of underperformance? What's going wrong?
Sure. So one key factor is obviously the commodity chemical prices, which have been subdued. So take an example of ammonia, phenol, or soda ash for that matter. They have been subdued for quite some time now, and we don't see any uptick in the prices going forward. There's no demand trigger for these chemicals to go up. Second is, of course, the US tariffs, which has resulted in destruction of demand of several specialty chemicals also. So till the tension subsides of the tariffs, we continue to expect some of these challenges to continue. In fact, some of these companies are trying to divert their US export volumes to other geographies, but it's not going to be fulfilling the demand which got distracted because of the US tariffs.
We are talking about the US tariff being a big issue. Which are some of the specific names which are impacted because of that? And do you think because of that, some of these chemical names will continue to underperform the market?
So till the times the tariffs are there, there will be a destruction of demand for some of the chemicals such as oil and gas chemicals, or for that matter, some of the agrochemicals directly exported to the US. Given what's happening in the US currently is that the farm income is very low. And US farmers are looking for generic alternatives, and also if you see the Trump is trying for that soybean exports to the China, but China only took one of the shipments, and after that there have been no shipments of soybean from the US. So till the times these tensions remain, we don't expect a material improvement in the countries exporting to the US. However, we see a strong performance to continue for the players which are focusing on the patented pharma intermediates, refrigerant gases, and also in some cases the generic agrochemicals, where we have seen price remaining stable over the last 6 months, or in some cases, going up for products such as glyphosate, metribuzin, glufosinate, etc.
Mr. Parvani, you mentioned about agrochemicals. That is one space that has not been doing very well recently. How much longer before A, the segment finally bottoms out, and B, you finally start to see some recovery in first the numbers and then, of course, reflecting on the company's performance as well?
So domestic agrochemical players will, continue to struggle for the next couple of months or next couple of quarters, so to say. While for the generic agrochemicals players, we do see an improvement in the margins going forward, because we have not seen price deterioration in the generic agrochemicals, especially from China. So these prices have remained stable, and with the farm income levels remaining low, there is a good demand that is coming from the US and Brazil for the generic agrochemicals. So those players will see a demand uptick and also the margin uptick going forward, while the patented agrochemical players will continue to see challenges because farmers' preference will continue to be towards the generic agrochemicals.
Point. Thank you so much for joining in today with your take on what the outlook is for the chemical sector going forward and individual names as well. That's the word coming in from the JM Financial Chemicals analyst. With that, let's move on and welcome Nagraj Shetty from HDFC Securities to join us for a quick technical check on the markets as well. The Nifty continues to be higher. The Bank Nifty has turned into the green as well. Nagraj, good morning. Thank you so much for joining in. Do you think we could continue this spree in the green for the markets, or there could be some important levels to watch out for?
Been in a sharp uptrend, no doubt. Higher tops and bottoms on the chart is indicating buy on every dips in recent last 2-3 weeks. Market is in a strong uptrend. The resistance are being taken out one after another. After the breakout of 26,100, 26,300 is going to be the next target for the Nifty immediately, and more after that around 26,400 to 500 levels. So uptrend is likely to continue for the near terms. Any consolidation dips around the support is going to be a buy and dips opportunity.
Going to be a buy on dips opportunity. Nagraj, what about specific stocks?
Yeah, Hamans, I have two stocks. One is from Tata Communication. Chartically, Tata Communication has been in a consolidation phase over the last few weeks and currently placed at the edge of breaking above the important resistance of downtrend line. Currently trading around 1900, 1902 levels. One can look to buy at this point of time. And 1965 is going to be the immediate target for the stock price, and 1850 is going to be the 1860 is going to be the support stop loss for the stock price. And second one is CDSL. CDSL has been in a consolidation phase. It has witnessed upside breakout in last two sessions, placed at the edge of moving above the important resistance, currently trading around 1650 levels. Buying can be initiated in CDSL at this point of time. The upside target would be around 1730 levels. One can place a stop loss at 1610.
Since you mentioned CDSL, Nagraj, any word on BSE? That stock is also up for the third day, closing in on record high levels. Anything on that? Any on that stock?
Yeah, BSE has been continuously moving up. Recently, we have seen consolidation, minor decline. What we can observe on the chart is a limited decline and a sharp upside momentum. That is the characteristic of some strength in the upside momentum in the stock price. So the next overhead resistance to be watched is around 2980, 2990 levels in the near term.
Take that point, Nagraj. Thank you so much for joining in today. So that's a technical check on the markets. With that, we'll slip into another break. When we come back, we'll discuss the trends in the realty space with Liasis for us, Pankaj Kapoor on the other side.
Welcome back. 80 points higher currently on the index at 26,130. So still above the recent swing highs of 26,104. So good going for the index as of now. But a stock that's not doing well though is Intellect Design. And after the move seen in yesterday's trading session, the stock has come off a little, 5% lower. And among the top losers today on the BSE small cap at the lowest point of the day is Intellect Design Arena. But on to some market opinion then. CNBC TV18 spoke to Prashant Jain, who is the founder and Chief Investment Officer at 3P Investment Managers. Listen into excerpts of that conversation.
In my 35 years of this industry, I feel the most optimistic about the next decade at least. And there are 3 or 4 very simple reasons. One, I think post-COVID, as remote working has gained acceptance, non-software service exports have grown exponentially. And I think India has very little competition in that space. There is no country in the world which offers, as Nilesh said in his opening remarks, the largest pool of English-speaking people, technically qualified, digitally skilled, the ecosystem of services, and at our price points. So I think what has happened, India's current account deficit has collapsed because of this. I think we are also getting a second shot at manufacturing. We missed it the first time. I think we'll do better this time. Manufacturing is a much bigger opportunity, and we are making good progress in our areas of weakness. So 25% of Apple phones are being assembled in India, and we know companies are going public that are now suppliers to the largest aeroplane manufacturers in the world, the Apples of the world. So I feel pretty confident about manufacturing as well. And finally, I think the government has never played a more supportive role than what it is doing today. So net, I feel quite optimistic. I think we should certainly grow between 6 to 7%. I think we have potential to grow beyond 7% as well.
Okay, all right. That's the word coming in from Prashant Jain. We'll keep getting you excerpts of that conversation through the course of the day. But let's move on and discuss the trends in the realty space. There's a note by Reliance for us where they indicate that while luxury sales are doing well, it looks like we're at the peak of residential real estate sales. What else does the note say? We'll discuss with Pankaj Kapoor, who's the founder and MD at Reliance for us. Mr. Kapoor, good morning. Thank you so much for joining in. The trends that you have set out in your report do paint some grim picture that we are seeing. If you can summarize that for us, and do you think pan-India, the residential real estate sales will start seeing a decline versus last year from quarter 3?
Yeah, I'm saying that last 4 quarters, if you see continuously, there has been a marginal decline. Not too much, but 1%, 2%, 3%. Quarter on quarter. So overall, there is 7 to 8% decline from its peak at all India level, which is covering 75 cities across India. But the major concerns which I am seeing that is emerging in terms of the construction progress. So if you analyze the market, the marketable supply or the launch supply has been increasing post 2020 pandemic. And we have seen from 3 billion square feet to 3.5 billion square feet of a launch supply, which has got introduced in the market. And any given point of time, market used to maintain 65%. And during the RERA time of 2017, when it was getting introduced, it touched 75% of the marketable supply as a constructed supply. But that ratio has been declining. It is touching in some of the cities around 50% or below 50%, what clearly indicates that in tandem to the increase in the launch supply, the construction pace is slowing down and it is not growing, and which is talking or reflecting the structural issues in the real estate sector. That means the builders will see a delay in the revenue recognitions in the project. The execution default in the projects will increase, as well as there would be a impact of the inflation, which will shrink the margins of the developer. So in overall sense that, sales is one aspect of the market, but the construction and productions of of the real estate is actually not grown in tandem to the growth in the supply, and it has only slowed down all through from market used to maintain 2 billion square feet of constructed supply, which has been even today, while the marketable supply has grown to from 3 billion to 3.5 billion. So clearly indicating there is a slowdown in construction, and there could be several issues there, but what is emerging in the market is like the labor issues, delay in the approval, or there could be a funding issues in the projects which builders may be facing.
Mr. Kapoor, that was my next question. So, are you saying that a combination of all of these issues, be it the labor issue, be it the funding issue, is contributing to this execution issues that these builders are facing? And also, is this or are these issues being faced by the organized developers as well?
I'm saying that across the cities, across the markets, which we are seeing this particular thing, which is emerging, very hard to say. Different projects will have different kind of issues. Some may have approval delays. But what is emerging, while interacting with the developer, is that labor is a major concern. They're not able to increase the capacities to do the productions in line to the launch supply, largely because they are feeling the labor shortage. It's maybe very contradicting in the sense like the country like us is facing a labor problem, but that's emerging trend in the markets.
So, Mr. Kapoor, when we have conversations with the listed companies, their guidance is better than ever. They say, yes, we are towards the end of that multi-year real estate cycle that we talk about, but they have not been facing major issues as you have pointed out. Can you give us a sense of how is it in tier 2 cities versus bigger cities like Mumbai? Because Mumbai, the conversation suggested, could see double-digit growth going forward. Are we seeing this impact in certain geographies, or is it pan-India?
It's pan-India, although in the tier 2 cities, the launches has been much lower than the tier 1 cities. And so those market has seen a sharper decline. But, my own sense is that we are seeing a growth in terms of the sales and supply. We are not seeing the growth in terms of the constructed stocks. So, the builders' capacity to produce has not increased, but however, they have been able to launch more projects and they were able to register good sales. So the point of view is that from sales point of view, everything looks very rosy. Inventory overhang point of view, we are at one of the most efficient phase of that, which is at tier 1 cities is standing at 19 months of inventory and tier 2 at 15 months of inventory. So sales and inventory overhang point of view, market looks very, very rosy. And that's what getting reflected in the market. But productions in the market is not increasing in tandem to the increase in the supply, which should maintain a ratio.
So what would the impact be going forward? Just trying to understand, are we back to those 2016, 2017 times where we saw that major issue with delivery of apartments to buyers? And what does it do to pricing as well going forward?
Yeah, that is something which is actually emerging concern in the sense there would be a delays in the projects. Although the developers are taking a cautious approach, they are putting extended date when it comes to the RERA registrations. But having said that, if they sell the stocks and if they are delaying the project, then the inflation start seeping in. And one more thing which you see that the price increase across the projects has been very, very limited. So we are covering around 20,000 projects. Across these 20,000 projects, only less than 5% projects have shown greater than 10% of price growth. Majority of the projects have shown a price growth between 0 to 5%. If my inflation has been or increase is higher than the price growth, that means the margin will come into the pressure, and then the structural issue will come into place. Their cash flow will be strained. Their revenue recognitions because of the slowing down construction will be lesser or delayed. So I'm saying that overall cash flow will have a strained situations. I don't think so. We will be seeing the similar problem what happened when the project got defaulted and prior to RERA, because now the RERA has come into place. And the builder are liable to comply with the deadlines and their penalties and many other aspects, but the construction pace has to really pick up for them to avoid such kind of delay. Otherwise there would be execution default.
Mr. Kapoor, there were plenty of other questions to ask, but running out of time. Thank you so much for sparing time and joining us today with your thoughts on what's the issues plaguing the residential real estate market. Take a short break, but just before we do that, a quick reminder for our viewers. HSBC presents Future Female Forward Season 3, co-presented by Cognizant from New Delhi. We bring you the newest state chapter edition with powerful perspectives, action-focused agendas, and a collective vision for accelerated equity. Tune in on the 25th of November, Tuesday, 5:30 p.m. onwards for insightful conversations only on CNBC TV18 and CNBCTV18.com. Welcome back. 90 points higher now on the index. It's a good time to bring in Mangalam, who is here to decode the latest trends from the F&O space. Mangalam.
Well, it's a good trading session so far. If you're a bull, the Nifty is above the 26,100 mark. More importantly, above the 26,104 mark, which was the earlier 52-week high of the Nifty, and as a result of which now all eyes are on the all-time high of the Nifty, which is 26,277. We're just about 150 points away from there. What's good is, like we pointed out, the baton shifting between all contributors of the index has been fairly smooth. The previous two trading sessions, we had the Nifty Bank doing extremely well. Then yesterday, the IT index put its hand up and the Nifty Bank came back towards the end of trade. And today it is Reliance, which is up around 1.5%, the topmost contributor to the frontline index, while the other two take a bit of a backseat. Let's see whether they come back in the second half or not. The other part that is good for the market today, the advance decline is firmly in favor of advances. So that's something that is better than what it was yesterday. The India VIX is lower. That too tells you that bulls have some sort of comfort coming in. And the Nifty put call ratio, which was at a higher level of closer to 1.28, 1.29 yesterday, has moderated to 1.2. Yes, still at the higher end of the range, but moderation is something that the bulls would like. A lot of active options at the 26,100 mark, both call and put, telling you that at lower levels, closer to 26,000, there is support. So the support has moved higher. But at higher levels, around 26,250 is where supply is expected, which is closer to an all-time high. So that's something we will have to monitor. But if we do sustain above 26,250, then there would be a big wave of short covering. Why do I say that? Because the FIs are still 12% long and 88% short in index futures, notwithstanding the shorts that we've seen in index options as well. But a lot of individual stocks are on our radar today. Hitachi has seen a lot of well-bid moves. So a lot of long positions added on Hitachi, whereas a lot of the shorts were caught on the wrong side in names like CAMS, CDSL and IEX. All these stocks are actually seeing some shorts covering.
Oh, said CDSL, CAMS, all of them, and even BSC is doing well in today's session. Mangalam, thank you for that. Take a short break. On the other side, it's our special segment Under the Lens, and the stock today is Linde India. Stay tuned. Welcome back. Time for Under the Lens, and Sonal is putting Linde India under the lens today. Sonal.
Thank you so much for that. Linde India is in focus today. The stock saw a surge of 6% yesterday. But if you zoom out, it is still down about 5% over the last 1 year. So no major shakes that we have seen in this particular name. This is the country's leading manufacturer of industrial and medical gases. The company also builds cryogenic and non-cryogenic air separation plants. Its customer base is the who's who of India, from Tata Steel, SAIL, Jindal Stainless to HPCL, BPCL, ONGC and GAIL as well. It also supplies medical oxygen to hospitals across the country. On the financials now, a quick note that the company shifted from calendar year reporting to financial year reporting from FY23 onwards. In the first half of FY26, revenue stood at 1,215 crore rupees. This compares with FY25 of around 2,500 crores, slightly lower than what we saw in FY24 at 2,769 crore rupees. EBITDA for the first half of FY26 is at 479 crores, which compares with FY25 EBITDA of 765 crores, which was higher than FY24's EBITDA of 702 crore rupees. PAT for the first half at 274 crore rupees. FY25 PAT was 448 crore rupees, which compares with 426 crore rupees that we saw in FY24. About 65% of Linde India's revenues come from the gas segment itself. Now, over FY23 to FY25, revenue saw a negative CAGR of around 2%. Although EBITDA grew 10% and PAT slipped 2% for the company, and Bloomberg is estimating a strong turnaround ahead with projected sales CAGR of 23% and PAT CAGR of 31%. This is through FY27. The company's dividend payout has been steady at around 23 to 24% over the last 2 years. Cash flow from operations for FY25 was 584 crore rupees. Now, looking ahead, the company is targeting growth in pharmaceuticals, chemicals, paints, railways and defense. It is also expanding its mobile fill solutions for construction sites. A big opportunity going forward that lies in semiconductors, where Linde India is undertaking a massive capex of 3,700 crore rupees. But of course, there are risks, which include a slowdown in the capex cycle, rising competition and any delays in execution. On pure comparison, Bar has revenue of 312 crore rupees, while Linde India sits at 2,485 crore rupees. Linde is also stronger on EBITDA, PAT and return on equity. Those numbers are also there for you on the screen. It trades, now let's talk about valuations. It trades at 30 times at FY27 estimated earnings, which compares to 72 times for Bar. Now, two reasons for its expensive valuations. One, it has an MNC parent. Two, growth is faster than that of Bar, and that's why it's trading higher in terms of valuations. That also tells the story because Linde has a market share of around 27% versus Bar's 2.7%. Shareholding is stable. Promoters hold 75% stake, mutual funds around 6.3%, and FPI is about 2.4%. The other important thing to track for Linde will be the update on the case regarding Praxair India. Minority shareholders, they allege that Linde India unfairly transferred a potentially lucrative hydrogen value chain business to its unlisted joint venture partner, Praxair India Private Limited, without proper valuation or shareholder approval. Following investor complaints, the Securities and Exchange Board, or the SEBI, ordered a valuation of the business allocated to Praxair to determine if it was a material related party transaction. The SAT has upheld SEBI's order, directing Linde India to cooperate with the valuation process. It has also mandated that all information shared for the valuation be kept confidential, and Linde India is required to provide the necessary information for the valuation exercise. The valuation will determine if the transactions required minority shareholder approval, and the findings will be shared by SEBI, the company and the stock exchanges. So this will be the key to track for Linde India going forward. But with that, we'll take your leave on this edition of Trading Hour for today. So do stay tuned. Halftime Report is up next with all the market action.
Stocks see a broad-based push higher on the back of positive global cues. FMCG, utilities are the prominent gainers, while realty, healthcare trade soft.
Nvidia beats earnings estimates and provides an improved guidance, boosting market sentiment. CEO Jensen Huang dismisses talk of an AI bubble, pointing to strong infrastructure build-out. The stock of India partner NetWeb Technologies jumps.
Starbucks CEO Brian Nicole is looking to invest in India to build a coffee culture and the value chain, even as the American chain looks to open its 500th cafe in the country. Nicole also lauds the Tata partnership for its success.
Market veteran Prashant Jain says he feels most bullish in 35 years, but Kotak's Sanjeev Prasad laments India's timid 6 to 7% GDP growth. On IPOs, Jain warns most won't meet long-term investor expectations.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me and my colleagues Mangalam Manu as well as Ekta Batra. Good afternoon, guys, and good afternoon to our viewers as well. A day today where we are managing to hold on to 26,000, second consecutive day for the Nifty 50. So no complaining on that front. Around 100 points uptick is what we're seeing right now for the Nifty. Looking at the broader end of the market as well, that is also managing to hold on to gains and performing almost in tandem with the benchmark indices. So that is what we'll be keeping an eye out on. IT, that continues to see some bit of a gain as well today. 0.2% of gain coming in for the Nifty IT. Yesterday, we had seen a much sharper run-up coming in for the Nifty IT. But yes, a lot of moves coming in, especially in the names like Radico Khaitan, Natco Pharma, NetWeb, and these mid-caps are doing well.
Hi guys, yes, absolutely. Well, I think it's definitely a day for the mid-caps, or maybe a month for the mid-caps as well, because if you're talking only about the month-to-date performance, the Nifty is up around 1.67%, but we have the mid-cap index, which is already rallied around 2.2% on a month-to-date basis. So let's see whether that continues. But as of now, yes, we do have the Nifty, which is up around 95 odd points. We have the mid-cap index, which is up around 0.3%. Could be wanting more from the bank Nifty, so let's see whether that comes through or not. Good part is that the advance decline ratio is on the advancing side.
Less than 125 points away from an all-time high. Let's see whether that comes by or not. Good contribution coming in from index heavyweights. Let's get in our first conversation on the show then. Wonderla Holidays, the first management joins in. The company's near 600 crore rupee amusement park in Chennai set to open on December 2nd. The park, which has a capacity of up to 6,500 visitors per day, opens after many years of planning and construction. Arun K. Chitilapalli, who's the MD of Wonderla Holidays, joins us now. Arun, always a pleasure speaking with you, more so this time around because now we have a definite opening date for Chennai. So that takes away one question of ours where we would always ask you, when is the Chennai park opening? When is the Chennai park opening?
Yeah.
Now that it takes that question away, it adds a few more questions. Now the Chennai park opens, what are the kind of footfalls that you're expecting out there? You know, in the first year, in the second year where it will start to mature a little bit, what are the kind of average revenues that you expect per user from the Chennai park, the EBITDA and the payback period?
Thank you guys for having me on the show. Always a pleasure. Yes, we are opening our Chennai park on December 2nd. After 2 years of construction, but it's been in the anvil for almost 10 years. We signed the MOU with government of Tamil Nadu in 2015. So it's exactly 10 years since we signed the MOU, and we are, opening now. The scope of the park has changed, though. It is a much larger offering currently. It has many India First rides and things like that. The park can accommodate roughly about 1.2 to 1.5 million visitors a year. In the initial years, we are expecting to start with between 7 and 8 lakh visitors and growing to about 1 million visitors by year 3 or year 4. So these are the broad numbers that we are looking at. Revenue should be, ARPU should be in line with what we are doing in Bangalore, our best performing park. Tamil Nadu will be one of our largest markets. It is the largest market in South India. So, we have a lot of hopes for this project. It will be our flagship park.
And the payback? The payback, Arun?
I think EBITDA break-even we should do between year 1 and year 2, and payback should be between year 7 and year 8 kind of number.
Okay, all right. So EBITDA break-even probably in the next 1 to 2 years is what you're expecting. But Arun, just wanted to understand, you mentioned that the ARPUs will probably be as good as your Bangalore facility, which is basically your one of your flagship places. Your Q2 FY26 ARPU stood at around 1,478. So just give us a sense in terms of what we're expecting from Chennai based on this figure, an upside or maybe a downside.
So Q2 numbers are usually muted numbers. We have low ARPU in Q2. If you look at our Q1 numbers, it will be close to 2,000 rupees. So you can expect our ARPU in Chennai somewhere between 1,400 to 2,000. So we don't know exact numbers because it's our first year. We will be discounting for seasons, and we are trying to draw in more crowds because we are kind of new in the market. So we will be aggressively promoting it online and offline. So exact ARPUs will be hard for me to kind of give you right now, but it will be somewhere between 1,500 to 2,000.
1,500 to 2,000. You mentioned your MOU was signed 10 years ago for the Chennai, facility, or the Chennai park rather. But
Correct.
Give us a sense in terms of, what the pipeline is looking like in terms of future openings and whether there's going to be as much of a lag or whether this was a one-off.
Yeah, Chennai was unusual because we signed the MOU and, then GST came into the picture and the whole taxation on amusement parks changed significantly. What used to be 5% entertainment tax went straight to 28% entertainment tax, GST in 2017. And then Tamil Nadu government had a policy of having a 10% LBT on top of that, which made the project unviable. So we had to go back to the drawing board. And, so there's a lot of delays because of that. And of course, then after that, COVID also happened. So I think all these factors have created the delay for Chennai. We had actually bought the land for Chennai in 2017. So it's been 7 years since but we always knew that we will go to Chennai. It's one of our largest markets. Tamil Nadu is the strongest economy in the south. So, it'll be foolish for us not to be there.
Absolutely. Arun, spoken about everything in terms of the Chennai market and coming in. But I just want to talk about the overall growth of the company as well, right? Revenues in the first half of the year this time have been at around, growth has been at around 3 to 4%. Now, obviously, Chennai comes in on 2nd of December. You will start seeing those, revenues coming in the fourth quarter. What is the outlook for FY27? What are we watching out for in terms of the growth there, as well as margins? What is the expectation?
So Chennai, like I said, is going to be one of our flagship parks, like Bangalore. So it will contribute healthily to both top line and bottom line, hopefully from year one onwards. So you can expect that to come on top of our other numbers. I think our existing parks should give roughly between 3 to 10% kind of revenue growth for the year. Maybe even higher as well, depending on how the holiday season goes. And Chennai will definitely come on top of that. And we are also looking to expand to other tier 1 cities like Bombay and Delhi. We are in advanced stages of discussion with a few state governments, and we will launch further projects as well. But those will come much later. For the coming couple of years, it will be Chennai will be one of the biggest, additions in terms of revenues for us. And existing parks should also contribute handsomely.
All right. You said Bombay and Delhi. I will be very interested in how that pans out because we've been discussing visiting your parks in Bangalore, in Bhubaneswar, and now Chennai as well. If it comes to Bombay, the plans actually materialize as against us discussing this on the air. I was just doing some back-of-the-envelope calculations. You said 7 to 8 lakh visitors, an average revenue per user between 1,500 to 2,000. So Chennai Park, roughly for the first couple of years, should give you about 150 crores in terms of revenue. That number gradually moving to about 200 crores. Would that be a fair estimate?
Yeah, something like that. I mean, I don't know. I can't give you, hard numbers, but let's see. And something along those lines should work.
Right. And how have footfalls been in October and November so far? The first half, they were slightly subdued because of weather conditions, because of a lot of the things that happened. Second half, October, November, how has that started? And where do you expect to end this year with when it comes to overall footfalls?
I mean, the Q1 for us was a bit of a washout. Q2, we have done much better. I think Q3 is also doing better. We are stronger. We are growing over the last year. But then again, Q4 is also another wild card. Let's see. We hope that numbers will improve. If Q4 does well, then of course we will definitely grow. We are expecting between 3 and 8% footfall growth for the year.
Okay. All right, Arun, we're going to leave it on that note, and we're going to keenly wait for any kind of plans for Mumbai and whether you're going to open those parks there. So we're waiting for that timeline and details there. Thanks very much for joining in and speaking with us. So that is Wonderla. They are expecting around 1,500 to 2,000 rupees in terms of an ARPU for their Chennai park. And the visitors should be around 7 to 8 lakh visitors per year is what they are estimating. We'll take a short break, but up next, Manglam will get us the key highlights of the exclusive conversation with Starbucks CEO Brian Nichols. Stay tuned. Welcome back. Well, for the markets holding up steady, so we have the Nifty, which is up around 92 odd points. The Bank Nifty, like we mentioned, is just about consolidating at this point. Let's talk about the consumer discretionary space. We have Gaurav Jogani, who's the director at GM Financial Institutional Securities, who looks at that space, joining in to discuss his views. Gaurav, hi. Thank you very much for joining in. Well, we are fresh. We're coming out fresh from the Q2 numbers. So just wanted to get your sense in terms of the reading of the entire FMCG basket. Was it in line, above or below your expectations in terms of earnings? And what are you extrapolating for the second half?
Sure. Thank you for having me. I think if you compare the staple sector versus the consumer discretionary sector, staples kind of has grown in the high single digits kind of a number. But if you look at the consumer discretionary space, that continues to grow well at around 17-18%. But if you see the growth is largely skewed towards the jewelry segment and to some bit to the value fashion segment. Now, mind you, this quarter we also have an early Durga Puja that has kind of helped most of the value fashion retailers. On the flip side, if we look at the mid-premium apparel players or the footwear players, they kind of struggled. Also, there was a part impact of a GST transaction that was happening, and some of the consumers waited till the rate cuts actually happened, and hence you saw some of that impact. But largely, the growth, I would say, was muted to a larger part and started to pick up towards the end of the festive season.
So all said and done, Gaurav, what do you think are best placed over the next couple of quarters in terms of recovery post GST, the trends that continue from the second quarter, and the valuations where you do see some more upside, at least from an earnings point, if not a multiple re-rating standpoint?
Sure. So I think the jewelry sector we expect to continue to do well. If you also hear commentaries from most of the jewelry retailers, the Diwali season has gone really well for them, and that continues to do well till now. We also expect a resurgence in the performance for some of the footwear players, especially on the casual front. Some players like Metro or maybe even Campus to that extent. Value fashion, I think, can have a bit of muted quarter given that the festive has already gone by for them. On the other hand, I think QSR, I would say, is still not out of the woods. That is one segment, that has continued to reel under pressure for some more time. So I would say our best bets in this space would be more towards the jewelry players, the casual footwear players, and also the grocery players that we like here.
And in jewelry, would you back the leader or would you back the second, third players which are trading at a discount to the leader?
We will bet the number one and the number two player here. Clearly, the leader is continuing to do well, and most of the concerns now are behind them. I think there was a lot of hue and cry in terms of the huge base that they had, and they still continue to grow well there. And I think the number two player is trading at a very steep discount to the leader. So we will back both of them.
Okay. Gaurav, what's your view coming in on the alcohol space as well? We just had a flash at the bottom of the screens for Tilak Nagar Industries making that big entry into premium whiskey. What are you liking over there? Any view here?
Sorry, Alcobev is something that I don't track, so won't be able to.
Okay, and then your thoughts on maybe something like a trend or on that front, on the retail side, how do you see retailers shaping up?
Yeah, so retailers, I think, should do well in Q3. I think what has happened over the past couple of quarters is that we had seen demand pick up, especially on the rural side. Rural has really started to pick up. On the other hand, the recent, the rationalization in terms of the income tax rates, the GST rationalization, all are coming together to shape up the demand for the value fashion or the overall fashion space. We believe, that it is too early to call it as a secular trend, but early signs are showing up. Trend has seen some deceleration, but I think I'll not be overtly worried about the long-term story there. The picture there is intact. Given, they have a very huge base, some kind of deceleration was already expected there.
Gaurav, I know you can't talk specific stocks, but what is your reading about the paint sector, considering the recovery that we saw in Asian paints this quarter?
See, I think clearly the paint sector, if you see, the leaders might has now showing up. They did had some problems in the past couple of years in terms of the inventory, etc. that they had, plus the new players taking away some share. But now with Q2 going out, which also was impacted partly by the monsoon season that we saw, going ahead, things should be improving at the margin from them from here on.
Right, so you are betting on the incumbents. Just a final question before we let you go, Gaurav. In the FMCG space, a large part of value is created when there is a leadership change that happens as well. And we've seen that a lot in this year, be it HUL, Britannia is likely to get a new leader post Varun Berry. Then you have, Nestle, who has Manish Tiwari. So across the board, there are a lot of leaders, new leaders that have come into the FMCG space. Any particular stock where you see a fair amount of value because of this leadership change coming in?
I think HUL would be the one, there is some expectation with the leadership change that they should get a new boost, especially, Priya being already part of the HUL in the past. And she's done very well with the laundry space that she handled last time around. So I think that is one area I think you could see a meaningful value creation over the times to come.
Okay. You see meaningful value creation coming in from HUL, obviously with these leadership changes that have come in. You said you don't like the QSR space, right? You are not too positive on this one. But then would you look at the new age side of the names, maybe an Eternal? Is that something on your radar as well? Eternal, Swiggy, any of these names?
Yeah, I think my colleague Swapnil, he does cover that space. But clearly, both Eternal and Swiggy are doing well in the food delivery space. But even there, if you see the growth rates for the food delivery segment, that has kind of decelerated from an earlier 30 to 40% levels to the 17-18% levels. Our reading of the overall food services or the eating out industry is that the eating out market itself has not grown over the past 1.5 years. And that has a lot to do with the overall consumer sentiment being benign, and especially consumers gravitating towards the value end of the segment. Now, on the one hand, we see the value offerings continue to increase. However, the transaction size have not increased in the same pace. Hence, overall revenue growth has kind of remained tepid.
Out of curiosity, will Lenskart come under your coverage if at all you all decide to cover, or will it be your colleague?
Yes, it will be me, yeah.
It will be you. So, I mean, just offhand, 70,000 crore market cap, how do you like the opportunity here?
See, definitely it's a very good story. I mean, the kind of infrastructure that they have created will be very difficult to replicate. I was lucky enough to, have a tour of their entire factory that they had made. And I have in past done visits for multiple factories of other FMCG or other players. It's really something unique that they have created, because of which they are able to dish out very quality products at very value prices. See, valuation again is a perception, but if you look at the longer term story, we really like it. At the current market price, I would not really like to comment anything there, since it's not under active coverage as yet. But I like the overall story, I would say.
All right, Gaurav, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the view coming in on the consumer discretionary space, FMCG space from JM Financial. We'll take a short break. But up next, we'll get you those highlights from that exclusive conversation with Starbucks CEO. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. The Nifty managing to hold on to 26,150 levels. But Starbucks CEO Brian Niccol says that India is one of its fastest growing markets as the company prepares to open its 500th store here in the country. In an exclusive conversation with CNBC TV18, Niccol outlines India's growth plans, store expansion and the impact of tariffs on the company. Mangalam is here now to highlight the exclusive conversation that we managed to have with him. Mangalam, over to you.
So it was a text interview that Brian Niccol gave to us, and on multiple factors, he did say a lot of things. Let's start with India. He said that India is one of their fastest growing international markets, and that's not all. They remain committed to growing their portfolio in India itself. In fact, they are very soon opening their 500th coffee house in India, which will offer the second Starbucks Reserve coffee experience in the market as well, catering to India's growing community of coffee enthusiasts. And he said that over time, they're looking at expanding the Reserve as well as overall coffee house formats in India. With regards to the partnership with Tata's, they did say that they're proud of their partnership with Tata and the success that they've seen in India. This is a key partnership for them, and over a decade, they've worked closely with the Tata's to expand and elevate India's coffee industry and build a strong coffee culture in India. As they continue to grow together, the focus will be to continue to create a differentiated and elevated coffee-first experiences for the customers. Was there a problem with regards to US tariffs, the revisions out there affecting their sourcing from India? They said no, there is no impact on sourcing from India. In fact, coffee in India is sourced and roasted in India, and India has a localized supply chain with most ingredients itself sourced from India itself. The question on what is India's role and significance in Starbucks' overall global strategy, Brian said India is a key part of their overall global back to Starbucks plan. In fact, they're here to invest, share and grow with India, building India's coffee culture for the long term. As part of this strategy, they are reaffirming their long-term commitment to the market, to farmers, to customers, to coffee culture and to India's future. But India is not the only thing that we spoke about. We spoke about China and other markets as well. And he said that the China JV is about accelerating growth and not fixing any problem out there. The team in China continues to drive demand in a competitive marketplace, delivering consecutive quarters of positive comps and continued store growth. For them to succeed in each market, they must show up with their global scale and local relevancy, ensuring that every coffee house they operate in delivers a great experience for their customers and the partners. So that was the exclusive conversation across a whole host of topics that CNBC TV18 had with Brian Niccol.
Okay, well, important takeaways coming in there for Starbucks and their India plans. We need to take a short break on that note, but up next, Mangalam will be focusing on the F&O setup at noon. We'll also be talking to Somil Mehta of Mirai Asset Sher Khan for his technical trades. Stay tuned. Welcome back. Well, some amount of profit booking which is coming into stocks such as Asian Paints. So that one is the top loser on the Nifty this afternoon and down around 1% And a couple of other stocks such as IndusInd Bank, which has lost around 2% this week, is seeing a little bit of pressure. And a couple of these IT stocks which were gaining yesterday are now coming under the hammer. So HCL Tech, Infosys, both these stocks down anywhere between 0.2 to around 1%. But let's go across to Mangalam now. He's joining in from the FNO desk to tell us what he's looking at.
Well, the markets of the day is high. The Nifty at least 166 thereabouts, a considerable distance away from the October high of 104. So it's at a 52-week high. Now all eyes are less than 100 points away from the all-time high, which was hit in September 2024, which was 26,277. So everyone will be watching that. And there are ingredients which are coming in place for the market to actually move higher towards the end of this year. And why do I say that? Because, one is the smooth shifting of batons when it comes to contributing sectors. A couple of days ago, it was the Nifty Bank, which continued to do well. Now that's pausing for breath by not gaining as much as the frontline index. Yesterday, it was a big contributor in the second half of trade. The IT index, which gained about 2% in yesterday's trading session, again, is not falling. And today's top contributor is Reliance, which is up almost 2% in today's trading session. So, every day you have one or the other sector which is standing up for the might of the Nifty, and towards the end we see support coming in from the other big sectors as well. So that's a positive. Bulls would feel a lot happier today because, one, on the advanced decline front, we have more stocks which are advancing than the number of stocks which are declining. Secondly, with the market having moved higher, the India VIX has come down as well. So that's a positive sign. And the third part, we were talking about how put-call ratio at around 1.29, 1.3 was slightly on the overheated side. It's moderated a little to around 1.2. Yes, it's towards the higher end of the range, but that typically happens when the market moves with the kind of gusto that the Nifty has been moving, just about 100 points away from an all-time high. A couple of interesting spots right now. We have the 26,100 put, which has seen a fair amount of writing, telling you that the support at 26,000 is now firmly intact. So the support has moved higher from 25,750, 25,850 to now 26,000. So that's firm. The second part is that 26,100 call has seen some writing for a premium of 171 rupees, telling you that there may be some supply as we move towards an all-time high around that 26,270 mark. So we'll have to watch out for that. But if we sustain above higher levels, there could be a bigger move which would be provided by the fuel that shorts will give. The FIs are still 88% short in index futures, so we'll monitor that. Individual stocks, a lot of them are seeing a lot of long build-up today. So we have Hitachi Energy, which is up around 3%, a lot of long build-up backing it. And then we have a lot of these capital market players, the likes of CAMS, CDSL, as well as IEX, which is an exchange, actually seeing some bit of short covering. So these stocks are fairly, well traded in today's trading session, with an up move led by some shorts who are covering their positions.
Okay, Mangalam, thank you so much for that. Surely we'll be keeping an eye out on the stocks as well as the levels you mentioned. But let's also bring on board Saumil Mehta, Mirae Asset Share Khan, joining us to now talk to us about the technical front of the market as well. Saumil, good afternoon. Yesterday while we spoke, we were talking about the 26,000 mark and it's sustaining. Surely, clearly today it's above those levels, 26,100, comfortably above that. And Mangalam was rightly highlighting, right, that just 100 points now from that all-time high level. What are you keeping an eye out on in terms of Nifty, Nifty Bank, and any change in your support?
Good afternoon, Vinny. Absolutely. We were talking about it and it happened. I am absolutely excited on that. Now that we have got a breakout above the 26,100 mark, which was very important. And this is a great breakout with a lot of sectors, a lot of heavyweights participating. That's a very good start. I think the next level on the target side is 26,700, 26,800 in the medium term outlook. But in the very short term, I'll be expecting 26,400 levels, 350, 400 levels in the very short term. Support level still remains the same. The previous swing low, which was around 25,860, and below that 25,740. So these are the two levels I'm looking out for, and buy on decline should be the strategy. But our focus should be more on sector specific rotation. Right now, capital market theme is going great, banking is going great, and for banks, it has already been outperforming, and I think it will keep up outperforming. From here, support for Bank Nifty is around 58,600 and 58,200. So these are the two supports, and my targets is 60,000 for Bank Nifty.
Okay, 60,000 for Bank Nifty, but which are the stocks which would take it to that level within the Bank Nifty, Somil?
So for Bank Nifty, I have PSU banks. Union Bank is looking great to me. It has been consolidating since last a week, but that stock target for that stock is around 165, 170. But I have two other stocks one is from the capital market theme, that is CAMS. CAMS has just broken out of a small flag pattern on the upside, taking support at 200 daily moving average. Great setup. So stop loss would be around 3,924. Target would be around 4,250. The second stock which I have is Masgao Dock from the defense pack. Again, the same pattern, a consolidation about the 200 daily moving average and a breakout about that today. Stop loss would be around 2,770 and target would be 3,075.
Okay, Somil, thank you so much, for joining us on the show, talking to us at the market as well as in terms of individual stock names as well. But viewers, on that note, we're actually going to slip into a very short break. Up next, we'll get two excerpts from the conversation with Prashant Jain of 3P Investment Managers. Stay tuned in. Welcome back to Halftime Report on CNBC TV18. Nifty trading at the day's highest point, 26,170 levels. But let's move on. And India is capable of growing faster than 6-7%. That's the word coming in from Prashant Jain, founder and chief investment officer at 3P Investment Managers. Also adds that he prefers large caps over small and mid caps. Listen in to the excerpt from that conversation.
I compare India with its own past, and I feel optimistic about that. And so, I think 6 to 7% should not be difficult, but I think we are capable of growing faster. In 2000, blue-collar salary in Mumbai was 4,000 rupees a month. A starting software engineer's salary was about 30,000 rupees a month, 8 times that. Today, the both have converged. There are far more blue-collared in India than white-collared. Only 25% of Indians earn a fixed wage. That number globally is 50 to 75%. So I feel very optimistic about the rising purchasing power of blue-collared workers. I think in the past, if you see, I recall that when 3-year returns turned zero or negative, that is when the equity flows to markets will start moderating sharply. I think we have had 1 year of zero returns. As Sanjeev said, if another year goes by, then you could see some moderation. But I think the mutual funds, the regulators in India have done a phenomenal job at educating the investor about the long-term potential of equities. The biggest supply of stock is coming from the primary market. Foreign selling hardly matters now. You are getting 500,000 crores of fresh money into the markets every year, including mutual funds and other formats. And that is the supply of new stock. Let foreigners sell 50,000 crores, 1 lakh crores, it's okay. It is 10-20% of the supply. And I think that supply of new stock moderates itself to the demand. So I would say if flow goes down, the supply of new stock would also go down. So I think these markets are in a low volatility, lower moderate kind of returns. See, I think what has happened is this has been a narrative-driven market because pre-COVID there were 3 crore demat accounts. Today there are 20 crore demat accounts. And these 17 crore new demat accounts, they have no history. They had no accounts in the stock market before 2020. In 2020, the small mid caps fell the maximum. They fell 70%. The large caps fell 40%. Economic sensitive sectors fell a lot, and most PSUs were in economic sensitive sectors. So whatever fell the hardest has given the maximum returns. So 7 out of 10 investors have experienced these high returns, and they are wrongly extrapolating that, in my opinion. So I feel these themes have got there is business merit in those themes, but I think investment merit is clearly missing. So in my mind, clearly it is large caps over small mid caps. And look at it, in Nifty stocks, there is no supply of fresh stock. All the supply is in non-Nifty stocks. So I think that also favors large caps outperforming. I like large banks, I like insurance, I like software also. I am not so negative. Pharma is good, automobiles is good. I would be very cautious on consumer staples, white goods, brown goods, companies, even retail companies. But even tobacco, telecom, oil and gas, utilities, these are also sensibly valued here. Last commentary, we described the current states of markets as a dialogue which is attributed to Ajit. I don't know which movie it is from. कि इसको लिक्विड ऑक्सीजन में डाल दो, लिक्विड इसको जीने नहीं, ऑक्सीजन इसको मरने नहीं देगी और लिक्विड इसको जीने नहीं देगा. So I think these markets are like that. The rapid demand of or flow of money to equities is not letting it go down, and the rapid supply, equally large supply of IPOs is not letting it go up.
Welcome back. Well, 26,171 is currently where the Nifty is at. So at the high point of the day, gaining steam up around 120 odd points currently for the Nifty. But we have the mid-caps also not doing too badly. So not in line with the front lines in terms of gains. But nonetheless, the mid-cap index is up around 0.3%. And what stands out is that the advance decline ratio is still holding on the advances side. But let's see whether that the graph comes up. It's narrowing a little bit, so do watch out for that. But in terms of specific stocks, we do have a couple from the broader markets which are gaining. So, for example, transformers and rectifiers from the mid-caps is up around 4%. We have Aether Energy, which is up around 1.3% on good volumes as well. And in fact, had a good week. It's up around 6.8% at this point on a week-to-date basis. That's on the broader markets. But on the Bank Nifty, that's picking up pace as well. Remember, when we started the show, the Bank Nifty was flat and now is at the high point of the day. It's a wrap on the show. Stay tuned. Business Lunch up next.
Stocks see a broad-based push higher on the back of positive global cues. FMCG, utilities and energy are the prominent gainers, while realty and healthcare are soft. Nvidia beats earnings estimates and provides an improved guidance, boosting market sentiment. CEO Jensen Huang dismisses talks of an AI bubble, pointing to strong infra build-out. The stock of India's partner, Netweb Technologies, also jumps. Starbucks CEO Brian Niccol is looking to invest in India to build a coffee culture and the value chain, even as the American chain looks to open its 500th cafe in the country. Niccol also lauds the Tata partnership for its success. Market veteran Prashant Jain says he feels the most bullish in 35 years, but Kotak Sanjeev Prasad laments India's timid 6 to 7% GDP growth. On IPOs, Jain warns that most won't meet the expectations of long-term investors. We're exactly 100 points away on the Nifty for that much-awaited all-time high. You're watching Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. Building on to the gains is the markets from yesterday's trading session. We did well yesterday, continue to do well today, and the Nifty currently 26,177. At the highest point of the day, exactly 100 points away from 26,277, which was the record high that it had hit on the 27th of September 2024. So good going for the index. The Nifty Bank already at record high levels, contributing to the gains in today's session as well. It's a new record for the index. 59,370 is now where the index stands, and a lot of analysts already projecting targets of close to 60,000 now for the index. The broader markets very well for themselves as well. Good going for the mid-cap index, for the small-cap index. And the Nifty contributors, the gains on the Nifty besides the banking names, is led by Reliance Industries as the top contributor to the gains on the index. In today's session was contributing more than 50 points. UBS came out with a very bullish note in today's session, so close to 2% higher on Reliance Industries. And there you can see the gulf between Reliance and the other contributors, HDFC Bank, Axis, iShares, all of them doing well for themselves in today's trading session. But just before we move on, two names not doing very well in today's session, and both of them are recent listings. Grow is one of them, was down in a 10% lower circuit in yesterday's trading session. Continues to trade lower today as well. The losses range anywhere between 7 to 8%, and in this two-day fall, the stock has dropped. Oh, now the stock has extended its losses, now down 10%. Is Grow heading towards another lower circuit? So 20,000 crore worth of market cap gone for Grow in the last two sessions. And the other one is, of course, Physicswala. That is after a stellar listing, was down around 7-8% yesterday. Is down another 15% on last check in today's session as well. There you can see 13.5% lower on Physicswala as well. So the new listings not having a very good day, but overall a pretty good day for the market so far. Now the stock that has been in conversation for the last hour of yesterday's trade was Sammaan Capital, and that is after the company issued a clarification as the Supreme Court questioned the probe into the India Bulls housing finance case. Gaurav is here to tell us more on this. Gaurav.
Well, yes, it was not a good day for Sammaan Capital yesterday, because let me take you back in time. What happened is that in 2019, there was a PIL filed against Sammaan Capital in the Delhi High Court, and in February 2024, Delhi High Court actually dismissed the petition. Apart from that, when we look at the timeline again, in October 2024, there was an appeal made against Delhi High Court's judgment in the Supreme Court of India, and that is what is actually causing this trouble for Sammaan Capital right now. But company has made a few things very clear. First is that there is no open investigation pertaining to the allegations in the PIL against Sammaan Capital is what the company is saying. Apart from that, they say that no wrongdoings have been found against Sammaan Capital, even in the affidavits filed earlier. Third is that the Supreme Court's judgment or any comments that were given by Supreme Court were not made in the negative sense for Sammaan Capital. In fact, Supreme Court also said that we have not expressed any opinion against Sanman Capital yesterday. And lastly, company also said that the proceedings that we are seeing right now in Supreme Court are against the erstwhile promoter Mr. Gehlot, who is now settled in London. Now, is Mr. Gehlot still a part of company? The answer is no. In 2023, company said that he has sold all the shares and he holds 0 share in company right now. And the company is professionally run company and it is not a defaulter. Apart from that, it also raised some speculation about the deal with IHL. Remember, it was going to be the biggest deal, given that they were going to invest more than 8,000 crores in the company and be the promoter. Company said that both IHC and Sanman Capital continue to remain focused on the deal. So definitely, company is optimistic about it. And the valuation, they also seem to be in favor for the company right now at 0.6 times price to book value. And on back of that, we will be watching out on what happens in Sanman Capital in coming days.
Gaurav, thank you for that update. Now, 1% lower for Sanman Capital. Mind you, the stock is in the F&O ban today, so no new positions on this stock. Now, in a confirmed CNBC TV18 news break, the Committee of Creditors for JP Associates has approved Adani Enterprises' resolution plan for JP Associates. Now, Ritu is here to tell us more on this. Ritu.
Well, it is now official, and just as we've been reporting, the Adani Group has been declared the successful bidder for Jaiprakash Associates under the bankruptcy law. Adani Enterprises has notified exchanges that its resolution plan received the highest number of votes from the COC, and lenders have now issued a letter of intent to the company as well. Now, as we have been reporting, about 90% of the lenders, led by the National Asset Reconstruction Company, voted in favor of Adani's plan, and NARCL alone holds about 86% of the voting share. So its backing effectively sealed the outcome, even though a small group of lenders abstained from voting, but that didn't really have any bearing on the final outcome. Now, as to why Adani was picked despite Vedanta offering a higher sum overall, well, sources have been telling us that the higher upfront payment in the Adani proposal made all the difference, where the Adani Group had offered 13,500 crores overall, but that included 6,005 crores upfront and the rest after 2 years. So on a net present value basis, their offer was assessed at around 12,000 crore rupees. Vedanta's bid was higher in absolute terms, about 16,000 crores, but only 3,770 crores was upfront and the rest was staggered in 5 years. Now, Vedanta, we understand, did try to restructure its plan to increase the upfront portion, but the lenders and the resolution professional did not accept these changes because the Swiss challenge process had already concluded. Now, whether Vedanta chooses to challenge this outcome remains to be seen. For now, the resolution professional is going to place this resolution plan before the NCLT for the final nod. Important to note, JP Associates is facing claims of more than 57,000 crores. So even with this offer, lenders are staring at a staggering 76% haircut.
Ritu, thank you for that update there. Now, this is a liquid oxygen market. That's the word coming in from Prashant Jain of 3P Investment Managers, who told my colleague Prashant. He also commented on how flows and the IPO frenzy was not letting the market move higher. Listen in.
Last commentary, we described the current states of markets as a dialogue which is attributed to Ajit. I don't know which movie it is from. कि इसको liquid oxygen में डाल दो. लिक्विड इसको जीने नहीं, ऑक्सीजन इसको मरने नहीं देगी और लिक्विड इसको जीने नहीं देगा. So I think these markets are like that. The rapid demand of or flow of money to equities is not letting it go down, and the rapid supply, equally large supply of IPOs is not letting it go up. I think I feel that in majority of these issues, investors over long periods will lose money. The expectations are likely to be unmet because we are seeing many weak quality, average quality companies with suspect fundamentals or not so great fundamentals going public at crazy valuations. So I think in a lot of these issues, long-term expectations will be not met. At the same time, on the positive, I think from an economy's perspective, it is positive because all kinds of entrepreneurs, large, small, good, bad, I mean, everyone is getting lots and lots of money. Something similar has happened many times in the past. 92 was like this, 2000 was like this, 2007 was like this.
All not good examples.
So it is not happening for the first time. And I mean, I would again come back to the same thing that investors have to be very discerning in where they are participating. Long-term outcomes, I think, will be very disappointing. I feel a lot of companies will have very weak supervision over time. Because if you look at some of these companies, the Ps will sell out in next 1, 2, 3 years. The promoter stakes are split over few individuals and they are in low to mid single digits. They will also cash out. So will these companies, all of them professionally governed companies, ultimately as they turn out, will they be well managed or no? I think that is another issue that one should consider when one is participating in these markets.
That was Prashant Jain on a whole host of subjects there with regards to the markets. Now, Mahindra & Mahindra's Investor Day is underway and the company has set out ambitious growth targets. The Mahindra Group is targeting organic growth of 15 to 40% across businesses till 2030. Now, it aims to be the world's fastest growing SUV brand, the #1 LCV brand, and targets 5 times the AUM growth in lending and a turnaround in Tech Mahindra by financial year 2027. That's the Mahindra Group for you at the Investor Day. Take a short break. More news and updates on the other side.
See.
Welcome back. Now, Starbucks CEO Brian Niccol says India is one of its fastest growing markets as the company prepares to open its 500th store here in the country. In an exclusive conversation with CNBC TV18, Niccol outlines India's growth plans, store expansions and the impact of tariffs. Mangalam is here with the highlights of this exclusive conversation. Mangalam.
Indeed, it was a written interview that Brian Niccol had given to CNBC TV18 and spoke on a whole host of factors. Let's start with India. On India, he said that, India is one of their fastest growing international markets and they remain committed to growing their portfolio here. In fact, they're soon opening their 500th coffee house in India, which will offer their second Starbucks Reserve coffee experience in the market, catering to India's growing community of coffee enthusiasts. Over time, they will look at expanding the Reserve portfolio as well as the coffee house formats. In fact, on the partnership with the Tatas, they said that they're proud of this and, the success that they've had with the Tatas in India. It's a key partnership for them as well. Over a decade, they've closely worked with them to expand and elevate India's coffee industry and build a strong coffee culture. As they continue to grow together, the focus will be to continue to create this differentiated and elevated coffee-first experience for the customers. But more importantly, on the business front, how have US tariffs affected sourcing from India? Brian Niccol said there has been no impact. In fact, coffee in India is sourced and roasted in India, and India has a localized supply chain with most ingredients sourced from India itself. The question on what is India's role and significance in Starbucks' overall global strategy, the answer was very clear. India is a key part of their global Back to Starbucks plan, where they're here to invest, share and grow with India, building India's coffee culture for the long term. As part of this strategy, they're reaffirming their long-term commitment to the market, to the farmers, to customers, to coffee culture and to India's future. But beyond India, on China and other markets, he said that the recent made joint venture in China was about accelerating growth there and not fixing any problem there. In fact, the team in China continues to drive demand in a competitive marketplace, delivering consecutive quarters of positive comps and continued store growth. For them to succeed in each market, they must show up with their global scale and local relevancy, ensuring that every coffee house that they operate in delivers a great experience for the customers and their partners.
Interesting, Mangalam. Thank you for that update. Starbucks gearing up for its 500th store in the country. The other major talking point of the night and for the morning as well has been NVIDIA. And the kind of results that the company has reported that sent the stock soaring. 5% in extended trading. And of course, the results, everybody knows they were better than expectations, so was the guidance. But it'll give you a broader picture here. Now, in the first 9 months of this fiscal that NVIDIA has, it has sales worth around about $150 billion. It has profitability of close to $80 billion. For the fourth quarter of this year, it is projecting sales of around $65 billion. Now, if that guidance holds, it will have a full year sales figure of over $200 billion and net profits of over $100 billion. Now, compare that, just to give you an illustration of how big NVIDIA is. Now, the full first 9 months, NVIDIA has a profit of $77 billion. Now compare that to the sales reported by Intel and AMD. They compare to around $57.4 billion. So NVIDIA is earning more than what its closest rivals together are managing to sell. Now, the markets, of course, are also breathing a sigh of relief because of remarks made by Jensen Huang about the AI bubble, which resulted in this recent Wall Street sell-off. And he mentioned that he's heard this conversation, but from their vantage point, they see something very different. And that is when the markets are cheering those remarks. And because the CEO of the world's largest AI chip supplier is saying that all is well, the markets are taking note of it. Now, NVIDIA very recently hit $5 trillion in market cap. And this journey was completed fairly quickly in just about 2.5 years. They had $2 trillion in February of 24. We hit $3 trillion in June of 24. Then we had a bit of a gap. And then in July of this year, we hit $4 trillion on NVIDIA's market cap, and in just 79 trading sessions on the 29th of October, NVIDIA hit $5 trillion in market cap. Now, when we hit $4 trillion, we tried to tell you what if NVIDIA was a country. Today, we tell you what if NVIDIA was a stock market. If that $5 trillion, there's a bit of a sell-off that NVIDIA had seen before the results. So the market cap fell below $5 trillion, and even at $4.5 trillion, the NVIDIA ranks only next to India, Hong Kong, Japan, and China, and of course the United States. of course that being an outlier, but still the 6th largest market in the world if Nvidia was a stock market. Now, another illustration of how big Nvidia is, just about 3 years ago in the 4th quarter of FY23, Nvidia had reported sales of $6.5 billion. The current quarter projections are 65 billion. That's a 10x jump in just 3 years. Now, this exponential growth has shown up in the stock price as well. Now, between 2020 and 24, the share price of Nvidia doubled or maybe even tripled in 4 of them in that 5-year period. The stock, even in this year, is more than doubled from the tariff lows that it made in April. But such was the kind of damage that was inflicted during that 1-week tariff tantrum period in April that even today, after that kind of a move, the stock is up only 35% year to date. CLSA had retained its high conviction outperform rating target of $270. Now, despite the kind of move that Nvidia has had, only one analyst out of 79 who track the company have a sell rating on the stock. Now, if CLSA's target you believe that is higher, there are targets even higher. Some of them even as high as $350 on the stock. So, in this David versus Goliath battle, the David keeps getting better and bigger. And as a result of Nvidia's earnings, all the other chip makers also rallied in after hours trading. And that is when the Nasdaq futures are also doing fairly well for themselves in today's session. Nvidia has very categorically stated that the AI boom is here to stay, and they want the largest pie of that, one chip at a time. That's Nvidia for you. Take a short break. More news and updates on the other side. Welcome back. Moving to the big political news of the day. JDU leader Nitish Kumar took oath as the Chief Minister of Bihar for the record 10th time. He is administered the oath of office and secrecy by Governor Arif Muhammad Khan at the Gandhi Maidan in Patna. Prime Minister Narendra Modi and Home Minister Amit Shah were among the bigwigs who attended the swearing-in ceremony. Meanwhile, Samrat Chaudhary and Vijay Kumar Sinha took oath as deputy CMs for the second time in a row. The BJP emerged as the largest party with 89 seats, while the JDU won 85. The NDA's overall tally crossed the 200-seat mark in the 243-member Bihar Assembly. With that, we take your leave on this edition of Business Lunch. From me and the team, thank you for watching. Midcap radar on the other side, with the Nifty still 100 points away from its record highs.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Mangalam Malu. And what a day, right? That rally that we saw yesterday has continued. We are sitting with gains of 150 points. Nifty is above that 26,200 mark. The mid-caps, though underperforming the benchmark, still doing well. But the small cap index also is contributing to a lot of gains that we are seeing overall.
If there was a expression to say all guns blazing, today is the day. 26,200 on the Nifty. Not only is the Nifty doing well because of Reliance, which it has been through the course of the day, the Nifty Bank has picked up as well, and that's because of HDFC Bank. So the second highest weight on the index, currently doing extremely well. And we aren't seeing any sell-off in the IT pack after a big up move that we saw yesterday. That continues as well. So we'll tell you all the top stories that we're tracking this afternoon and get cracking on the individual stocks and markets as well. Stocks see a broad-based push higher on the back of positive global cues. Nifty above that 26,200 mark. FMCG utilities are the prominent gainers, while realty and healthcare trade soft. The mid-caps gain in line.
Citi issues a buy rating on Cummins with a target of 4,875 rupees a share following a meet with the management. They expect industrial segment weakness to be transitory and they're bullish on demand from data centers. The stock is up over 2%.
NBCC in focus after it wins a near 3,000 crore rupee order from the Nagpur Municipal Authority. The stock surges over 3%.
Saman Capital issues a clarification as the Supreme Court questions the probe into India Bulls housing finance case. The company says the case is related to former promoter Sameer Gehlot and also emphasizes that the IHC deal remains on track.
A muted listing for D Street's latest entrant, Fujiyama Power. Stock lists at 220 rupees versus its issue price of 228 rupees per share. The management says their Ratlam facility will double their capacity.
Okay, all right. Those are the top headlines. We'll discuss all these stocks in greater detail as well. For now, as Mangalam pointed out, it's the banking index that is leading to the recovery that we're seeing from the lows. Nifty is at the day's high. We do have the mid-caps, which are up around 0.4%. The advanced decline ratio, though, is absolutely flat. So as many advancing stocks as we have declining stocks. So that will be important to track as well. We do have the oil and gas space, which is doing well. What is not doing so well today is the PSU Bank, so we'll watch out for that one. But yes, of course, that line actually has converged right now. So we'll watch out for whether the advanced decline ratio stays at these levels or we see more declines by the end of the trading session.
Yeah, we'll monitor that. And it's interesting that not only is the Nifty Bank doing well, we have a couple of these finance-related proxies as well, which are spiking right now. So Bajaj Fin, a lot of these NBFCs are, gaining. Alongside that, something like a life insurance space as well comes up for you. Look at the big move that we're seeing in something like SBI Life. For the longest time, was facing a fair amount of congestion around that 2,000 rupee mark. And now that it has moved higher, it has decided to cross past the 2020 mark as well, in line with the way the markets have been moving. But as you spoke about the convergence in the advanced decline line, just watch out for a bunch of these movers which are buzzing around in today's trading session so far. Sudarshan joins in with that list. Sudarshan.
So on top in that list is NBCC, which has bagged an order in Nagpur, and on the back of that, stock is seeing a big move, and today also it's sharply higher, up currently 3%. Followed by big gains we are seeing in Mahindra Group names, M&M Finance, Mahindra Holidays, on a strong outlook that Mahindra Group has given in its investor day today. The group is holding investor day today, and the NetWeb stock is higher, up around 4% because company has a partnership with NVIDIA, and NVIDIA had come out with its earnings, and those earnings looked very strong. So the other mid-cap gainers, Hero MotoCorp, higher for second straight day, and there is second positive brokerage note. Yesterday, JP Morgan had upgraded the stock. Today, Macquarie has upgraded the stock, and on the back of that, the stock is seeing a big move. Cummins also saw positive brokerage note. Citi had maintained positive stance on the stock, and on the back of that, this stock is also up almost 3%. Jaiprakash Power is higher after JP Asok. For JP Asok, Adani Enterprises was the lowest bidder, and after that, this stock is also seeing a big move, currently up more than 8%. UFO Movies is higher with big volumes. Anand Rathi, all the capital market names are largely higher. Even Anand Rathi is seeing a big move, currently up more than 5%. Lastly, amongst mid-cap losers, on top of the list is Biocon. Remember, Citi had yesterday downgraded the stock. It was a double downgrade from buy to sell. And yesterday also we had seen a sharp fall in the stock. And today it has extended the losses and has fallen the stock. Vodafone Idea is saying profit booking after seeing a big move over the last 1 or 2 months. And today the stock is down almost 3%. Grow and Physics Wala have been falling further. Yesterday, both these stocks were down somewhere in the range of 7 to 10%, and today also it's down 9% each. And Fujiyama got listed on the exchanges today. It was a subdued listing, and now it has extended losses.
Okay, all right. Some interesting names there. Fujiyama, for instance, is down 6.5% as we speak. So not all new listings seeing those massive gains that we've been talking about. Thank you, Sudarshan, for joining us with that list. It's a good time to welcome Rajesh Palvia from Axis Securities for a technical check on the markets. Rajesh, good afternoon. Thank you for joining in. Further legs to the rally that we're seeing now?
Good afternoon, Sonal. So looking at the broader market behavior, we believe that, we are almost on a verge of giving breakout to all-time high trajectory for Nifty, and maybe in November series itself, we will see a new all-time high for Nifty. Bank Nifty is continuously enjoying its all-time high trajectory. So the way the sectoral indices are behaving, like IT, banking, NBFC, all these sectors are, showing sign of strength, and continuity of uptrend is there. Even automobile is also showing strength. So we believe that, maybe in next couple of days, we could see a new all-time high trajectory and really can extend to 26,400 to 500 also in next couple of days. So buy on dips would be the strategy for Nifty. On the downside, 26,050 needs to keep as a stop loss. For Bank Nifty also, we are projecting target of 59,600 to 59,700. On the downside, 59,100 needs to keep as a stop loss at this juncture.
Right, we take that point. Move towards an all-time high cannot be ruled out. In fact, it's a matter of when and not if. And you're looking at 26,500. Meanwhile, just watch out for, before we come to your stock ideas, just watch out for the 26,000 call that comes up for you on the screen. Seen a fair amount of short covering. Remember, the 26,000 call up until the Nifty hit that 26,000 mark and closed above that was the highest open interest in terms of options. And now that the Nifty is above the 26,200 mark, a lot of these call writers are feeling the pinch and they are covering their positions, and that may lead to a further push up in the market from current levels as well. So the 26,000 call comes up for you on the screen. The only other fly in the ointment right now is the put call ratio. Remember, yesterday it was at 1.29, was slightly overheated. This morning moderated to 1.2 and now has gone all the way up to 1.4. So those are a couple of things that we will track as we move forward. But Rajesh, individual stocks, tell us.
Mangalam, first stock is from the automobile space, that is Eicher Motor. Very strong breakout in today's session. If we analyze the daily structure, stock managed to give breakout of falling channel, and looking at the breakout, we believe that this upward momentum can extend further. 7250, 7300 could be the next target for the counter. Buy and accumulate would be the strategy. On the downside, 7040 needs to keep as a stop loss. Second stock is from the IT basket, that is LTI Mindtree. Continuity of uptrend, series of higher top, higher bottom formation on the daily chart. Stock managed to give breakout of a brief consolidation on a weekly chart. Looking at breakout, we believe that this stock has potential to move further higher. 6350 to 6400 would be the next target. On the downside, 6010 needs to keep as a stop loss.
Okay, all right. Thank you so much, Rajesh, for joining us with all those trades. With that, we'll do one thing. We'll slip into a short break now. When we come back, we'll connect with the management of Sharda Cropchem to discuss their Q2 numbers, the business outlook, and a lot more. Stay tuned for that conversation.
Welcome back. You're watching us here on Midcap Radar. The Midcap on our radar right now is Sharda Cropchem. The management joins us after the company posted a very good set of earnings in the second quarter. The EBITDA, the net profit up over 70%. R.V. Bubna, who's the chairman and managing director of the company, joins us now. Thanks a lot, sir, for joining in, and congratulations on a strong operational performance for the company. And the obvious question then that begets asking is the first half, your revenues, what, 23% in terms of growth? And this is much ahead of your 15% growth estimations at the start of this year. Do you want to up that estimate? And do you believe that the margins will be more 18 than 15?
Yes, sir. You said what's the fact? The margins are going to be better in the range of 18 to 20%, closer to 20%. And the revenue is also going to grow in the range of about 20% for the full year.
Okay. All right. All right. So you're upping your guidance both on revenues and margins, expecting revenue growth of 20% in FY26 versus 15% earlier, and margins between 18 to 20%. Can you give us a sense of how the demand is looking like right now, sir? Because Sharda Cropchem has seen growth despite the headwinds that we've been seeing in the industry. What is the current realization? Is pricing better across geographies?
Yes, it is rising across geographies. Our main geographies are Western Europe and NAFTA, and both these regions are doing very well. The demand is also very encouraging.
Okay. So what kind of volume growth are you expecting in FY26? That 20% growth that you're talking about, how much of it will come from good pricing? How much it from volume growth?
Madam, most of it will be from the volume growth and also improvement in the pricing.
All right. Because the first half, your volumes have, the second quarter at least, your volumes have grown 35%, whereas the revenue has grown just around 20%. So was there any price degrowth there? And do you expect this mix to move more towards price than volume?
No, it is, I would say, mainly due to product mix.
Okay.
Have you made any changes to the product mix, Mr. Bubna? Because the headwinds are behind the company. You're saying all the geographies are doing well. Are you looking at higher margin products, value-added products, and that is something which is leading to better growth?
That is always our target and strategy. We have a big portfolio of hundreds of products, and we concentrate on the products which give us a better margin. And since we are not a manufacturer, we are not affected if we leave all the products which have become common and commodity.
And what's the mix right now, value-added versus commoditized products in your overall portfolio, sir?
Value-added, and value-added is more and more than commoditized.
What's the mix exact?
It's difficult to say. I'm just telling the trend, and the trend, that's the only thing I can say.
Okay. You know, we have spoken about registrations earlier as well, and how expensive they can get when you have to register a product in a geography. Can you give us a sense of what are the products under registration? What kind of product addition are you planning in the coming years?
We have around more than 1,000 products in the pipeline. And the process of registration is so uncertain. It's very difficult to predict. Because we are dependent upon various government and bureaucratic authorities. They meet at as per their convenience, and they cancel the meetings among themselves. At the last moment, if something else comes up.
Right. Okay, we hope that, the transition is fairly smooth. But, I'm looking at your product mix. In the second quarter, nearly 2/3 of your revenue came in from herbicides. Insecticides accounted for about 20% of your revenue, and fungicides were the others. But, the biggest jump is what we saw in insecticides. From 133 crores, it jumped all the way up to 219 crores. Is this growth sustainable? What is your revenue mix likely to be between herbicides, insecticides, and fungicides over the next, say, 3 to 5 years as you, increase your product pipeline registration?
The growth has been always more in the herbicides.
Okay.
But this is in the insecticides. And this is depending totally on the market demand, the climate, and the sowing pattern. It is difficult to predict, but I'm happy that this time the insecticides have also grown well.
Is this sustainable?
It is sustainable.
Okay. Mr. Bhupna, we usually talk about the agrochem segment only. Let's talk about the non-agrochem segment as well. It is a smaller part of the business, but what is the growth outlook here? You did see volumes decline. You did see revenues decline despite a volume growth that you saw this time. What is the outlook on this business?
It's more or less matching with the agrochemical business.
Okay, so you will expect 20% growth even in the belting or the non-agrochemical business. Am I right?
Yes, you are right.
Okay. Okay.
I'm just looking at the capex. The first half of this year, you've done about 250 crores of capex. Then you have about 450 to 500. Is this just maintenance capex, or is this some new debottlenecking or increased capacity that you're putting out? And on this, typically, what is the kind of revenue turns that you get?
It is mainly due to for the expenditure, capital expenditure we are incurring on the registrations, which are, most of them are new. But the process is some products are closer to the receiving registration, and some other things have just started. And as I have said again, that the process is very uncertain and unpredictable. But overall, that we'll have to invest about 450 to 500 crores also in this year.
Okay. And final question before we let you go. First half revenues were very strong, and even your balance sheet looked a lot better because working capital days came down from what, nearly 120 to about a little over 80. Is there likely to be more improvement from here on?
It will be at least maintaining around this. It could be small improvement as well.
All right. Take that point. Thank you so much for joining in. Good to hear you. Very optimistic over, you've upped your revenue guidance, your margin guidance, looking good for working capital days as well. Unpredictability around product registrations continues, but you are hopeful with over 1,000 products in the pipeline for registration. Wish you good luck, and good to speak to you. Take a short break. Come back, tell you more on the markets and a lot of the other stock-specific action which is underway on Midcap Radar. Well, the market continues to build over that 26,200 mark, and we were talking about the short covering in the 26,000 call as well, right? The directors pulled that up right now. The Nifty is moved higher, and there's an increased amount of short covering out there. You know, going into trade today, we had about 1 crore shares in open interest on that strike, and now 30 lakh of them have begun to run for cover, a jump of nearly 112 rupees in its premium as well. So those shorts definitely getting squeezed right now. A lot of the stocks which are doing well from the heavyweights, we have HDFC Bank and Reliance, which continue to extend their gains. From the auto pack, Eicher Motors doing well as well. And look at some of these broader market names. We have Avenue Supermarts. You know, it's been a bit of a laggard, now moving higher. We have something like Solar Industries as well. Again, another laggard from the start of this year has seen a bit of an up move and currently at the high point of trade as well. And a bunch of these Mahindra Group stocks also on our radar. Our hero, Sudarshan, joins in for what's taking place in the Mahindra Group because they've gone ahead and set out ambitious growth targets. So not about hero, I'm calling you a hero, Sudarshan. Tell us about Mahindra.
So Mahindra Group is holding its biggest ever investor day today, and ahead of their investor day, they have disclosed to exchanges, basically they have given the presentation mentioning some of the ambitious target or say the outlook. Now as a group, over FY 22-25, organic growth was 25%. Now over next 4 years or say FY 26 to 30, their target is in the range of 15 to 40%. Talking about the revenue outlook that they have given for 1 decade, that is from FY 20 to FY 30. For SUV and LCV, they are targeting 8 times growth, tractor 3 times growth, truck and bus, which was earlier known as SML Isuzu, 6 times growth, and for Mahindra last mile mobility, 6 times growth. Now coming to market share. For LCV, less than 3.5 tons in FY 25, their market share was 51.7%. In FY 26, they say increasing to 54.1%. For SUV, in FY 25, market share was 22.7%, and that should increase to 26.4% in FY 26. Now coming to the tractor industry, where they are bullish and they have raised the outlook, growth outlook for till FY 30. So earlier, growth target was 7% CAGR. Now they have increased industry outlook to 9% CAGR, and that would be led by the higher horsepower demand, basically in the range of 40 to 50 horsepower trucks. Lastly, they have mentioned few aspirations for all these segments. For SUV, they want to be world's fastest growing SUV brand. For LCV, they want to be number one brand across segments and applications. For tractor, they want to transform lives of farmers globally by democratizing technology. For truck and bus, they want to be amongst top 3 in India's ILCV trucks and buses. For EV, they want to be number 1 player. For M&M Fin, they want to be most trusted financial services provider for Bharat. So basically, it means that they want to focus on rural India, and they see 5 times AUM growth till FY 30. For Tech Mahindra, they expect turnaround to be completed by FY 27. Also, they are bullish on Mahindra Life, Mahindra Holiday. Right. So on big investor day, it's a big outlook presented by Mahindra Group.
Big outlook presented by the Mahindra Group, big investor day. And when we're speaking about all these big things, the Nifty has actually gone ahead and crossed its previous closing high also, previous all-time high of closing, which was 26,217. But Sudarshan, come back before we, wrap up on this show. You want to give us a little jig, a little dance?
Let Nifty close the all-time high. We'll do
Let us close as in, will you be closing the Nifty personally, or how will it happen? All right, now just pulling your legs, Sudarshan, out there. That's the kind of mood that we are in right now. If you're a bull in the market, 26,224. That's all the time that we have on this edition of Midcap Radar. But stay tuned, Mutual Fund Corner, when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra. With me as always is Vinny Motiwala, and today it's going to be very interesting because a lot of topics that we'll be discussing. The first one, of course, on what's happening with that surge in gold ETFs, the interest there, and there's so much to discuss on what the investors should do right now.
Absolutely. It's going to be that, right? What are we going to be discussing in terms of gold ETF? And let's talk about why passive funds also. You know, look at the traction that they've picked up, especially in the last 1 year. If you look at the AUM growth for passive funds as a whole, from October 2024, it was 11.21 lakh crore, and now it's moved on in October 2025. The AMFI data that we last had came in at 13.67 lakh crore. Obviously, that's a growth of 21%. Even on a month-on-month basis, just in the month of September to now, we've seen a 5-6% growth there as well. So passive funds overall, that's where interest is coming in from investors as well. But gold ETFs, there's no stopping that, right? And despite those gold prices rising, you know, everyone wants to continue their story there. So that is what everyone wants to focus on as well. But what does it mean now? From here on, where are we going to be headed? What will it mean in terms of a gold ETF growth going forward? Silver ETF. Silver itself as a metal has done so well this year, right? It's actually outperformed gold. Does that mean, you know, with the silver ETFs, this run-up that we're seeing is going to continue? And where should we put our money on the passive fund side? Should it just going to be this index fund that continues to trend? Gold ETF, silver ETF, fund of funds, all of that is what we're going to be focusing on. And as investors, especially this time period where gold has seen such a run-up, especially over 2023, since then, it's not stopping.
And, you know, there's a very interesting note from Motilal Oswal as well. They speak about how passive funds flows have increased to 78% because of surge which we have seen in index funds and, of course, continued growth in ETFs. So ETFs continue to be our focus point as well. So let's get going and get our first guest for the day then, Vinny.
Absolutely. Let's bring on board Kaustubh Belapurkar, Director of Fund Research at Morningstar Investments, joining us right now to discuss all of this excitement that we're seeing in terms of passive fund. Kaustubh, good afternoon, and thank you so much for joining us on the show. First, let's start by talking about passive funds, right? The AUM that's seen a very good growth of 21% on a year-on-year basis. This is for October 2025. Obviously, this was mainly the growth came in because of precious metals, ETFs on that front. How are you seeing growth from here on for all of this, whether passive funds or even gold ETFs? Do you think this is sustainable? Or now maybe we'll see it normalizing or reducing a bit more from here on?
Firstly, Vinny, Sonal, hi, and thanks for having me on the show. I think very interesting conversation and some very pertinent questions there in terms of what we're seeing in the passive fund space, and particularly about gold and silver ETFs and funds, right? So a couple of points there I think very important to acknowledge. I mean, passives obviously, as a segment, it's a pretty broad segment, and we'll talk a little about that, in detail. But I mean, generally we've seen a fair bit of interest coming in from, I mean, primarily initially was institutional money, especially EPFO towards the broad-based indices, but more recently, last couple of years, there's obviously been more individual investor money that's also been coming in to passives across the board, right? That's the first trend that's clearly visible, and we think from an industry perspective, obviously the industry assets are growing quite significantly, so it's not going to be passives at the cost of actives. I think both are going to continue to grow, but as we're seeing passive share in the market, as in the overall industry AUM is slowly inching up, right? It stands at about 17%. Maybe just 5 years back, it was shy of 10%. So, I mean, the growth of passives has kind of, been faster than the active space. More importantly, about what's happening in the gold ETF. Now, that's a very interesting, sort of segment that, so gold ETFs have actually existed for a fairly long period of time. Silver is probably a more new product class, but gold ETFs, some of the ones have been in existence for perhaps even 2 decades now. But what's happened is just that sheer pace of rise of, both gold prices and silver prices over the last couple of years, and silver more recently so. What that's done is that attracted a lot of investor interest in looking at investing in these, ETFs that can give you exposure to the underlying commodity. But, I mean, I just want to play the devil's advocate, while, and, we'll obviously talk about uses of gold and silver in a portfolio. But, sometimes just that whole perception of, having come in after seeing the sharp rally and piling on more and more to gold, I think investors need to just take a sense check about why they're adding gold to their portfolio. And I think if, gold does correct or, we see some volatility in the interim, flows might actually slow down or taper off because, investors do tend to look at more recent returns and they might want to take a kind of sense check of, how much they want to allocate to these ETFs.
The recency bias always, takes center stage when we see such massive surge in certain categories. Take that point, Kaustubh. But now we are talking about inflows into index, other ETFs remaining strong, right? So how do you see the mix between equity index funds and non-equity passive products evolving, say, in the next 12 to 18 months? Because while at 17%, the figure has increased from 10 to 17%, even the denominator has become so big.
Yeah, absolutely. So I think, two very important points to highlight here. The first one, that the type of investors that are investing in index funds or ETFs, right? So ETFs largely, like we said, was predominantly institutional investors, pension fund money that started off many, many years ago. But in more recent times, you would see investor interest increasingly towards, what we call a broad-based index funds or ETFs, right? So indices, ETFs that are based on, say, the Nifty 50 or the Nifty 100 or your BSE 500, NSE 500. So your more broad market cap indices, which would give you a broader market exposure, right? Then we had certain other types of ETFs. We spoke about gold and silver ETFs, which have obviously gained a lot of traction in more recent times. But we've also seen interest in the past with fixed income passives, right? Where you had these target maturity funds, where obviously there were a lot of launches maybe a few years ago, but now with taxation, I think those have taken a backseat. In fact, in the recent year, we've actually seen outflows from quite a few of these strategies, given where interest rates are and the volatility that's been there. That's been a space that's actually been shrinking in terms of assets. The other space which also caught a lot of attention in terms of fund launches in the previous years was actually around the thematic, smart beta, the more narrower based passives. Now, while they didn't, the assets weren't huge to start with, but if you look at more recent trends, that space is also losing certain assets. Investors are taking some money off, say, from financial services, healthcare, technology, ETFs, albeit, obviously smaller numbers. But if I think about the longer term trend, right, like I said, I think actives and passives, the industry is growing. Like I said, the denominator is growing quite significantly already. Passives are definitely gaining a strong foothold, but I think, they don't need to necessarily grow at the cost of actives. So I think both can coexist depending on the way an investor wants to position these funds in their portfolio. But I think the focus will be on more broad-based equity indices, the ETFs. I think that's where a lot of the action continue to be there. There could be sporadic flows into more thematic smart beta ETFs or golds, but I think equity ETFs would be the primary driver of the assets in passives.
Okay, equity ETFs you think could be the drivers, but Kaustubh, obviously does this also bring the point towards more concentration that's actually come in the recent times for passive inflows coming from gold and silver, and the risk that comes in with that as well in terms of market concentration? And also, how should one be allocating, now to gold in terms of a percent of portfolio?
Yeah, great question, Vinny. I think a very important thing to talk about, because one is clearly what we've seen is outsized allocations from a flows perspective in the past year. In fact, if I just break down flows in gold and silver ETFs, I look at 3-year data. The first 2 years, which are 23, 24, we got probably 20,000 crores in gold ETFs. Then the next 9 months, up until August of this year, you got another 20,000 crores. So 2 years flows, 20,000 crores, up until August, 9 months data, 20,000 crores. The last 3 months, I've seen 28,000 crores in just this short period, right? Obviously, because suddenly now investors are getting very excited about the kind of returns that have been delivered in the past with commodities such as gold and silver. And here's where I think it's a very important conversation to have, for us with investors, because while obviously these returns, we've seen these significant price increases, and for various reasons, obviously, from macro to geopolitical to the whole tariffs and trade war, US dollar sort of weaknesses, all of that kind of contributing to the safe haven, especially with gold. But if I just go back in history, right, when you think about, if I go back in 2011, when gold had made its previous peak, almost close to, I think $1,900 was the level at that point of time. For a very long period of time, if I just look at it in US dollar terms, gold didn't go anywhere for almost 7 to 8 years, right? So I think, we tend to forget history. And gold's actually been a pretty volatile asset class, so to speak, in that sense. And similar for silver. In fact, silver took perhaps longer after its peak in late 2011 to come back to that level and then obviously shoot beyond that, right? So that's something I think investors should acknowledge, that, well, yes, gold can be a great risk diversifier in their portfolios, but you need to think about it judiciously about how you allocate in your portfolio, right? So I'll share some data we actually ran in terms of analysis that we did. That if we had a traditional portfolio for an investor, which is 75% equity, 25% fixed income. What we did is we ran different simulations looking at obviously the historical correlations of gold versus the Indian equities and Indian fixed income, and we looked at what allocation of gold would probably be a good sweet spot to add to a portfolio as a diversifier. So what the results showed us is, at a 10% allocation to gold, by reducing equity from 75 to 65, you actually get a very sweet spot in terms of the overall risk in the portfolio comes down quite significantly. And you're not compromising on the expected returns of the portfolio, right?
Okay.
So I think that's how you would allocate to gold and not haphazardly increasing beyond a certain level.
Kaustav, we do actually have a lot of questions, but we are completely out of time in this segment. But we'll take this forward some other day. But thank you so much for joining us, as always, with your insights and expertise, specifically this time on what's happening in the world of passive funds. With that, we'll do one thing. We'll take a quick break. On the other side, we'll talk about SWP, Systematic Withdrawal Plan, and SIP, the different styles, with A. Balasubramanian of Aditya Birla Sun Life AMC.
Welcome back to MF Corner on CNBC TV18. Now we're going to be discussing how you should be actually using SIP and SWP, Systematic Withdrawal Plan, as a combination. What are the leverages, benefits that you actually get from this combination, given that your expenses are increasing and income at one point of time is going to stop if you continue to, not work at some point of time and retire, then how does this work as a combination? We're going to be discussing all of that with Bala Subramanian, who's the MD and CEO at Aditya Birla Sun Life AMC, to talk to us about that. Thank you so much, Bala sir, for joining us this afternoon. Let's just start by this. SIPs, investors have gotten into it. Everyone's investing, but few of them are leveraging the SWP, Systematic Withdrawal Plans, opportunity that you actually get in. Would you say that you should actually start combining this, both the SIP investing as well as SWP withdrawals? What are the pros of it?
Thanks for bringing this topic of discussion, the mutual fund corner. I think the SIP, as we all know, it's one of the powerful tools that has been created by the industry for creating the regular habit of savings. Now, as you put out in your one initial remark, where while saving is important at a regular interval, at the same time, everyone should understand that there are various type of expenditure that always comes and hits you. There are something recurring in nature, which is mostly meeting your EMI payments, your society maintenance, and car maintenance, and car repayment, and so on and so forth. There are many such recurring expenses comes in. Second is where unexpected expenses comes in by way of your medical expenses. Though you may only have policy, but you may actually overshoot your own budget. So unexpected budgetary, unexpected but non-budgeted expenditure could come by way of medical expenses. Today, as is known, the education expenses, I think each day, as everyone wants to their children to study in a better school, therefore also comes an additional cost of the increase in the cost of education. And again, travel, your leisure travels, we don't plan it, it comes all of a sudden, and that comes in. Therefore, you look at the expenditures, and various type of expenditure comes and hits you, and most of the time, I won't believe is the unbudgeted expenses actually far higher than the budgeted expenses, which is recurring in nature. So while SIP is something one has to do, unless you keep investing, you will not be able to generate enough kitty for you to meet your, including your retirement withdrawals that most of the people would plan. You will not have that kind of kitty available unless you do an SIP. Therefore, SIP in the SWP, which we call it as a SIP for life, you call it, or you can call it as a plan for life. In this process, two things that you are able to achieve. You are able to plan your future much more efficiently. And today's world, where money is, every penny is saved, actually every penny earned. If we go with that concept, definitely SIP is something you have to continue. At the same time, the more the earning that you are able to make it, you're also able to actually withdraw the money at your ease, rather than suddenly thinking about how do I actually, where from I withdraw and how do I withdraw. I just want to give one data point in the whole concept. Assuming a scenario, even at the Aditya Birla Sun Life mutual fund, somebody has saved in the FlexiCap fund for the last 20 years. He's given roughly about 18% CAGR return for the last 20 years. If we have to take the consumption-driven fund, which has got again more than 20 years of track record, somebody has saved for say more than 10 years, he's got about 16% kind of IRR return. Just imagine a scenario that while return comes on one side by being invested in the long term on your investment, at the same time when you withdraw, leave aside the leave aside the unexpected expenditure that comes in, the regular withdrawals would always be in the range of about say 8 to 9%. So therefore, you are able to achieve two things. One, you are able to put your money to generate wealth for your for the worthiness from a long-term investing point of view. At the same time, you are able to withdraw these to the increment of what you have, and also meet unbudgeted expenditures, which suddenly will come and hit, as I mentioned earlier. So all these are able to do it. Therefore, we are now feeling that SIP, a combination SWP would be the best one that could work. I think industry has done a great job. All of us done a great job in promoting SIP as a way of investing. But by combination of these two things, you are able to not only, of course, regularly save it, you're also able to save for sure for the long term. Because nobody would say, I'll not save for sure to meet my expenditure for the long term. So that's the way I see that Aditya Birla Sun Life mutual fund has been one of the pioneers in building SIP the last number of years. Clearly, I think one of the initiative or what you mentioned about SIP combination SWP is something will definitely help in many ways.
So while we talk about SIP, as you pointed out, the industry has been able to promote that part of investing as well. But for young professionals just starting SIPs, how soon should they be planning the SWP phase? If you can throw light on that.
I think the question always comes is only if you disconnect it. The moment you say that when to choose never comes. So I think the advantage of combination of SAP and SWP, you always decide your time period for what you want to do your SAP. When will you actually withdraw your amount at regular interval will you draw? Only when income level drops. I think for somebody actually starting their career in youngster, he has to assume that his income period is just beginning and go on till the age of, say, let us take retirement. And assuming scenario, even if somebody takes early retirement at the age of 50, the AW starts only after that. Therefore, withdrawal starts after accumulate period of, the accumulation period is something that every investor has to decide. Whether it is a youngster when he started his accumulation period, I would assume will be the work life that period that you will have. Starting from the age of say 25, going to the age of 60 is a period of work life. Therefore, the SW has to start from the 61 year. That means he has accumulation period should be roughly about 33 years. Then withdrawal period could be as long as he wants to be. Therefore, it doesn't change the formula. It is something not necessarily you have to choose it separately. I think both the combination comes together. I think we are able to plan this very nicely as you choose an SAP. Then you are not only planning for your investment period, also planning for your period of withdrawals, which will come at a later part of your year, later part of your stage.
Sure.
And it's applicable for not just only youngsters, it can be applicable for investors, a 30-year-old, a 40-year-old, even 50-year-old. 50-year-old person can accumulate for say 10 years. And only the thumb rule one should keep. They have to say for minimum of 8 or 10 years in order to get the return what I talked about, so that the return what is generated in the portfolio would be your withdrawal component. Plus, you can eat into your principal as well, but still your investment will continue forever.
Absolutely. So that accumulation period, that's the key, right, sir? But, obviously this will work out for all other expenses also, right? Not only retirement. We could use it for medical and education side, children education also, right? The SWP SIP combination.
Exactly. And I also mentioned about recurring expenses. I think most of us have got recurring expenses, and those recurring expenses can also be met once the SWP period starts. Therefore, the purpose of withdrawal can be for many. And I mentioned about medical, it comes, of course, unbudgeted, I call it. We have all of us that get unbudgeted expenses, suddenly spontaneous expenses will have. All the expenses can be met through the SWP. At the end of the day, what most people need. During the period of income, they have to ensure that investment is made in a manner, in a disciplined manner. Therefore, you're able to make your money work for you. Maybe you are creating wealth. Once the wealth is created or income level drops, you need money to withdraw. That's why I think SWP plays a role.
All right. Always a pleasure speaking with you. Thank you so much for joining us with your insights and talking about a concept that is not spoken about so often, but is definitely helpful for our viewers as well. With that, we'll do one thing. We'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
Look at the Taiwan index managing to hold on to gains of 3.37%.
India is a key part of their overall global back to Starbucks plan.
And if you don't get it fixed fast, I'm going to fire your ass, okay?
Support which has moved higher and higher. I mean, basically the 20 days, being dragged higher.
Macquarie has upgraded the stock to outperform, and target here is 6,793 per share.
A third higher on the Nifty, 26,100 passed on the Nifty.
Earnings were much better than the consensus. Don't compare YOY or quarter on quarter, but compare with the consensus, so it was far superior.
Honorable Supreme Court also said that we have not expressed any opinion against Sanman Capital.
The Nifty very close to the day's high right now. It's above the 26,100 mark.
For the first 9 months of the year, Nvidia has reported sales of close to $150 billion.
I think we should certainly grow between 6 to 7%. I think we have room, potential to grow beyond 7% as well.
Adani Enterprises has notified exchanges that its resolution plan received the highest number of votes from the COC, and lenders have now issued a letter of intent to the company as well.
That rally that we saw yesterday has continued. We are sitting with gains of 150 points. Nifty is above that 26,200 mark.
Good afternoon, hello and welcome to this edition of Closing Bell. We're coming to you as always from the CNBC TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Nigel D'Souza. In the morning, I was asking Nigel what's going to happen, 26,100. And he said all-time high in November.
Yes.
Nifty is teasing, saying, Nigel, do you want it today or not? But it's astounding, right? We came, I think, just about 40 points away from that level. There's a lot of momentum in the market. Yeah. Let's see.
I think, Surabhi, even on 30th of October, you guys were talking about the all-time high, but I wasn't there. It didn't happen. I think either today or tomorrow, that all-time high is there. It's a matter of 50, 60 points or thereabouts. But it's a good performance, but you need to caveat it by saying that that left-out feeling. Portfolios are not feeling like all-time highs. Stocks are still down 20, 30%. So the broader market participation needs to come about. But the good news is the banks, the heavyweights, Reliance Industries, they are taking the Nifty to all-time highs. So for the time being, the bulls will be happy that the headline index is going to those all-time highs. But the greatest satisfaction will come once the broader markets start participating.
Absolutely, I take that point. But and there's the slight wobble that started happening now. It's a very crucial 1 hour. So that Nifty chart that you just saw over there, where we're just off the highest level. This is the tally as it's looking like today. Reliance has been such a massive support for the market. Yeah, that's what I'm talking about. So just a bit of a wobble from the top and profit-taking setting in, which you can't blame anyone for, right? I mean, it's been a remarkable rally, a rally of almost 1,000 points from the lows of 25,300 thereabouts. So at highs, there is a natural profit-taking. But remember, yesterday, the FPI numbers were positive. And what's heartening, Nigel, is that today, while the rest of the world is back, because this whole AI trade is back on after those NVIDIA numbers, but it's not like we've completely sold out, at least not as yet. But let's not jinx it. We still have one whole hour of trade. The bulls will want to take these gains home. They would want to end on a high, on a winning note. So plenty lined up. Let's actually just get that the Nifty composition chart back on to give you a sense of what's led. It's actually a pretty wide rally on the large cap screen, at least. Reliance obviously is playing a big part, but a lot of auto stocks have done well. iShares, by the way, is up about 3.5% as we speak. Some of the banks are chipping in quite nicely. So it's pretty well spread out, at least for the time being. We'll tell you more as we go along, and also mid-caps and what the big news makers are looking like. But for the time being, let's tell you about today's show lineup. And as always, we have plenty coming your way over the next 1 hour. The Nifty is racing towards record highs. FMCG and auto stocks are leading from the front. Banks' relative underperformers in today's trade. We'll get you more on this and some trading ideas in just a bit. The Mahindra Group has laid down ambitious growth plans as it's at its Investor Day. It is aiming to become the world's fastest growing SUV brand. And it has also hiked its forecast for its tractor business. More coming up on this with Sudarshan in a bit. Hero MotoCorp's rally also continues after Macquarie upgrades the stock to an overweight rating. We'll tell you more about Hero Moto as we go along. And then views coming in from an exclusive conversation with Prashant Jain of 3P Investment Advisors. Prashant is raising a bit of a flag of caution on IPOs and new listings. That's a conversation that you don't want to miss in any case. Let's get started then. How should you position yourself for the remaining 55 odd minutes of trade? We've got Mitesh joining in. Mitesh, what a phenomenal rally it's been, right? But you can see the nervousness now. Some people are saying, "Bahut ho gaya, acha run. Let's take the gains home and go home." What would your advice be for the last hour?
I think from a trading point of view, the advice always is that, till the index itself tells you that I'm trying to go down, let's not preempt that. What traders can do possibly is trail the stop to about 26,080. That's where, we had seen some hourly closings first on the 23rd of October and then on the 29th of October. So as long as now we are above that, I think, believe that the trend is on the upside. Only a break below that would suggest that profit booking or some kind of corrective pullback has started. So that's one. Two, I think, when you approach all-time highs, yes, there's always this idea of taking profits. But looking at the indicators, I think, there still could be a chance of the markets catching up. So therefore, I think, keep a close watch on 26 to 300 zones. Once we clear them, we are into all-time highs, which means that no historical resistance is there. And therefore, it could be very interesting on the upside. On the stock side, I have a buy on HDFC Bank, which I would recommend buying with the stop at 995 for the targets of 1,030 to begin with. And Dabur is a buy with a stop at 519 for targets of 540.
Okay, all right. Thanks a lot for that, Mitesh. By the way, just pull up Physics Wala. The stock was down, I think, 13% or thereabouts. There's been a bit of a recovery from the lows. It had a blockbuster listing and then it lost its way a little bit. Physics Wala should come up for you on the screen. Suddenly, a big bounce, I think 123 to around 136. Plenty of volatility on these sort of counters. While Grow is still down. It's down more than 5%, I think, the last time I checked. So a couple of these debutants in focus in today's trading session, now down close to around 7.5%. But Mahindra Group's Investor Day is underway and the company has set out some ambitious growth targets. The conglomerate targets organic growth of around 15 to around 40% across businesses till 2030. It aims to be the world's fastest growing SUV brand and the #1 LCV brand, and targets 5 times AUM growth in lending and a turnaround in Tech Mahindra by FY27. Sudarshan is now joining in to help us out with some key highlights out there. Sudarshan, you've been going through it. I saw you on the earlier show. I think you were talking about being a hero and dancing or something. I believe you've rehearsed your steps, so you could do the step first and then go ahead with the link, or vice versa.
So first I'll talk about Mahindra Group. It's holding the biggest ever investor day where all the 12 group CEOs are participating, and ahead of the investor day, these group companies have released details on the exchanges giving the very strong outlook over the next few years. So as a group, over FY22 to 25, the organic growth was 25%. Now going forward for FY26 to 30, now the target is in the range of 15% on the lower side, and on the upside, it's as high as 40%. Now coming to revenue outlook, where the group has given for 1 decade, that is from FY20 to FY30. For SUV and LCV, the growth target is 8 times. Tractor, 3 times. Truck and bus, which used to be earlier known as SML Isuzu, 6 times. And for Mahindra Last Mile Mobility, the growth target is 6 times. Coming to the market share, for LCV less than 3.5 tons, in FY25, market share was 51.7. Now, in FY26, it's seen rising to 54.1%. For SUV, in FY25, market share was 22.7%. That can increase to more than 26%, that is to 26.4%. For tractor outlook, the group companies have raised the outlook till FY30. So earlier, tractor industry outlook for FY25 to 30 was 7% CAGR. Now it's been increased to 9%, and demand would be raised by the company group is seeing demand for higher horsepower tractors, that is in the range of 40 to 50. They've also mentioned few aspirations. For SUV, they want to be world's fastest growing SUV brand. LCV, they want to be #1 brand across segments and applications. For tractor, they want to transform lives of farmers globally by democratizing technology. For truck and bus, they want to be amongst top 3 in India's ILCV trucks, that is basically school bus and truck, focused mainly in higher commercial vehicles. In EV, they want to be number one in eCV company with 1 million EVs on road by 2031. For M&M Finance, they want to be amongst most trusted financial services provider for Bharat. So it means they want to focus on rural area, and till FY30, they see 5 times AUM growth. For Tech Mahindra, turnaround is expected to be completed by FY27. On a similar trend, they have a huge target for Mahindra Holidays and Mahindra Life also. So big investor day and a big outlook by Mahindra Group.
And the dance step?
That's for tomorrow. I don't think Nifty is looking to hit the record high. It's back now. Again, we are around 70 points away from that level.
So you're promising us this. When we hit the record high, you're going to be doing a jig of your own.
We'll do together.
Absolutely.
I don't know what these boys are cooking up, but I'm really looking forward to it. I have no clue what's transpired between the two of them, but this is sounding very, very interesting. All right. So awaiting some
join
excitement.
in, Surbi. Don't feel left out.
I'll clap. I'll clap. Let the all-time high happen, and then the boys can take it away. All right. Let's actually, since we're talking M&M, let's also talk about Mahindra and Mahindra's holidays business. M&M, of course, spoke about that at the Investor Day as well. And we caught up with Manoj Bhatt, the MD and CEO of Mahindra Holidays, to learn more about the company's foray into the leisure hospitality business. They've just announced this investment of about 1,000 crore rupees. Listen in.
What gives you the right to win in that space, which is fairly competitive, and you already have large incumbents? What will be the key differentiator for you?
Thank you, Shireen. So as we looked at the market, clearly, the first part I would talk about is what we have built over the last 27, 28 years is this whole association with family and creating, almost defining family holidays in India. And as we looked at the broader space, we felt that there's a wide space there where nobody is focusing on in creating premium family holidays. And that's one of the space we want to occupy. And that actually combines some of the strengths we have historically. Secondly, of course, we are a very large chain. Today, we are number 3 in leisure hospitality by rooms. And so clearly, we have the expertise to actually scale up and run at scale. So that's the second point. And lastly, I do feel that experience is going to be the new currency. And if you look at experiential holidays, I think in a survey, 80% said they would want an experiential holiday rather than a normal holiday. And as we think about that, if you look at what we do today, experience is embedded in what we do today also. I think that's the third leverage which we want to bring into this business. I think scaling the core to 10,000 keys, I think that remains a big priority too. And as we think about it, I think whatever we have put as a decadal vision, it really translates to double the keys, double the revenues, and triple the profits from here on in the next 5 years. So I think that's the way we think about it, that we really have to focus on both of these. And of course, Signature Resorts is the new initiative. So obviously it will take a lot of time and attention, but scaling the core remains important.
Okay, let's go across to Deepak Shenoy, founder, Capital Mind, who joins us on the show. Hi, Deepak. A while since we spoke. What's the view on the group, Mahindra and Mahindra? You know, the investor day is on. The Mahindra Holidays top boss, so they're sounding extremely confident and optimistic. What's your take?
Yeah, overall, I think no, individual companies, I won't give any opinion here, Nigel. But I think specifically here we are talking about company that is in many spaces. You know, like you said, there's in holidays, they're in, they have a tech arm, they have many engineering arms apart from their core auto business, which itself is divided into personal vehicles, trucks, and tractors. So there is a fairly large diversification here, and pretty much an India story here, in the sense most of their work happens towards and selling in India for the most part, other than the Tech Mahindra business. I think overall, it's been one of the older groups in India that perhaps took a while to kind of come together. There's been some consolidation, some rejig within the group in the last decade. It's an interesting space for them to be, because they're not meaningfully yet in financial services and some of the other areas, but they have footprints in almost every industry, and it'll be interesting to see what plans they have going forward. They're probably now the second largest car or personal car manufacturing company in terms of size, in terms of number of vehicles sold, and they've caught up very quickly, especially in the higher end car space in India. So I think that's an interesting place for them to be. There are other things that they can do. They're doing a bunch of things in EV. They can do a bunch more things in two-wheelers, perhaps, and other things. Would like to wait to see where they're going. As a disclosure, we may own some of these companies in the group in our group businesses.
Okay. Fair point. Stay on. We'll just come back to you, Deepak. Lots more to discuss and talk about. But back to Sudarshan. He's watching out for Hero MotoCorp as well. It's reacting quite well to a brokerage upgrade that came through. So fill us in.
So it's the third upgrade since Q2 earnings of Hero MotoCorp. That's basically in last 2 weeks, and the second upgrade in 2 days. And there are several reasons to. If you remember, after Q2 earnings, we were talking about that company has outperformed the peers on majority of the metrics. And if you take a look at the share price, it's up almost 50% this year. Now it's less than 200 points, or basically less than rupees 200 per share away from record high. It's crossed rupees 6,000 per share for the first time since September 2024. After JP Morgan's upgrade yesterday, today Macquarie has come out with a note. It has upgraded the stock to outperform, and target here is 6,793 per share. And the reason is, as per Macquarie, domestic market share has stabilized for the last few quarters and sees upside risks in both motorcycles and scooters, and that's basically being led by the new launches that company has been undertaking over the next few days. We also be seeing new launches in the 125cc segment by Maruti, and the another reason is the GST rate cut that company had government had announced in the month of September. That led to a big demand in the entry-level segment. Now the competition also in the entry-level segment, if you talk about 100cc, it has come down, because for TVS Motor and Bajaj Auto, now 100cc segment is not of like huge importance. So competition is between majorly Honda and Hero MotoCorp. Now Street is willing to give higher multiples also. For the last few years, there is a huge discount in the multiples of Hero MotoCorp, and if you compare with the peers. So Catalyst, as per Macquarie, first market share gains that company is seeing in petrol segment. It has, in the festive season also, it has gained the market share, and in the market share is more than 31%. And the volume ramp up that company has been taking in electric two-wheeler. And on the margin front also, company has been performing consistently. This quarter also, it was at multi-quarter high of almost 15%, and it maintains margin outlook in the range of 14 to 16%. So overall, it's a hero move by Hero MotoCorp after several years.
Okay. All right. So Hero MotoCorp indeed making hero moves. Almost 6,000 on the stock today. Deepak, so, let's sort of get a little broader. You mentioned overall thoughts on the M&M group and how well they've done. We actually had a discussion with Fada in the morning, because that's something that a lot of investors are thinking. Some of these auto stocks. Anyway, M&M has been a great wealth creator, even much prior to the GST cuts and all that. But let's say a Maruti did so well this year, right? The question is that now that this whole bumper festive season is done, GST is done, is this sustainable demand? So can there be sustainable wealth creation from auto OEMs? Farah told us that their estimates for this year, total PV sales growth should be closer to 6.5%. What's your sense? Can one make good money out of auto stocks?
Well, I think if you look near term, things are going to be neither here nor there. But I think longer term, Surabhi, we actually should see a much better performance going forward. I'm talking about, maybe 1, 2, 3 years from now. There's a bunch of things happening that will probably help this. First of all, affordability. Now, GST cuts will make some of the more expensive cars definitely more affordable, but also change the affordability going forward as well, especially if there's an interest rate cut also that kind of comes down because of lower inflation. And secondly, there is another layer which I think we're talking about. The space itself, I think is poised for an up move simply because there's been a long time after the insurance changes that came in, I think 2017 or 18, when even two-wheelers, the sales were have been stagnant for nearly 5 to 6 years. Many companies haven't even reached their capacities, and a lot of auto companies are still operating below 85% capacity, and that's why there's not so much plant expansions that are happening, capex expansions that are happening. I think I would say the next 2-3 years will involve capex expansions of a more reasonable sort, both from an EV perspective and some other format perspectives for these vehicles. There will be increased demand from tier 2 and tier 3, even for cars, I think, going forward, because the road networks are getting better. I think these will slowly push people, if they're moving into affordable territory, to buy cars instead of two-wheelers, or upgrade their two-wheelers into cars as well. And lastly, availability of electricity as it becomes more widespread. We are likely to see more acceptance of EV among even smaller towns. So these, I think, should give at least auto, which is one of the few areas where we actually have both domestic manufacturing and domestic demand to actually increase. So it's both make in India and make for India. I would say that's where I think the next decade we're going to see a lot more activity. However, I'd say some of these players are a little expensive, but by and large, many of them are in affordable territory right now in terms of prices versus their long-term growth rates. So we are positive in general on auto.
Positive on auto and positive on the market as well. Before we let you go, this broader sense, I mean, Nigel and I were counting down almost all-time highs, if not today, maybe tomorrow. What's the sense? What should one be doing at all-time highs in terms of sectors, what to look at, themes? IPO market is booming. Leave us with some advice.
I think two things. IPO markets booming is, I think, primarily because there's new supply coming into market that is already seeing a lot of inflows from domestic, both mutual funds and other places and so on. And relatively speaking, some of the foreign investor sales have come down or trickle down a little bit lesser than they used to be. So to that extent, when new opportunities come, people jump at it. But I would say be careful of valuations, especially for new companies, because you want to see them react in the public market space. You want to wait for them to at least do 1 quarter or 2 quarters of results so that you can see how the companies operate under larger public scrutiny, and therefore, get yourself a better handle of things. I'd say India has been taking it on the chin for the last year, for the most part. All the new all-time highs on the Nifty. But if you look at the broad market, we still have a considerable number of stocks, nearly 40% or so, that are significantly more than 15-20% below their all-time highs. A lot of stocks still are trading below even their near-term moving averages. So you're seeing that price performance at a broad level is not anywhere close to what maybe the top level Nifty stocks are. I would say until that broad-based recovery comes, we're not really recovering. And for that, perhaps one of the triggers will be GST, maybe an India trade deal. They've been talking a lot about how they might ease up the rules for Indian businesses to be more productive. There have been maybe there's an interest rate cut in the offing. All of these will probably add to some kind of bullishness around India. And remember, we have grown earnings at a median basis more than 11-12% at a time when inflation is probably averaging 2%. So you have 10% real growth in companies' profits. And some of that has come on the back of margin expansions. The next one will come on the back of capex and capacity expansions. So I think, if you have a 5-year or 6-year horizon, this is still a great time to invest. If you have a 2-month horizon, I'm not the right person to ask.
No, we weren't asking for 2 months at all. I think you've given us a fair framework to work with in terms of those who are looking at meaningful investments in the market. Thank you, Deepak, very much for that. Always great having you on the show. You have a good rest of the day. Well, we need to take a very quick break, come back on the other side, and then we'll get you excerpts of our conversation with Prashant Jain on the market as it's very close to hitting the all-time high mark on the index.
Welcome back. Looks like we'll have to wait till tomorrow for the fresh all-time highs. Markets have given up a little bit. Midcap index has moved into the red, and the number of stocks that are declining have overtaken the number of stocks that are advancing. But that said, plenty moving and shaking around. I'll tell you what, Hormuz is standing by. He's going to run us through all the stocks that are moving around. Hormuz.
The last 10-15 minutes have made this list go a little awry, and even if there are movers, they are not moving on very substantial volumes in today's session. But the ones that are, one that stands out is Aztec Life Sciences. We spoke about this in the morning, and since then it has extended its gains even more. 17% higher now on the stock. It's gained in 5 out of the last 6 sessions. The volumes in today's session for Aztec are the highest since February of 2010. The highest volume in 15 years now for Aztec in today's session. 53 lakh shares have been traded today. The 20-day average is not even 40,000 shares. So in comparison to that, we have had 53 lakh shares traded. And despite such a move, the stock still remains below its key moving averages, but it's nearing a very important level, which is the 50-day moving average, which is at 739. So still 10 rupees away from those. And as a result of this move, the stock has turned positive for the month of November after 4 consecutive months of losses. The second one on the list today is Universal Cables, and this stock has had 8 straight days of gains. It's cooled off ever so slightly from the highs of the day, but in this 8-day gaining streak, the stock is up around 40%, and this is the third instance in this 8-day winning streak where we have had more than 10 lakh shares traded in a single session. Here too, we've had well over 13 lakh shares that have been traded. The 20-day average is just around 2 lakh shares, and the stock is up 19% so far in 2025, making it the 5th straight year of positive returns. Now, the one that stands out though today is IEX, and that is making a move on some volumes in today's session. 4.5% higher on the stock. It's the second straight day of gains after a 4-day losing streak. The volumes today are the highest in the month of November that the stock has seen so far. We have had more than 1.5 crore shares that have been traded today. The 20-day average is just over 50 lakh shares, so it's 3x of its 20-day average, and the stock has just managed to cross its 50-day moving average of 141. So crossing key levels and on high volumes is IEX.
Okay, all right, Hormuz, thanks very much, as always, for all the buzzers of the day. Now, as promised, let's get you some market perspective. We caught up with Prashant Jain, the founder and chief investment officer at 3P Investment Managers, to get his sense on the prospects of the Indian economy. Now, Prashant says that this is the most optimistic he has felt on India in the last 35 years. Listen in.
In my 35 years of this industry, I feel the most optimistic about the next decade at least. And there are 3 or 4 very simple reasons. One, I think post-COVID, as remote working has gained acceptance, non-software service exports have grown exponentially. And I think India has very little competition in that space. There is no country in the world which offers, as Nilesh said in his opening remarks, the largest pool of English-speaking people, technically qualified, digitally skilled, the ecosystem of services, and at our price points. So I think what has happened, India's current account deficit has collapsed because of this. I think we are also getting a second shot at manufacturing. We missed it the first time. I think we'll do better this time. Manufacturing is a much bigger opportunity, and we are making good progress in our areas of weakness. So 25% of Apple phones are being assembled in India, and we know companies are going public that are now suppliers to the largest aeroplane manufacturers in the world, the Apples of the world. So I feel pretty confident about manufacturing as well. And finally, I think the government has never played a more supportive role than what it is doing today. So net, I feel quite optimistic. I think we should certainly grow between 6 to 7%. I think we have potential to grow beyond 7% as well. I compare India with its own past, and I feel optimistic about that. And so, I think 6 to 7% should not be difficult. But I think we are capable of growing faster. In 2000, blue collar salary in Mumbai was 4,000 rupees a month. A starting software engineer salary was about 30,000 rupees a month, 8 times that. Today, the both have converged. There are far more blue collared in India than white collared. Only 25% of Indians earn a fixed wage. That number globally is 50 to 75%. So I feel very optimistic about the rising purchasing power of blue collared workers.
Well, Prashant also commented on the impact of selling by foreign investors and believes that it is inconsequential in the face of the fresh money coming into the market. Also, listen into the segments of the market he is bullish on.
The biggest supply of stock is coming from the primary market. Foreign selling hardly matters now. I mean, you are getting what, 500,000 crores of fresh money into the markets every year, including mutual funds and other formats. And that is the supply of new stock. I mean, let foreigners sell 50,000 crores, 1 lakh crores, it's okay. It is 10-20% of the supply. And I think that supply of new stock moderates itself to the demand. So I would say if flow goes down, the supply of new stock would also go down. So I think these markets are in a low volatility, lower moderate kind of returns. See, I think what has happened is this has been a narrative-driven market because pre-COVID there were 3 crore demat accounts. Today there are 20 crore demat accounts. And these 17 crore new demat accounts, they have no history. They had no accounts in the stock market before 2020. In 2020, the small mid caps fell the maximum. They fell 70%. The large caps fell 40%. Economic sensitive sectors fell a lot, and most PSUs were in economic sensitive sectors. So whatever fell the hardest has given the maximum returns. So 7 out of 10 investors have experienced these high returns, and they are wrongly extrapolating that, in my opinion. So I feel these themes have got there is business merit in those themes, but I think investment merit is clearly missing. So in my mind, clearly it is large caps over small mid caps. And look at it, in Nifty stocks, there is no supply of fresh stock. All the supply is in non-Nifty stocks. So I think that also favors large caps outperforming. I like large banks, I like insurance, I like software also. I am not so negative. Pharma is good, automobiles is good. I would be very cautious on consumer staples, white goods, brown goods companies, even retail companies. But even tobacco, telecom, oil and gas, utilities, these are also sensibly valued here.
And referring to that term liquid oxygen, Prashant mentioned that flows won't let the market fall and supply of paper will not let the market rise.
Last commentary, we described the current states of markets as a dialogue which is attributed to Ajit. I don't know which movie it is from. कि इसको liquid oxygen में डाल दो. Liquid इसको जीने नहीं, oxygen इसको मरने नहीं देगी और liquid इसको जीने नहीं देगा. So I think these markets are like that. The rapid demand of or flow of money to equities is not letting it go down, and the rapid supply, equally large supply of IPOs is not letting it go up. I think I feel that in majority of these issues, investors over long periods will lose money. The expectations are likely to be unmet because we are seeing many weak quality, average quality companies with suspect fundamentals or not so great fundamentals going public at crazy valuations. So I think in a lot of these issues, long-term expectations will be not met. At the same time, on the positive, I think from an economy's perspective, it is positive because all kinds of entrepreneurs, large, small, good, bad, I mean, everyone is getting lots and lots of money. Something similar has happened many times in the past. 92 was like this, 2000 was like this, 2007 was like this.
All not good examples.
So it is not happening for the first time. And I mean, I would again come back to the same thing, that investors have to be very discerning in where they are participating. Long-term outcomes, I think, will be very disappointing. I feel a lot of companies will have very weak supervision over time. Because if you look at some of these companies, the Ps will sell out in next 1, 2, 3 years. The promoter stakes are split over few individuals and they are in low to mid single digits. They will also cash out. So will these companies, all of them professionally governed companies, ultimately as they turn out, will they be well managed or no? I think that is another issue that one should consider when one is participating in these markets.
Well, take a snappy break, come back. Dealing room chatter on the other side. Nimesh is waiting for you.
SEBI.
Welcome back to Closing Bell. Well, as we speak, markets holding in the green. Nimesh standing by to tell us what he's picking up in D Street Chatter. Nimesh, we were almost there. But I think Friday to bante. What do you pick up in terms of flows?
Hi, Nigel. You know, as we speak, the Midcap index is almost in the red. So it's like a two-kind market, right? The Nifty heading towards an all-time high. But if you ask a portfolio investor or any investor or trader, they are sulking. You know, that's not making money for them. So that's the kind of a market we are. The large caps driven Nifty rally is clearly visible in the last couple of days, but that's not clearly spilling down to the broader markets. I'll explain a bit of broader market underperformance as well. But technically, I highlighted yesterday as well. 26,120 is a level to watch, and above that, you've seen a bit of a short covering rally today. Remember, the Nifty, the FIs are still short Nifty, almost 87%. So clearly, you will see further short covering rally if this, if this technical levels are sustained, and if market goes up from there. I guess the big trigger to watch will be the Indo-US tariff deal. There's a lot of chatter for the last couple of days. Given the Nifty move, there is a lot of hope. So need to see whether that comes out this weekend or before 27th of November. Flow again has turned slightly positive in the last couple of days. X of blocks as well. I'm getting a sense that there is a bit of buying interest back, especially in the large cap names. So Reliance is well bid. So is private bank stocks as well. And of course, IT in the last couple of days. Now coming to the underperformance in the broader markets, one of the technical reason is I understand one large FI seems to be merging with another fund. So they have close to 38-40 holdings and all liquid large cap names, mid cap names in that portfolio. And there they are either selling out or doing blocks as well. So maybe that explains a bit of underperformance in the broader market. But this Nifty rally seems to be clearly led by large cap names and a bit of short covering as well.
Oh, yes, absolutely. And one can only hope if those flows really come back in a sustainable manner. Some trickle we've seen from the FPIs this week, but let's see if it really builds. What about stocks, Nimesh? What's on your radar today?
Well, so the first stock on my list is GMR Power. That's been buzzing in today's market, good volumes as well. I understand the company is likely to raise funds via preferential issue very soon. So that's something to watch out for. Some marquee HNIs, some large FIs are likely to put money in GMR Power pref issue. So that's the trigger there. The second stock is Bharat Forge. It has actually recovered this week from the recent lows and has done well as well. Largely, I understand the selling pressure from a leading long-only fund is largely over, and some bit of domestic buying has also emerged in Bharat Forge of late. The third stock is Polycap. It's marginally under pressure today, but I understand there are first rounds of selling from a leading domestic mutual fund in Polycap. Remember, the stock has done well of late, so a bit of profit booking from a domestic mutual fund there. The last one is Grasim. It's actually done nothing in the last few months, been consolidating. It was under pressure after that CEO exit. But at least a leading large HNI investor seems to be quite active and is accumulating Grasim at current levels.
Okay, all right. Got that, Nimesh. Thank you very much for all the details and all the buzz today from the street. Let's, however, now hop across to Nigel, figure out what's happening in the F&O market. Nigel, I guess the bulls will have to wait another day.
Well, that's right. It appears that's the scene, right? Because the Nifty, yes, it's holding up in the green. But today, actually, both the two batsmen that actually are supposed to lead it on the way up, they're underperforming. The tech index has, trading more or less flattish or thereabouts. And actually, if you look at that chart, the Nifty Bank as well is a relative underperformer. It's up only around 0.2%, while the Nifty is around 0.5% higher. Why have we moved up? Because two constituent actually of the Nifty, which are more than 20%, they have done very, very well. Fresh buying is what we're seeing on Reliance Industries. The stock is looking very, very strong. It made a 52-week high in today's trading session. And there's a big open interest built up out there as well. So fresh buying on Reliance Industries, fresh buying on HDFC Bank as well, has made up for the kind of underperformance that we've seen from the other large few stocks on the Nifty pack itself. Moving to the options data, well, the Nifty PCR, that's holding at around 1.4 or thereabouts. And that's moving gradually towards the upper end of the range because the put writers, they're feeling they are in the game. 26,100 put, well, the premium has come down to around 75 rupees. At the start of today's trading session, it was at around 160 rupees. The 26,200 put as well, the premium out there has come down to around 114 rupees, 110 rupees or thereabouts. At the start of today, it was around 215 rupees. So that's the kind of writing that we're seeing out there. At upper levels, it seems the call writing is now moving up. It's moved up to close to around the 26,250 call. The premium out there is at around 110 rupees or thereabouts. At the start of today, it was less than 55 rupees. So that's a big surge that is seen out there. A mix of activity. Those that bought yesterday, there was some buying, but today there is some writing that we're seeing at higher levels. In terms of individual stocks in focus, IEX, that stands out. A bit of a short covering bounce playing out on that one. I think tomorrow we'll be celebrating the fresh all-time highs. Back to you.
Okay, the bulls will definitely wait for that. They have waited long. So let's see if tomorrow we indeed get that. Amrish Balika joins us into the conversation. Amrish, good to have you in. What do you think? First, let's start with the easy question. All-time high? As early as maybe tomorrow, end the week in style?
Yeah, absolutely. In fact, for the last month and a half, I've been saying that possibly we should see a new high soon. But unfortunately, what's happening is just what we were discussing a while back. Most of the portfolios are in the negative, basically because the mid cap and small caps are really sulking. I mean, markets, Nifty is going one way, and the mid cap and small caps are going the different way. I just hope that once we see a new high, there could be some action back in the mid cap and the small caps, and we could see some amount of outperformance from there. And I think the trigger for all this should be that India-US treaty. So I think, I assume that should come by end of November, early December.
Ah, sure. Okay, so let's get to your stock then. What do you have for us today?
Today's stock is Concor Container Corporation, which is a market leader in container terminal operator business with about 55% market share. And they operate about 66 terminals now. They have 17,500 wagons, 54,000 containers. They're increasing the capacity to about 70,000 containers and 100 terminals by 2028, which means upside scalability is decently high. And they've been increasing the value-added services like terminal handling and logistics solutions, which are margin accretive. The dedicated freight corridor is a big trigger for them, and this will fully be operational at JNPT by March 2026. I think this last connectivity is quite critical for Concor, and we should see that happening in the next 3 months. Q2 volumes grew about 11%. EBITDA margins were about 24.2%. And cement container transport, I think that's another big opportunity which I think Concor has grabbed. Overall, 13% revenue CAGR expected over the next 3 years. So EPS expectation for FY27 is about 23. And with this, my target price is 690.
Got it. All right, Ambrish, want to ask you a few more questions. For the time being, we'll take a short break, come back, continue our chat with Ambrish, and also we'll wind down the markets. Welcome back. Well, let's get back to Amrish Balega. Amrish, any view on the alcohol stocks today? I noticed Radico actually was doing quite well. You have Tilaknagar as well as higher. Any view on these names? I'm just, wondering what's going to happen in Bihar. There's a prohibition that's in place out there, but the state finances are quite bad. I don't know whether or not they can take the bold decision because the women voters actually have supported the NDA in winning this election. That aside, what's the view on the alcohol stocks? What do you like?
Alcohol stocks like Tilaknagar, again, after that buyout, I think we should see much better sort of revenues and margins going ahead. So Tilaknagar, I think, should be bought even at the current levels.
Okay, all right. And any others? Would that be the pick from the pack or you're bullish on the theme?
No, that's the pick from the pack right now. Although overall on the space I'm bullish, but I think this is one pick which should give decent returns over the next at least 6 to 8 months.
Interesting. All right. What about some of these newly listed companies, Amrish? What's the view? Grow, stop growing? Lenskart, in fact, had a pretty decent listing for the kind of valuations that they did come in at. You had Physics Wala actually that's come off the top. And, the other one, Tenneco, a lot of interest, was up 20% yesterday. Today, it's given back a little bit. Any view on any of these? Have you had a look?
I think most of them were decently expensive, whether you talk of Grow or Lenskart or even Physics Wala. I think the move which we saw in some of them, especially Grow, we saw nearly 100% sort of a move. I think that had to do more with technicals because of that low float. A lot of short squeeze that happened. We had seen a lot of auctions happening, because of which we had seen that move. But then once the anchor, investors start selling, possibly after a month, and at the same time, we should remember that they had placed a lot of shares in the private market to HNI investors. All through. I think the last deal which happened must have been about at 134, 135 just before the IPO, and post that the IPO came at 100. So I think there could be a lot of selling coming in from, that space also, but that's going to take time because there's a 6-month lock-in for those investors. But then, end of the day, it's the valuation finally which will come to play, and that's quite expensive. So I see Grow again going back to those levels, possibly of about 115, 120. I really don't see it worthwhile anything beyond that.
Okay, so need to perhaps watch this with some caution. Take that point, Amrish. NBFCs. Today, actually, a couple of these stocks are doing very well. Bajaj Finance is back up to 2.5%. M&M Finance surging this afternoon to 2.5% up as well. So what do you think of some of the frontline names on Shriram Finance? The market is still awaiting. Everyone keeps saying there may be a deal. So what would let's say your pecking order, your preference order be if you want to add 2 to 3 NBFCs to the portfolio?
One is Bajaj Finance, clearly. Because of the way the consumption is going. We have seen post-September, the sort of a consumption boom. That's going to help most of these NBFCs, which are basically retail-focused. They would benefit quite a lot, at least for the next 1 or 2 quarters. So from that point of view, Bajaj surely should be on the buy list.
And Saman Capital?
I would possibly wait a while because there are those controversies. So I would wait a while before looking at that.
I think a couple of stocks, that deserve mention. You had Aztec Life. The stock is now up 20%. Bazooka move is what we're seeing out there. Anupam Rasayan, these stocks are still gaining, but they've taken a bit of a leg up. And I think Piramal Finance, that's a newly listed company. In all probability, tomorrow it comes out of the trade to trade, because that cool-off period is over. So I think that's the reason why that stock now is locked in upper circuit. And there are pending buy orders on Piramal Finance as well. Just thought we'll highlight a few of these names that are moving quite well. And from the tech pack, actually, eClerx is moving pretty well. It's moved up a little bit as well in the last few minutes. So not so bad, actually, though I've been saying that portfolios are not feeling like those all-time highs. Select stocks are doing a jig of their own. Well, Amrish, appreciate you joining in and giving us the thoughts. I think it's just around 90 seconds odd. So time to wind down the markets for today's trading session. The Nifty goes home with a gain of close to under 150 points. No mean feat, pretty good. But getting into the final hour of trade, you thought that this was it, that we're going to be making those fresh all-time highs. However, that wasn't to be. HDFC Bank and Reliance Industries, those big boys, they did the heavy lifting in today's trading session. Both of them up close to around 1.5% and doing very, very well. Reliance in particular, well, that's the one that contributed the most to these 150 points on the upside. What is the problem then? The tech index, that was more or less flattish today, which is not bad after seeing a 3% gain in yesterday's trading session. Ended as flat as can be. And the Nifty bank, that ended with a gain of only around 0.2%. From the broader markets, a lot of stocks actually were moving around. You had Tilak Nagar Industries that was up close to 3.5%. On large volumes, you had eClerks as well that did pretty well. Aztec Life is another stock, that in fact did very, very well in today's trading session, was up 20%. Another one that's coming up on the list is UFO Movies, up 10%. Dredging was locked up 10% in the first few minutes of trade itself. And Anand Rathi shares as well, 6.5% up. So plenty of stocks should be. It did well in a market that was a little bit tepid actually, because the number of stocks declining still were more than the number of stocks advancing.
Absolutely. I mean, you do have a lot of those mid-cap high flyers, but on the losing side, must take in account the profit taking we've seen again on Grow. 8% down on Grow. Today, even PhysicsWallah came in for some selling. Orkla India, another recent listing, down about 4.5%. Some of these new listings cooling off. Hyundai Motor, Biocon, these were some of the other names. Nazara was down 4%. So these were some of the other names. Today's new listing, Fujiyama, by the way, has ended down 9% as well. So it wasn't a great day for the recent entrants on the street. Some caution in that side of the market. Well, the bell has gone, and that's where we take your leave on this edition of Closing Bell. But keep it with us, because Markets Forward will take the action ahead.
Indian markets end off their intraday peaks. Broader indices underperformed. The Sensex and the Nifty, however, scaled 52-week highs, remain just short of record levels. Midcaps and the Nifty bank indices post gains.
NVIDIA reports record sales and profits in the third quarter. Growth outlook also beats estimates, soothing frayed nerves on Wall Street and in other markets around the world. This spells fears over AI valuations, at least for now.
M&M targets organic growth of 15 to 40% across their businesses till 2030, aims to be the world's fastest growing SUV brand and top light commercial vehicle brand. Mahindra Holidays invests 1,000 crore rupees to foray into leisure hospitality. The Great Indian Bull Run well and truly on. You're watching us here on Markets Forward, your go-to show where we tell you all the key data points that took place today and also gear you up for the trading day tomorrow. 25,200, so close yet so far from the all-time high on our frontline indices. I'm Mangala Malu, with me Surbhi. Surbhi, what a day it was.
Oh, absolutely. Tantalizing, teasing. You can use all kinds of objectives because we're almost there, 30 points away. That's what it was. But then some profit-taking kind of set in. But nonetheless, the market had a fair amount of momentum. And what was interesting was that while other global markets came roaring back, thanks to NVIDIA, it's not like India was completely letting itself down. We held our own. A lot of the gains were intact. But yes, it was more a large cap day than a mid cap day. So we'll talk a lot about these trends as we go forward, the constituents of today's rally as well. But all in all, not a bad session, one could say, Mangalam.
Not a bad session, barring the last hour where we saw some profit taking, understandable because of the overheatedness of the market itself. But if there was a phrase to explain, it was basically all guns blazing. Why do we say that? The smooth shifting of baton that took place over the last few trading sessions, if you look at it, it was the Nifty Bank, which was doing well, all-time high yesterday as well. Took a bit of a backseat before coming back in the second half. And yesterday, what was it that supported the frontline index? It was the IT index. And today, the Nifty Bank as well as the IT index, both of them took a bit of a breather. It was the third wheel. It was Reliance. Just look at the big move that we saw in Reliance, ended at the higher end of today's trading session. So this smooth passage of the baton ensured that the Nifty run continued, irrespective of what was taking place in the broader end of the market. And on that itself, let's tell you what we have on the show today for you. We start obviously with the top movers and shakers of the day today, more decliners than advancers in the trading session by the end of it all. Mahindra outlines an ambitious growth roadmap at the Investors' Day. Adani Enterprises, they win the bid to acquire debt-ridden JP Associates, and NVIDIA quells AI concerns after posting a strong set of earnings in their third quarter. And last but not least, we prepare you for trade tomorrow, delve into the key market events you need to watch out for. So, first up, let's go straight across to Hormaz, who has all the top movers and shakers.
It was a fantastic day indeed, although we did not reach those record high levels, but no reason to complain whatsoever, and led predominantly by the financials. The Bajaj twins were in charge on the index today. M&M Financial had a good day. HDFC Bank contributed to the gains as well. So financials were up and running in today's session, but what did not have a very good day were the new listings, the new kids on the block. Grow had a very forgettable day, another 8% after that 10% circuit in the previous day. Physics Wala had a very sharp intraday recovery from the lows that it made and managed to end in the green. So it was a 17% recovery from the lows of the day. Tenco Clean also saw some profit booking, and Lenskart ending 3.5% lower in today's session. PSU Banks was another pocket that was sulking in today's session. Every constituent of the PSU Bank index ended lower in today's session, be it the larger ones or the smaller ones, losses of anywhere between 1.5% to 3%. Stocks that were moving on the back of strong volumes in today's session, Radico Khaitan was one of them. Natco Pharma and IEX made up in the list of names moving on strong volumes with a 4.5% move. And lastly, stocks that ended at a 52-week high in today's session. Hitachi Energy continues to move higher. Add to the two-wheeler names, Eicher Motors and Hero MotoCorp. Hero, of course, getting a second upgrade in as many days. And AI Engineering too had a good day, ending at a 52-week high today.
Okay, all right, Hormaz, thanks very much. So plenty of buzzers, movers and shakers on the street today. Let's get going then. Mahindra & Mahindra hosted its Investor Day, where the company outlined its ambitious future roadmap. The conglomerate is targeting organic growth of 15 to 40% across its businesses by 2030. Sudarshan joins in to lay down M&M's expansive growth blueprint. Sud.
So first I'll talk about Mahindra Group. It's holding the biggest ever investor day where all the 12 group CEOs are participating, and ahead of the investor day, these group companies have released details on the exchanges giving the very strong outlook over the next few years. So as a group, over FY22 to 25, the organic growth was 25%. Now going forward for FY26 to 30, now the target is in the range of 15% on the lower side, and on the upside, it's as high as 40%. Now coming to revenue outlook, where the group has given for 1 decade, that is from FY20 to FY30. For SUV and LCV, the growth target is 8 times. Tractor, 3 times. Truck and bus, which used to be earlier known as SML Isuzu, 6 times. And for Mahindra Last Mile Mobility, the growth target is 6 times. Coming to the market share, for LCV less than 3.5 tons, in FY25, market share was 51.7. Now, in FY26, it's seen rising to 54.1%. For SUV, in FY25, market share was 22.7%. That can increase to more than 26%, that is to 26.4%. For tractor outlook, the group companies have raised the outlook till FY30. So earlier, tractor industry outlook for FY25 to 30 was 7% CAGR. Now it's been increased to 9%, and demand would be raised by the company. Group is seeing demand for higher horsepower tractors, that is in the range of 40 to 50. They've also mentioned few aspirations. For SUV, they want to be world's fastest growing SUV brand. LCV, they want to be #1 brand across segments and applications. For tractor, they want to transform lives of farmers globally by democratizing technology. For truck and bus, they want to be amongst top 3 in India's ILCV trucks, that is basically school bus and truck, focused mainly in higher commercial vehicles. In EV, they want to be #1 in eCV company with 1 million EVs on road by 2031. For M&M Finance, they want to be amongst most trusted financial services provider for Bharat. So it means they want to focus on rural area, and till FY30, they see 5 times AUM growth. For Tech Mahindra, turnaround is expected to be completed by FY27. On a similar trend, they have a huge target for Mahindra Holidays and Mahindra Life also. So big investor day and a big outlook by Mahindra Group.
Indeed, take that point, Sudarshan. Big investor day, big outlook as well. Good time to welcome our guests. Amrish Balika joins in. Along with him is Ruchit Jain as well. Amrish, coming to you first. What do you make of all these projections that the Mahindra Group has made for growth across its companies, and in this wide ranged names that we have in this, in the conglomerate, which is the most investable idea right now?
See, there are 2 most investable ideas in that group. One clearly is a flagship, Mahindra and Mahindra. Looking at the way, the SUV market is going, that's the major market right now, and Mahindra is a leader there. And even in EVs, the sort of vehicles they have launched, I think they would be the leaders even going ahead. So Mahindra and Mahindra is clearly one of them. And the second one is Mahindra Holidays, which again I've been recommending for a while. I think that's one stock which can, in fact, become a multi-bagger going ahead. Because they are clearly doubling the number of keys they have, and now they are setting up a new leisure subsidiary. But I think the most important thing to be looked out here is that Mahindra Holidays has completed 25 years. So the first set of subscribers who had in fact paid for the capex done in the last 25 years, they would be moving out one by one, and those assets will become free. I think market is yet to look at this side of the trigger. I think this should play out at least over the next 2 to 3 years.
Okay, all right. Got that point, Amrish. Do stay on. We'll have more questions for you in just a bit. But let's also address what was the biggest global story of the day. Chip maker NVIDIA alleviated fears of AI spending turning into a bubble with a strong third-quarter performance that surpassed Wall Street's expectations. The world's most valuable company's guidance for fourth-quarter sales was also stronger than what the street had factored in. Hormaz is here with more details. Hormaz.
Too good to be true. That's not possible. Mano ya na mano. You can use all of these phrases when you look at NVIDIA's results this quarter, but the numbers don't lie. It is what it is. Now, yet another blockbuster quarter from the world's most valuable company, and markets across the globe are breathing a sigh of relief. Now, we all know NVIDIA's results were a beat on expectations, but that's not it. Here's a bigger picture. Now, for the first 9 months of the year, NVIDIA has reported sales of close to $150 billion, profits of close to $80 billion. And for the fourth quarter, it has made a projection of $65 billion in sales, despite the issues in China. Now, if this guidance holds, the company could well end the year with sales of over $200 billion and profits in excess of $100 billion. But how big is too big? Here are some illustrations to show how big NVIDIA actually is. For the first 9 months of this fiscal, NVIDIA's profit is $77 billion. Now compare that to the sales reported by its closest competitors, Intel and AMD, for the same time frame. That is close to $60 billion. This shows that NVIDIA is earning more than two of its closest rivals put together are managing to sell. Now that is some statement. Now, more than the results, the global markets are also breathing a sigh of relief from Jensen Huang's remarks. He mentioned on the earnings call about the AI bubble, saying that from their vantage point, they see something very different. And when the CEO of the world's largest AI chip supplier says all is well, the market surely takes note of it. NVIDIA recently hit $5 trillion in market cap. You heard that right, $5 trillion. Now, the journey from 4 trillion to 5 trillion happened very quickly. It took only 79 trading sessions. We hit 2 trillion in Feb of 24, went to 3 trillion in June of 24. Then we had a bit of a sell-off. Then we hit 4 trillion in July of this year. And then we hit $5 trillion very recently. Now, the last time when the stock had hit $4 trillion, we tried analyzing what if NVIDIA was a country. Today, we tell you what if NVIDIA was a stock market on its own. After a brief post-listings, post-5 trillion slump, the market cap is now below that $5 trillion mark. But even at $4.5 trillion, NVIDIA is only smaller than the stock markets of China, Japan, Hong Kong, India, and of course, the United States. Here's another illustration of how big NVIDIA is. Out of the 13 quarters of the fourth quarter of FY23, NVIDIA had sales of around $6.5 billion. Now, for the current ongoing fourth quarter of FY26, the sales projection is $65 billion. That's a 10x jump in just 3 years. The exponential growth shows up in the stock price as well. Between 2020 and 2024, NVIDIA stock has doubled or even tripled in value in 4 out of the 5 years. Even this year, the stock has more than doubled from its tariff lows, but such was the damage that even today, the year-to-date gain is only 35%. CLSA has retained its high conviction outperform rating on the stock with a target of $270. Despite this surge, only 1 out of the 79 analysts that track the stock has a sell rating on it. If CLSA's target is higher, there are targets even higher, as high as $350 on NVIDIA. So in this battle of David versus Goliath, the Goliath keeps getting bigger and better, and the Davids around it are also cheering the results with share price moves of their own. NVIDIA has categorically stated that the AI boom is here to stay, and it wants to have the largest share of that pie, one chip at a time.
Oh, and it is reigning supreme. And how Horma's very, very interesting analysis there. Those are just absolutely mind-boggling numbers, right? When you see what has happened in a matter of just 2-3 years. So quite phenomenal. Thank you for that. Amrish, now we can't discuss NVIDIA. We don't have, that's not what we are doing here, but we can discuss NetWeb, right? And that's been a stock that's been seen as a, NVIDIA play here in India. They're one of the suppliers, but the stock has also rallied a lot. It's off its all-time high. What's your sense on it?
As long as we have the AI rally, possibly we could also see NetWeb also moving up. Just about 2-3 days back, there was a fear of a crack because of NVIDIA earnings. But then with such encouraging earnings, I think this fear will shift for at least another quarter more. So I think come February, again, the same issues will again come into the markets. So from a short-term angle, yes, I think NetWeb can move up more from here, maybe levels of about 3,800, 4,000.
All right, that's the point. Rojit, coming to you, Reliance is, the top contributor. We've seen the stock move a bit. It's at a 52-week high, but, not quite there at the all-time high as well. What's your view on this stock, and where do you think it goes from here? Was this up move today just an aberration or maybe the start of a move?
I think it seems to be more of a continuation of the uptrend. The stock has seen a good up move from the 1360, which were the recent swing highs. And no, if you look at the previous swing high on 9th of July, the stock had faced a resistance around 1545. And no, today it has closed above that previous swing high resistance. So this clearly indicates a continuation of the uptrend. And if you look at today's entire day's volume, they were better than what we usually see on a daily basis. So a breakout above previous swing high supported by high volumes is just a sign that we should see a continuation of the move. So I think 1600, which were 1590, 1600, which were all-time highs, that should be seen quite soon in Reliance Industries.
To say the same of another big heavyweight, HDFC Bank, that too hasn't set the street on fire with its move. It's been the other parts of the Nifty Bank which have been doing well. HDFC Bank today woke up. It was up around 1.5%, ended at the higher end of today's trading range. Do you see a similar pattern for HDFC Bank as well?
I think if you compare this entire up move in the stocks such as Reliance, HDFC Bank, along with the markets, then I think this leg of up move has been led by these heavyweights itself. If you look at Nifty returns versus the mid cap on the small caps also, then in this month itself, in month of November, Nifty is up by 2%, Bank Nifty is up by almost 3%, while the small cap is down by 2%. So clear there has been a divergence in the mid and the small cap stocks and the mid cap and the large caps in this month. And I think that trend is likely to continue at least towards the end of this month. So the large caps leadership, if we see, then stocks such as Reliance Industries, HDFC Bank, these are few names where a clear outperformance is there. So even HDFC Bank on charts looks good. The stock has seen a good base formation around its 50 DEM of 985, 990. Until that is intact, we expect higher levels around 1040, 1050. So short-term trading opportunities, if one is looking, then it's best to look opportunities within the large cap space itself.
Okay. All right, gentlemen. Thank you very much for joining in and giving us all your perspective and views on the market and stocks. We have to take a very quick break. Come back on the other side and we'll get you the top corporate voices of the day as well as the events to watch tomorrow. Welcome back. As promised, let's get you all the corporate action of the day. It was a muted D-Street debut for Fujiyama Power. The stock listed at a 4% discount to the issue price. Chairman Pawan Kumar told us that the company aims to cut debt and interest costs by 50%. He added that the new Ratlam facility will double its overall capacity.
And the giant Wonderla Holidays has, they expect 7 to 8 lakh visitors in a year in its new Chennai park, which opens on December 2nd. This will grow to about 1 million by the third year of operations. The management told CNBC TV18 it could reach break-even in the first to second year when it comes to the EBITDA level, and payback period would be over the next 6 to 7 years. They're also in talks with several state governments, including the likes of Mumbai, Maharashtra, and Delhi, Gurgaon, for setting up parks in those major cities.
Founder of Quant Mutual Fund, Sandeep Tandon, told CNBC TV18 that several factors now support a strong pullback rally in the market, and he even expects the Nifty and other frontline indices to hit fresh all-time highs as early as December. Tandon added that he sees opportunities in neglected sectors such as insurance, NBFCs, and some private sector banks.
All right, and as always, before we wrap up, we'll get you all the key market events to watch out for tomorrow. Upasana Bhatt standing by with the events.
Well, first up, let us look at the global economic cues. US will be reporting its Fed balance sheet that will be out tomorrow, Japan core CPI data, and back home, that is in India, S&P global manufacturing PMI data will be out tomorrow. So let us look at the key stocks that will be on our radar on the back of corporate action. Stocks like Oil India, IRCTC, MRF, Sonata Software, all these stocks will trade ex-dividend tomorrow, so they will be in focus. Next up is Kotak Mahindra Bank. Board will consider proposal of stock split. Now on the IPO front, Sudeep Pharma opens for subscription, while Excelsoft Technologies will close for subscription. And furthermore, in terms of listing, Capillary Technologies will be listing on exchanges tomorrow, so we'll be keeping an eye out on that as well. Now, let us look at some of the key important events tomorrow, such as PM Modi to attend G20 summit in South Africa. Finance Minister Nirmala Sitharaman pre-budget consultation with industry stakeholders in sectors like energy and infra will be taking place tomorrow morning, so we'll be tracking that as well. And lastly, Piyush Goyal will be visiting Israel, and the talks on trade, technology and investment is what is being discussed there. So all in all, looks like quite an eventful day tomorrow.
Okay, all right, Upasana, we will track all of those events very, very carefully. Thank you for getting us the latest. Well, with that, it's time for Mangalam and me to take your leave. But before we go, Mangalam, now, you know, he's a veteran in the market, right? Yep. He's someone who has seen so many market cycles, usually someone who's seen as a bit of a conservative fund manager, someone who, you know, checks the numbers very, very carefully. I'm talking about Prashant Jain. And guess what? He's turned positive on the market, or he says he's the most positive on the market in 35 years.
Wow, and the last 35 years, if something is to go by, it's been a big rally that we've seen in the Indian markets. And if he's more positive now, where do we go from here? Well, let's hear out Prashant Jain. What we'll do is take your leave and you stay tuned to CNBC TV18. More news and updates follow.
I compare India with its own past, and I feel optimistic about that. And so, I mean, I think 6 to 7% should not be difficult. But I think we are capable of growing faster. In 2000, blue-collar salary in Mumbai was 4,000 rupees a month. A starting software engineer salary was about 30,000 rupees a month, 8 times that. Today, the both have converged. There are far more blue-collared in India than white-collared. Only 25% of Indians earn a fixed wage. That number globally is 50 to 75%. So I feel very optimistic about the rising purchasing power of blue-collared workers. So I feel these themes have got there is business merit in those themes, but I think investment merit is clearly missing. So in my mind, clearly it is large caps over small mid caps. And look at it. In Nifty stocks, there is no supply of fresh stock. All the supply is in non-Nifty stocks. So I think that also favors large caps outperforming. I like large banks, I like insurance, I like software also. I am not so negative. Pharma is good, automobiles is good. I would be very cautious on consumer staples, white goods, brown goods, companies, even retail companies. But even tobacco, telecom, oil and gas, utilities, these are also sensibly valued here.
Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the headlines that we're tracking for you this evening. Nifty hits a 52-week high and comes within 30 points of the record high. Sensex gains nearly 500 points. Nifty Bank and Midcap Index hit a record high before giving up some gains in late trade. Nvidia reports record sales and profit in the third quarter. Growth outlook also beats estimates. Soothing frayed nerves on Wall Street dispels fears over AI valuation, at least for now. United States approves the possible sale of Javelin missiles and Excalibur projectiles to India worth nearly $93 million. This comes just days after India signed a deal to buy cooking gas from the US, accounting for 10% of LPG imports in 2026. M&M targets organic growth of 15 to 40% across businesses till 2030, aims to be the world's fastest growing SUV brand and the top light commercial vehicle brand. Mahindra Holidays invests 1,000 crore rupees to foray into leisure hospitality. Starbucks CEO Brian Niccol says India sits at the heart of their global strategy as it brews its 500th store in the country in partnership with the Tatas, highlighting that US tariffs has not impacted sourcing as India has a localized supply chain. That's an exclusive. Supreme Court refuses to prescribe timelines for governors and the President of India to clear bills passed by state legislatures, signals limited judicial scrutiny for prolonged, unexplained and indefinite delay in granting assent to bills.
मैं नीतीश कुमार सत्यनिष्ठा से प्रतिज्ञान करता हूं।
JDU Supremo Nitish Kumar takes oath as the Chief Minister of Bihar for the 10th time after NDA's landslide victory. 26 other MLAs, including BJP Samrat Chaudhary and Vijay Kumar Sinha, sworn in as well. Prime Minister Modi, Home Minister Shah and top NDA leaders attend the ceremony. Any peace plan on Ukraine must take Europe and Kiev on board, say EU officials. This after US and Russian officials draft a peace plan which will require Ukraine to give up some territory and downsize its military. 28 people were killed in Ukraine after Russian strikes yesterday. At least 32 killed in Gaza in 24 hours in Israel's latest violation of the US-brokered ceasefire. Dozens injured as per Gaza's media office. Over 280 have been killed and more than 650 injured in nearly 400 Israeli violations since the October 10th ceasefire. Those were the headlines that we're tracking for you this evening, but straight to the day's market action. Sensex and Nifty hit 52-week highs after a steady session on Dalal Street. In fact, the Nifty was just 30 points away from its record high during intraday trade. Both indices did give up some gains in late trade. Nifty Bank and the Midcap Index hit a new record high before seeing some profit booking. The Midcap underperformance kept the market breadth in favor of declines. Surbi Upadhyay is here with all of the action from Dalal Street. Surbi?
Let's dissect what really transpired today. So today, if you talk about the leading sectors, then defense, infra, oil and gas for sure, thanks to Reliance, capital markets, autos, and even banks. Banks didn't lead from the front, but they did chip in, and I'll get to more of this in just a bit. The lagging sectors today, real estate, pharma, healthcare, and PSU banks. Let's see how this translates into actual Nifty stocks. So Nifty gainers, Reliance Industries, like I'm saying, and the other heavy hitter, HDFC Bank, contributed quite nicely. Axis Bank was up and about, and auto stocks had a pretty good session, specifically some of the two-wheeler names like Eicher Motors as well as Bajaj Auto. Both those stocks up between 1 and Eicher, the Nifty winner, actually going up to almost 3% gains. The losers then, some consumer stocks like Asian Paints, Titan seeing profit taking. Lever was also down, and some of the tech names that did very well yesterday, they cooled off today. So names like Infosys and HCL Tech, to name a few. Now let's come to the mid-cap part of the market, and that was the only grudge, so to speak. Because mid-caps underperformed large caps, the index was more or less flat, and the advance decline ratio was also negative. More declining stocks than advancing stocks in the market today. So let's talk about the movers, the big listings or the recent listings. Today was a day to come down to gravity. So Growth, second day running, managed to see a cut. 6-7% down on Growth. Physicswala was also slightly lower. Hyundai had a bit of a rough session, 3% down on Hyundai Motor. Biocon, and like I said, IT, not just large cap, but even mid-cap IT, which was sizzling yesterday. Today was some profit taking on names like L&T Technologies. There was Coforge and Intellect Design. Let's talk about the gainers on the upside. Today, Mahindra & Mahindra, the group had its investor day. So some of those group stocks were really surging. M&M Financial, for instance, 4-5% higher. Mahindra Holidays, which is also getting into the leisure and hospitality space now. That stock was up about 3-3.5% as well. Beyond that, there was Radico, Khaitan, Netweg surging thanks to the strong performance from NVIDIA. And then some other names like Canada, Robeco, AMC, 9% higher on this one. And even IEX had a good session, 4% up.
Right, Sabri, many thanks for those details. Now, chip maker NVIDIA quelled fears of an AI spending bubble with a strong third-quarter performance that surpassed Wall Street's expectations. Net income rose 65%, riding on the back of a 66% year-on-year increase in its crucial business data center sales. The world's most valuable company's guidance for the fourth quarter sales was also stronger than what the street had factored in. Hormaz Fatakia is here with all of those details. Hormaz?
Too good to be true. That's not possible. Mano ya na mano. You can use all of these phrases when you look at NVIDIA's results this quarter, but the numbers don't lie. It is what it is. Now, yet another blockbuster quarter from the world's most valuable company, and markets across the globe are breathing a sigh of relief. Now, we all know NVIDIA's results were a beat on expectations, but that's not it. Here's a bigger picture. Now, for the first 9 months of the year, NVIDIA has reported sales of close to $150 billion, profits of close to $80 billion, and for the fourth quarter it has made a projection of $65 billion in sales despite the issues in China. Now, if this guidance holds, the company could well end the year with sales of over $200 billion and profits in excess of $100 billion. But how big is too big? Here are some illustrations to show how big NVIDIA actually is. For the first 9 months of this fiscal, NVIDIA's profit is $77 billion. Now compare that to the sales reported by its closest competitors, Intel and AMD, for the same time frame. That is close to $60 billion. This shows that NVIDIA is earning more than two of its closest rivals put together are managing to sell. Now that is some statement. Now, more than the results, the global markets are also breathing a sigh of relief from Jensen Huang's remarks. He mentioned on the earnings call about the AI bubble, saying that from their vantage point, they see something very different. And when the CEO of the world's largest AI chip supplier says all is well, the market surely takes note of it. NVIDIA recently hit $5 trillion in market cap. You heard that right, $5 trillion. Now, the journey from 4 trillion to 5 trillion happened very quickly. It took only 79 trading sessions. We hit 2 trillion in Feb of 24, went to 3 trillion in June of 24. Then we had a bit of a sell-off. Then we hit 4 trillion in July of this year. And then we hit $5 trillion very recently. Now, the last time when the stock had hit $4 trillion, we tried analyzing what if NVIDIA was a country. Today, we tell you what if NVIDIA was a stock market on its own. After a brief post-listings, post-5 trillion slump, the market cap is now below that $5 trillion mark. But even at 4.5 trillion, NVIDIA is only smaller than the stock markets of China, Japan, Hong Kong, India, and of course the United States. Here's another illustration of how big NVIDIA is. Out of the 13 quarters at the fourth quarter of FY23, NVIDIA had sales of around $6.5 billion. Now, for the current ongoing fourth quarter of FY26, the sales projection is $65 billion. That's a 10x jump in just 3 years. The exponential growth shows up in the stock price as well. Between 2020 and 2024, NVIDIA stock has doubled or even tripled in value in 4 out of the 5 years. Even this year, the stock has more than doubled from its tariff lows, but such was the damage that even today, the year-to-date gain is only 35%. CLSA has retained its high conviction outperform rating on the stock with a target of $270. Despite this surge, only 1 out of the 79 analysts that track the stock has a sell rating on it. If CLSA's target is higher, there are targets even higher, as high as $350 on NVIDIA. So in this battle of David versus Goliath, the Goliath keeps getting bigger and better, and the Davids around it are also cheering the results with share price moves of their own. NVIDIA has categorically stated that the AI boom is here to stay, and it wants to have the largest share of that pie, one chip at a time.
So in NVIDIA, they're getting bigger and better. Thank you, Harmas, for those details. Now, the United States approved the possible sale of Javelin missiles and Excalibur projectiles worth nearly $93 million to India. The Excalibur deal is for $47 million and the Javelin deal is for $46 million. The U.S. said that the package includes 216 Excalibur artillery rounds and 100 FGM-148 Javelin missiles. This comes after India signed a deal to buy cooking gas, indicating a potential easing of trade tensions. Federal Reserve officials were at odds during their October meeting over cutting interest rates. According to written records of the meetings, the officials were also divided on whether the central bank should cut rates next month. The minutes indicated that most participants felt that further rate cuts were warranted, but not necessarily in December. However, participants does not denote voters. There are 19 participants at the meeting, but only 12 vote. And speaking of the Fed, U.S. President Donald Trump said that he would love to fire Jerome Powell. Addressing the U.S.-Saudi Investment Forum in Washington, the president also said that Treasury Secretary Scott Bessent needs to work on Powell to quickly lower rates, indicating that the Treasury Secretary's job depends on it.
Mortgage rates are down despite the Fed. Scott, you got to work on this guy. He's got some real mental problems. No, he's something wrong with him. It's just, I'll be honest, I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. I'm building a ballroom that's going to cost a tiny fraction of that, and it's bigger than the whole thing put together. You got to work on him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Shares of pharma major Zydus Life Sciences rose as the company onboarded 3 investment bankers for a 5,000 crore rupee fundraise. As per a Money Control report, they are Jefferies, JP Morgan and IIFL Capital. Money Control has also reported that the funds will be raised via qualified institutional placement, which is likely to be launched at the start of 2026. Infosys' 18,000 crore rupee share buyback opened today, making it the company's largest buyback to date. The buyback, priced at 1,800 rupees per share, will close on November 26th. Infosys aims to repurchase 10 crore fully paid-up equity shares. The company said the buyback is intended to return surplus funds to shareholders in line with its capital allocation policy. Promoters who hold just over 13% will not participate in the buyback. Investors continued to book profits in newly listed broking firm Grow, which fell 9% today. The stock, which had rallied nearly 90% since listing, has now slipped 18% in just 2 sessions. This amid stretched valuations and shorting by traders. The stock's market capitalization now stands at 98,000 crore rupees. The Mahindra Group hosted its annual Investor Day. The conglomerate is targeting organic growth of 15 to 40% across businesses till 2030. The group aims to be the world's fastest growing SUV brand and the top light commercial vehicle brand. Mahindra Holidays is foraying into leisure hospitality by creating a wholly owned subsidiary with an investment of 1,000 crore rupees. CNBC TV18 spoke to the CEOs of all Mahindra Group companies, and that special show will be broadcast at 6:30 a.m. tomorrow. Representatives from the tourism and hospitality sector are with Finance Minister Nirmala Sitharaman for pre-budget consultations. Sources say the sector has sought industry status, which has been a long-pending budget demand. They have also sought clarity on GST treatment, especially on how rates apply to room tariffs amid dynamic pricing. Single window clearance system for the hospitality sector is also one of the key demands. Starbucks CEO Brian Niccol has said that India is one of its fastest growing markets as it gears up to open its 500th store in the country. In an exclusive interview with CNBC TV18, Niccol outlined their India growth plans. He said that they were in India building a coffee culture for the long term. Starbucks runs its India operations through a 50-50 venture with Tata Consumer Products. On that note, it is time for us to head into a short break. But coming up next, Supreme Court refuses to prescribe timelines for governors and the President of India to clear bills passed by state legislatures. More details on the other side. Stay tuned. Welcome back. The big national story today. JDU Supremo Nitish Kumar took oath as Bihar's chief minister for the 10th time after a landslide NDA victory in the assembly elections. The 74-year-old is now India's 8th longest-serving chief minister. 26 legislators, including BJP Samrat Chaudhary and Vijay Sinha, took oath as well. The contours of the new cabinet are yet to be formalized. A majority of the MLAs who took oath along with Nitish were from the BJP. Prime Minister Narendra Modi, Home Minister Amit Shah and top NDA leaders attended the oath ceremony at Patna's Gandhi Maidan. The Supreme Court has refused to prescribe timelines for governors and the President of India to clear bills passed by state legislatures. But the top court signaled limited judicial scrutiny for prolonged, unexplained and indefinite delay in granting assent to bills. This comes after a rare presidential reference was made to the court over its verdict in April, which imposed a 3-month deadline on dealing with bills passed by state assemblies. Ashmit Kumar is here with more on the court action. Ashmit, explain the Supreme Court's observations today and its implications.
Well, first up, it was in the month of April that a bench of the Apex Court itself had granted this order, had directed for a 3-month deadline to be imposed on the president as well as the governor. It is in response to that we had a presidential reference, which is in the nature of a question. The president is asking a question from the Supreme Court that can such a deadline be imposed by the Supreme Court on the president who happens to be a constitutional office bearer. Now, that was the question, among others, that was being dealt with by the Apex Court. And then, as a part of an opinion, today's the findings that the Supreme Court has given is an opinion. It is not binding on the government. It is only, it has a guiding force, but nonetheless, coming from a bench of the Supreme Court of no less than 5 judges, it does carry a significant amount of weight. Now, what does this opinion to the presidential reference say? Well, this opinion clarifies that as far as deadlines are concerned, timelines are concerned, that is simply not the court's power. It simply does not have the remit, the power, the jurisdiction, the scope to start telling the president and the governor that, look, this is a timeline within which you have to decide on bills that are being sent to you by state assemblies. That's one. But having said that, there are a number of caveats that the Supreme Court has given with respect to powers of the governor. All of this issue, of course, arose with a number of opposition-ruled states, the likes of Kerala, Tamil Nadu, Punjab, raising the issue before the Apex Court that bills are being passed by the state assemblies, the governors are sitting on them indefinitely. To that end, this opinion by the Apex Court has clarified that, number one, the governor has 3 options. He can either agree, he can send the bill back to the state assembly or refer it to a president. What the Supreme Court today clarified is that the governor cannot sit on it indefinitely, cannot defeat the entire legislative exercise, that it is the cabinet, the elected government that needs to be in the driver's seat, that this is something that the governor cannot do. What the Supreme Court has also said, that as far as deciding of this granting of assent is concerned, to that end, while the Supreme Court says that no deadline can be prescribed, the Supreme Court also says in the same breath that there needs to be a decision by the governor in a reasonable period of time, leaving the door open that tomorrow, if there is a situation that a bill is being passed but is awaiting the governor's assent, the governor is sitting on it indefinitely. There is a window now available for opposition-ruled governments to actually come and approach the Apex Court. So clearly, the Supreme Court trying to do a balancing act, on one hand saying that no timelines can be prescribed, but also in the same breath saying that governors cannot sit on these bills that are being passed by the state assemblies indefinitely. They need to take a decision, and they need to do so in a reasonable period of time.
All right, Ashmit, many thanks for those details. Now, India's Commerce Minister Piyush Goyal is in Tel Aviv on a 3-day visit to push for the long-pending free trade deal with Israel. He is leading a 60-member delegation to focus on deepening trade, investment flows and innovation partnerships. Abhimanyu Sharma reports from Tel Aviv.
India's Commerce and Industry Minister Piyush Goyal is on an official visit to Israel. He's expected to meet Israel's Minister for Science and Technology as well as Israel's Minister for Economy, Nir Barkat. In course of the next few days, there are B2B engagements expected between the Indian and the Israeli industry since a 60-member delegation from India from across several businesses is already present in Israel. There is also a likelihood that a potential FTA between India and Israel may also be discussed as part of the ongoing engagements. India is looking for more collaboration with Israel in several areas, particularly in areas of technology, innovation, wastewater treatment, and several possible joint ventures between both the sides. Now, several Indian companies are already invested in Israel and vice versa, and both the sides are looking to increase this engagement and possibly elevate this engagement by means of a free trade agreement between India and Israel.
I can assure you, friends, our first quarter growth was 7.8%. Our second quarter numbers are expected soon, will be about 7%. And I think at the end of the year, our year ends on 31st March 26, we will be growing at 7%, well above the world estimates.
Israel is a great startup nation, India is a great scale-up nation. So how do we, the real conversation was how do we combine the technological leverage that Israel has versus, and using that technology to do advanced manufacturing in India, to partner on AI and other advanced technologies, to look at sustainable things like sustainable areas of sustainability, like particularly in water, agriculture, and obviously energy transition.
And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
Let's Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, asset allocation. You've often heard on this show itself, a lot of experts talk about how important it is to diversify our investments across different asset classes. So it's very important not to be squarely focused on any one, equities or gold or fixed income. This is where hybrid funds come in. And within the hybrid category, one category called the multi-asset allocation fund category, this has been garnering a lot of investor attention. In fact, the flows into this category have been going up, and we'll put up some of the data points that highlight that. At a time when mid-cap and small-cap funds, traditional equity funds, they've been getting lesser flows, and I'm talking about the latest numbers which came in from the industry body AMFI. At a time when regular equity funds have seen slight dwindling in flows, this category, the multi-asset allocation category, has been quite steady. As you can see out there, flows have been averaging anywhere between 5,000 to 6,000 crores on a monthly basis. So what's behind this trend? Is it sustainable? And is this fund category really an important one when it comes to us and our journey of wealth creation? That's what we're going to discuss with R. Sivakumar, Head of Products and Corporate Strategy at Axis Mutual Fund. Sivakumar, thank you so much for joining in. It's a pleasure to have you, especially personally, now that you've taken the trip and you've come to our studio. So thank you so much.
Thank you. Thank you for having me.
So, Sivakumar, this is an interesting topic because in your earlier avatar with Axis Mutual Fund, I mean, you're a veteran of the fixed income market anyway. Now you're overseeing a lot of other categories as well. So just walk us through what you've made of the investor psyche and shifting investment trends as we've gone through a year of low returns to almost no returns in the equity category.
Yeah, it's a good place to start. I think equities have had a great run, and I think equity mutual funds have continued to see inflows despite, as you rightly said, well, not poor performance, but I think consolidating performance, shall we say, for the past year or so. It's interesting that flows have continued to be at a steady clip, maybe slightly off from the peaks in terms of net inflows into that category. One of the interesting things that we've seen, especially over the last six years or so, post-COVID, is that investors have continued things like SIPs even when there is market volatility, which was not the case before. Every time the market would slip, you would see SIP cancellations and redemptions because people would, get frightful. This is the first cycle where we have seen kind of an equity culture, if I may say so, getting built, wherein people are staying invested and adding to their investments, even if the market returns, near-term market returns are not very strong. So I think that's the first and most important thing that you can see in terms of investor psyche, let's say over the last few years that we have observed.
Okay, so that's what's happened so far. And then, I mean, tying in with that, and we always talk about it when the mutual fund numbers come out and everybody's looking at the net equity number, and sometimes it's lower, and it's come down a lot from 40,000 crores per month to about 25,000 odd. But since I do this show and I look at personal finance, I see it as a sign of maturity, because simultaneously flows into hybrid funds and into this particular category, multi-asset category, they have started going up.
Yes.
So would you say that the lesson of asset allocation, that's finally getting learned? Is it getting learned well? And then, how do we look at some of these hybrid categories when it comes to asset allocation?
Yeah, it's a great question. And I think you're absolutely right. Multi-assets flows have remained strong through this entire cycle. So one could argue, why is it if equities are done so well, why is it that people are investing in multi-asset and so on? I think a couple of key factors drive it. One is the relative stability. So when you look at long-term returns from multi-asset as a category versus equities as a category, returns are in the same ballpark, very close to each other. There are some really long periods of time when multi-asset has outperformed equity even, but at a much lower level of risk. And so the first thing is multi-asset as a category, I think, has proven itself. And this is not an India story. This is a global story. Across many markets, you have seen this data that multi-asset as a category has delivered similar return to equity, but at a much lower risk. The second thing that has happened, I think, is the tax change on fixed income funds, which happened a few years ago, and therefore the drop-off of fixed income allocation.
Yeah.
And people have chosen to invest in multi-asset and other hybrid categories as a proxy for debt, meaning to also get some debt exposure. I mean, that's one of the important drivers of flows into hybrid as a category as compared to traditional fixed income as a category. So I think that's something which again multi-asset as a category has managed to capture. That is to say, you get an exposure to fixed income and gold and equity at the same time, and you get a much more tax-advantaged way of playing those three assets together.
That's a very important graphic on our screen right now, and let's just explain that to our viewers. What you're seeing is basically how asset classes perform across different market cycles. And there is never a fixed rule. You can never wake up on the 1st of January and say, this is the asset class that's going to be the winner of the year. Because in this data, we've taken 3 different buckets, 5-year buckets. And you can see in the first bucket, immediately after the global financial crisis, which is 2008 to 2013, equities weren't doing that well. The Nifty 500 is actually down. The 10-year GSEC yield, basically fixed income was a better performing asset class, 9%, and gold, because we were in a risk-off environment, gold did really well. Come to the next 5-year bucket, 14 to 19, again, the returns are varying. Equity and gold somewhere around the 7 to 8% handle, fixed income 9%. And then the real equity bull market actually took off just after COVID, which is about 17-18% equity return, fixed income 6.5%, but gold did well even in this period. Now, who's to say, at least I cannot extrapolate the next 5 years and fill the 4th column of that table. But that's the thing. So, Shivakumar, let's address this. Asset allocation. For a lot of investors, they equate asset allocation to chasing kaun sa asset class acha karega. Now, gold did well, so let's put some in gold. And, maybe equities did really well, so let's go full hog on equities. How do we break out of that psyche?
Yeah. It's important that you break up asset allocation into 2 parts. What's called strategic asset allocation and tactical asset allocation. Strategic asset allocation has got everything to do with your return risk profile, and when you look at studies which say asset allocation explains all the returns of a portfolio, etc., those studies are based on strategic asset allocation, meaning how much you allocate to the different assets you own substantially explains the returns rather than individual stocks or bonds. It's really how much you allocate which matters a lot when it comes to long-term performance. That's the first part, right? Once you've agreed on a strategic asset allocation, let's say the classic portfolio 60-40, 60% equity, 40% fixed income. And these days, that's up for debate. Does that 60 become 61 or 65, or does it become 55? So how do you at the margin make that allocation decision on a year-on-year basis, or even on a 5-year cycle, as your data just showed, that for 5 years you can have different assets perform differently, right? That's where tactical asset allocation comes into play. So tactical asset allocation is about trying to play shorter term cycles, from a few months to a few years, where you take a call on which asset class should be overweighting or underweighting. And I think that's where these multi-asset funds, which take asset allocation calls, come into play. See, as an asset manager, I cannot create every strategic asset allocation there is. Some investor may be close to 0% equity and some are 100% equity. Can I create products at every mix? Not possible. But we can create products which take these tactical calls.
That's a very important and very interesting thing you said. So first of all, it's okay to take tactical market-related calls with respect to asset allocation. It's not like against the cardinal rules of financial planning. There is the overall asset allocation that you should have depending on the nature of investor that you are. I mean, are you a risk-averse investor or etc. But there is a tactical element to it. And that's where these multi-asset funds fit in.
Correct. And you can do this by having multi-asset funds which buy directly into stocks and bonds and gold, etc. But you can also do through a fund of funds route wherein you're investing across, let's say, equity mutual funds, debt mutual funds, gold ETFs, and so on and so forth. So I think the way to play this is multiple ways. If you're, for example, owning a multi-asset fund in the traditional way, which owns stocks and bonds directly, then it's more of a bottom-up picking of stocks, and with, of course, macro and other overlaid. But you can also do a fund of funds approach where you're doing a lot of top-down, right? Trying to figure out top-down, what's the right allocation to have, and then trying to find which funds, which strategies. Do you want to go into thematic or sector funds? Do you want to buy flagship equity funds? Do you want to similarly do on the credit side or a duration side, etc.? So that becomes an interesting way to have 2 or more approaches to tactical asset allocation.
Okay, so that's lesson number 1 that we've learned, that multi-asset funds could be an interesting way of blending more asset classes in a smart way into your portfolio, because we may not know all markets. We do not know which asset class could perform which way. There are, fund managers who have better visibility in all this and are more equipped at taking those calls. Now, Shivakumar, again, lesson number 2 is just understanding what these multi-asset funds look like, what is their structure. So I believe they have to invest in a minimum of 3 asset classes, right?
Correct.
And is there a minimum threshold, holdings? What is their overall, and what is the regulatory framework?
The regulatory framework is, yes, minimum 3, and the minimum within. So for example, if you have equities, that has to be minimum 10%. If you have commodities, that has to be minimum 10%. So from a regulatory perspective, to qualify as a multi-asset fund, you need to have minimum 3 asset classes, and each of them have to be meaningful. You cannot have
10%
1 or 2% in an asset class and call that a multi-asset fund. Right? So the idea is to have some meaningful allocation, and the regulatory minimum is 10%. So most of the funds in the industry have gone with equity, fixed income, and gold, or commodities in general, gold, silver, and other commodities, as a way to satisfy this need. And I think that's probably the right approach. You could add global stocks, for example, as another asset class in this. I don't think anyone's really doing it. And in the current situation, of course,
There are limits on the global
limits,
exposure that you can take.
And that creates its own challenges. So therefore, today that may or may not be the right way to do it, but at least you can have minimum of 3, minimum of 10% in each. Whether you do that through direct investments or through a mutual fund, it's fine. But the idea is to have at least 10%. That's something meaningful. The second consideration that comes into play here is, of course, taxation. As we discussed, on debt, taxation is quite punitive in the sense you get marginal tax. Whereas if you do a fund of funds, or if you do a 65% plus equity or a 35% plus non-fixed income, then you get long-term capital gains tax, which is way more beneficial to investors. So that's the other consideration that fund managers have. That in theory, you could have a multi-asset fund which is 80% debt and 10% equity and gold, but it doesn't make sense because it's far more tax inefficient. So you would want to be equity heavy, or you would want to be at least reasonably balanced.
But that's also an interesting dilemma, perhaps, that it raises in itself, taxation. Yes. Because like you explained, that if first of all, there is no standard taxation rule for multi-asset funds. Please be very clear and make sure you keep asking your advisors about this, because the way a multi-asset fund will get taxed will depend on the amount of equity it's holding. If it is holding more than 65% of its assets in equity, only then does it get the advantage of equity taxation, which means that after 1 year, you pay long-term capital gains tax at 12.5%. So that's the most favorable taxation from our perspective, from the investor perspective. But that also raises a question, and just tell us what you see across industry. In order to be tax effective, if most multi-asset funds are anyway loading up on 65% equity, then are they really being true to their mandate, which is offering a great balanced multi-asset portfolio?
Yeah, so there are two choices. One is about 65% equity to qualify for the 1 year long-term capital gains tax. The other is to be above 35% in non-debt. So up to 65% in debt, but not crossing that 65 threshold, which means you get long-term capital gains after 2 years, but the same rate. So which essentially, 2 years is nothing for a asset allocation investor, right? So I think for investors who have beyond 2 years, you do have a greater choice of these multi-asset type of products, because you can do pure equity or equity biased, or you can have a more balanced portfolio. So both options are on the table. I think we take too short a view sometimes, and we believe that 1 year is important, but 1 year is not important from your investment life cycle, right? You are investing maybe for 5 years, 10 years or more, and so it makes sense to look at these funds from a longer term perspective rather than from a 1 year perspective.
Okay, all right. So now we've learned the basics of this category, the multi-asset allocation category. We'll come back, talk about reasonable return expectations from this category, and also figure out what are the kind of funds. How do you choose the right fund? How do you blend it with the rest of your portfolio? That and more after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we are discussing multi-asset allocation funds, why they are important, and just how they can complement your portfolio for better, more balanced, and more sustainable returns. And of course, we have with us our Sivakumar of Axis Mutual Fund for this conversation. So, Sivakumar, the most interesting part, returns, right? So, experts like yourselves tell us that from equity, I mean, reasonable expectations would be like 12 to 14% compounding returns over long periods of time. In good years, it could touch 15%. Now, if you add more masala to the mix, because you have multi-assets now in this fund category, then what's the return expectation?
I would hope that this category can deliver returns which are broadly similar to equities, but a lower risk rate. So what that means is that, why that happens is because of the two things. One, these funds tend to be less volatile, therefore they have less drawdowns. I mean, if you think mathematically, right, if a fund falls from 100 to 90, there's a 10% fall. To get back to 100, you need 11% gain because 90 plus 10% is only 99. So it's not enough to get back to where it was. So the drawdowns are never fun. I mean, if you go from 100 to 75, which is a 25% fall, you need a 33% return to go back to previous peak, right? So volatility containment is the first way that these funds manage to keep return. The second thing is being able to take calls. I mean, as you pointed out earlier, this cycle gold has, I mean, equities have done really well, but gold has done even better. So how do you kind of have a process around picking which asset class to buy and therefore be able to deliver some alpha through that? And because of this, we expect returns in this to compete with equities. I think in a bull market, it's tough to beat an equity fund, but over a cycle, to be able to compete with equities in terms of performance at a lower rate of risk is what we would expect to do. And as I mentioned before, right, one of the interesting things is this is across the world. It's not an India-specific story. If you look at asset allocation everywhere in the world, you've seen similar to equity returns at a lower rate of risk. So it's globally valid statement that returns for multi-asset will be similar to equities.
Okay, that's quite phenomenal, right? Equity-like returns with lesser volatility. Now, who wouldn't want that? Which also brings me to the question, then how do you pick the right MAF, as they're called? If you hear that acronym MAF, you know we're talking about multi-asset allocation funds. How do you pick the one that's right for you? Because all of them would be running different strategies. Someone would have, more gold, less gold, more equity, less equity. So how do you decide?
I think, first of all, align to the asset allocation choice. I mean, as we discussed, some may have more than 65% equity and therefore bias will be towards higher volatility or higher equity allocation, and others would have a more balanced mix. So take that. Go for the right strategy. I mean, are you doing a pure equity debt approach, or are you doing fund of funds? Because again, that makes a difference to the return profile and the risk profile of that. So I think choices should be made more on the underlying asset allocation or the ranges which the fund managers are guiding, and the investment strategy. Is it a top-down fund of funds approach? Is it a bottom-up stock picking approach? And that would be the primary driving force. And of course, track record does matter. So you'll have to look at whether in the fund house is delivering on that, whether it is through returns or whether it is through actual positioning. I mean, if you are claiming to be an active asset allocator but you run passive, that's not helpful. Similarly, if you expect to be passive but then you're seeing wide ranges, again, that's not helpful. So what does it align with your view? As an investor, does the fund strategy align with my view? And that's going to be the first port of call.
Okay, fair enough. So plenty to think about as you make your final choices. Now tell us, at Axis Mutual Fund, what's the house call on different asset classes? I mean, what are you guys tactically most bullish on as we get into 2026?
The interesting thing is there's been a change in the market outlook over the last year or so. I mean, the most important thing, and I come from a fixed income background, so I'll start there, which is to say that, we've had an RBI which is extraordinarily accommodative, and yet bond yields have risen for the best part of the last several months, which usually is a signal that the economic cycle is turning up. Right? So expectations of inflation are slowly going up, and eventually with a 1 year, 2 year forward view, the market slowly expecting rates also to start moving up. That's what this suggests to me, that why is the market not reacting to today's movement of the RBI? Now, if the economic cycle is turning up, then obviously that's going to mean equities are
positive for equities.
Positive for equities. So really speaking, even though we've had relatively soft equity performance and relatively good bond performance over the last couple of years, I think the script is likely to flip, and bonds are likely to be middling. And I think if the growth cycle comes back, then equities will outperform. The other thing is how India has performed relative to the world. We have underperformed, and underperformed massively. So the valuation, or shall we say, the valuation premium of India to Asia or to the world has massively corrected.
Reduced, yeah.
Right? And we are now reasonably valued compared to the rest of the world. And if there is a change in the global investor psyche to move away from tech and AI, etc., to going back to fundamentals, then I think India will be a big beneficiary. As an allocation, so much of the money which has gone out of India has gone into tech stocks or China or any of these themes. And if that theme changes, suddenly you will see a big beneficiary. So I think we are a lot more positive on equities. I think fixed income will be more middling. I think gold really is about playing shorter term cycles, figure out gold and silver. Relative performance between gold and silver has been an important theme for us, rather than just absolute call on where gold will go. I think we'll continue to play that.
So still bullish on both gold and silver?
No, like I said, it's not about bullish on gold versus bullish on silver. I think for us, the way we've made money is actually weights between the two, meaning at what point of time do you want to be overweight silver, overweight gold. Keep a reasonable allocation, but play through relative valuations, relative prices, let me say.
All right, so that gives us sort of a broad framework that you at Axis Mutual Fund, your teams are deploying to take those investment calls. Finally, back to multi-asset allocation funds. In an overall portfolio that'll have equity, large cap, mid cap, small cap, it'll have some other maybe these dynamic asset allocation funds as well, because they also move across equity and debt. How much should we give to MAFs?
There is no, this now, we moved it from a realm of asset management into personal finance. And I think it's a great place, it's a great question from that perspective, because it affects all of us individually, right? At a minimum, it should be like, 10-20% of your portfolio should be in this mid space, meaning it's not pure equity, pure any one asset class. Then you need to have the tactical ability to switch. But then it changes according to every investor. So there is no one way of looking at it. But have a reasonable allocation, because these small cycles, 1 to 3 year cycles, do make a difference when it comes to performance. And as a normal investor, I mean, I work in an asset management company, and yet I myself take a reasonably passive view to my own investments, right? Because I'm not out there trying to make changes on a daily basis. So why not let an asset management company, let a fund manager pick that call, and you make your broader decisions as an investor. And that's why I feel that have a small but meaningful allocation to this hybrid category.
Okay, all right, Shivakumar, thank you very much. Great insights there, and plenty of food for thought, as well as perhaps investors look at getting more involved with their portfolio, adding more hybrids, and adding more than equity in terms of asset classes to their portfolio as well. Thank you so much for this conversation. Well, thank you, viewers, for being with us. Keep sending us your feedback, comments, queries, and of course, we'll see you again next week with another theme.
Let's talk money.
Hello and welcome. You're watching News Center. I am Ashmit Kumar. The Supreme Court has refused to prescribe timelines for governors and the President of India to clear bills passed by state legislatures. The 5-judge bench today said that there is no concept of deemed assent. However, the top court signaled that limited judicial scrutiny may apply in cases of prolonged, unexplained and indefinite delay in granting of assent. The bench further clarified that a governor cannot withhold assent if a bill is passed for a second time without any amendments. The court also remarked that governors cannot act as super chief ministers, stressing that there cannot be two executives within the state. This comes after a rare presidential reference was made to the court over its verdict in April, which had imposed a 3-month deadline on dealing with bills that have been passed by state assemblies. To discuss this further, we have with us senior advocates, Mr. Dushyant Dave, Ms. Geeta Luthra, as well as DMK spokesperson Salem Dharani Rajan. We'll connect with all of them in just a bit. But first, we have Mr. Dushyant Dave with us. Mr. Dave, pleasure speaking to you once again. Thank you so much for joining us on CNBC TV18. First, for the benefit of our viewers, if you could tell us the difference between a judgment and an opinion that has been given in a presidential reference like we saw today and the impact that it has. Are we now looking at a situation where the 3-month deadline that the Supreme Court gave in April stands overturned? Mr. Dave, I believe you've muted yourself.
Sorry. The difference between judgment and opinion is simple. Judgment is binding, the opinion is not. Opinion is given on a request by the president. She makes or he makes a reference to the Supreme Court and seeks the views of the Supreme Court. But be that as it may, the judgment definitely will have an impact on what was held earlier by Justice Pardiwala and Justice Mahadevan, in which they said that the governors are subject to the mandibus and that there is a time limit, and they prescribed a time limit of 3 months. To my mind, today's opinion is undemocratic, and it really runs completely contrary to the fundamental principle of parliamentary democracy, which applies both at the center and the states. The governors, or the president for that matter, are under the Constitution. They are not above the Constitution. Under our scheme, constitutional scheme, nobody is in imperio. Everybody is under the law. And another aspect is very important, that every power which is vested on any authority, be it constitutional authority, judicial authority, or anybody else, the power must be exercised reasonably and within a reasonable time. And here, shockingly, Articles 153, 154, 163 and 200, if you read them together, there is no doubt in my mind that ultimately the democracy rests with the cabinet and the legislature. Once the legislature passes the bill and that bill is sent to the governor for assent, the governor has an obligation to approve, unless the governor in his discretion in certain cases may send it back to the legislature for reconsideration or may refer it to the president. And again, but that has to be done as soon as possible. The words which are used in Article 200 are as soon as possible. Now you can't therefore say there is no time limit. I think this judgment opinion of the Supreme Court, to my mind, is unconstitutional. It runs against what has been held by the Supreme Court for last 77 years, that everybody there is nothing called an unreviewable decision under our constitutional scheme. And it's therefore very surprising that judges have taken this view. I think I am deeply disappointed at today's opinion, because this really, lets loose a situation where parliamentary democracy, especially in states, will become, subject to, the discretion of the governor.
Sure.
And governor, therefore, will, in effect, hijack the democracy from the people through the legislature into himself, which is not really what was intended by the constitutional framers. After all, president and governor both are formal heads of the state, nothing more.
Fair enough. Let's also get Ms. Luthra in on this conversation. Ms. Luthra, again, Mr. Dave giving us a view that you cannot have two persons on the driving wheel. That appears to be a view that the Supreme Court also gave. Only it's unhappy with a 3-month deadline. Firstly, to begin with, give us a sense what happens to the April judgment which gave a 3-month deadline to the president and the governor. Do they still have a deadline? Is there a review of that judgment that is now required? How do we go about it? What is the law of the land? Is there a 3-month deadline?
See, the very fact that 3 judges have answered this fact that the reference has been answered, I feel that it really waters down that judgment which was given, which to my mind was the landmark judgment and which is the way to go. Because ultimately, it cannot be withheld without any reason and has to be decided as soon as possible. What is the role of the governor? We have a parliamentary system of democracy. In a parliamentary system of democracy, the governor's role is really very limited. He cannot be seen to be withholding bills. He cannot do this indefinitely. And to that extent, the judgment of the bench led by Justice Padiwala, which put a timeline, and it's not unknown that the courts have in interpreting constitutional provisions and statutory provisions read into a reasonable timeline. So my thought would be that that was welcome. And to that extent, this waters it down. Obviously, an opinion given by a larger bench in a presidential reference will have very weighty value to it. Now,
sure.
It does water down that judgment. And for that, I can only say the court saying that it should not be unduly delayed. And as and when there is something which is completely unprecedented, you can approach the court. To my mind, it's a step backwards.
Right, Ms. Luthra. Mr. Dave, let me come back to you. At a time when Ms. Luthra as well is saying that, look, we've watered down the April judgment, which had given a 3-month deadline. What I want to ask you is that at a very conceptual level, the Supreme Court appears to be today saying that, look, we can't say that the president or the governor need to decide within 3 months' time, but at the same time, they should decide within a reasonable period of time. What the Supreme Court effectively appears to be saying that, look, I don't want to be very specific in telling you what you need to do, how you need to do it, but a broad range I can give you that within a reasonable time, if not 3 months, then maybe 3 to 6 months, it should be done. Are we muddying the waters? Is that a concern?
Let me tell you one more thing. The actions of the president and the governor are not like judges who sit over their judgment sometimes for months and years. I mean, and nobody can question these judges, why they are delaying their judgments. But here we are talking about in a state, a party with a majority has formed a government. It has its aims and objectives as they have been disclosed in the manifesto. It wants to achieve them because the electorate have elected them on the basis of those aims and objectives. It therefore brings certain bills. Now, bills are passed. If the governor is going to sit over them for even more than a week, according to me, why 3 months? Why 3 months? The governor must approve them as soon as possible. Maybe 24 hours, maybe a few days, maybe a week. But the whole purpose is that ultimately the people's voice has to be heard. And governor cannot stifle that voice by, sitting over these bills indefinitely, certainly not even for 3 months. Because, in a 5-year period that every legislature has, every day counts. The party in power wants to do something because it has been elected on certain promises. Now,
Right, Mr. Dave.
What we have seen, Asmit, is something very startling. What has been happening since 2014 is that in BJP-run states...
Dave, I'll just interject there. You spoke of...
One more thing, Asmit.
You spoke of the party... Yes, Mr. Dave, please go ahead.
This is happening more in opposition-run states. And that is a matter of sad commentary because the judges are blind to the fact that in BJP-run states, the governors approve the bills within a week or two. So why is it that you are allowing this situation to continue in opposition-run states? You can't, a governor, firstly, we are seeing that every governor is in an opposition-ruled state is acting.
So I'll just come in there, Mr. Dave. You spoke of the opposition-ruled states. And in fact, that's how this entire issue began, where the states of Kerala, Tamil Nadu, Punjab had to knock on the doors of the Supreme Court. And speaking of parties in power, we have with us Mr. Selam Dharan, the spokesperson of the DMK. Mr. Selam, just again quickly, what is the takeaway for you here? You were celebrating when the Supreme Court had said that, look, there's a 3-month deadline, the governor needs to approve the bill within. Now, what are the legal consequences that you're looking at? What is the legal advice that you're getting? Are you looking at a situation where, again, the bills could be passed and you would not have enough clarity on when the governor would grant the assent?
The gubernatorial procrastination has been happening in all non-BJP rule state, and that is the problem. In a democracy, for example, in Tamil Nadu, 8.4 crore people of Tamil Nadu vote and select their member of legislative assembly. These MLAs in turn select the chief minister, and chief minister selects the state council of ministers. The state council of ministers and the legislator legislate. So where do we get the legitimacy from? We get the legitimacy from the people who voted us in power. So whatever we express, it is nothing but voice of the people of Tamil Nadu. So bill that is passed in the legislature is nothing but that which represents the voice of the people. So if a governor is sitting on it for more than 6 months, 1 year, or sometimes on need 2 years, if you do a survey in Tamil Nadu, 95% of the people would say we don't want need, which is why we have passed a bill. But the governor has been sitting on it for 2 years or 2.5 years. So if a governor sits on a bill for more than 2 years or 2.5 years, which is more than 50% of the overall term limit, then it's a travesty to democracy. And that is a big problem. And already, if you read the Constitutional Assembly debates as well as the Constitution, it clearly says the governor should clear the bill within as soon as possible. So why have the governors been sitting on the bill inordinately? Because what is as soon as possible? For me, as soon as possible could be 5 minutes. For someone, as soon as possible could be 2 years, right? Which is why, because
that's a very pertinent point, right?
Because the constitutional framers did not set a time limit because they never expected people of low constitutional morality to hold the position of governors or presidents. That is a more interesting point. Only in the last 10 years, we have been seeing such governors.
Right, Mr. Selam. Right, Mr. Selam, I'll just have to come in there. That's a very pertinent point that you raise. What is a reasonable time? The Supreme Court's view is we can't give you a specific timeline, but we want it to be done within a reasonable time.
No, 10 seconds.
Yes, Mr. Selam.
I just need to add on.
Yes, Mr.
So when they said 3 months, it was an extraordinarily good judgment. But now again by saying you can't inordinately sit on a bill, what do you mean by how long is inordinate? 5 years, 10 years, 15
Which is
years,
the very question.
20 years?
Let's take that question across. Let's take that question across to the legal experts that we have. Ms. Luthra, coming to you. This quandary that the Apex Court has now, the Supreme Court has now left us with, that the governor needs to act within a reasonable time. What is a reasonable time? There are cases where bills were pending for over 2 years. Is that unreasonable? Is a 3-month wait unreasonable? How do we now look at the Supreme Court deciding on a case-to-case basis that, look, in this case, this is a reasonable time, 2 months is a reasonable time, 6 months is a reasonable time? How do we go about answering this question? What is reasonable? Ms. Luthra.
See, this was the most brilliant opportunity for the court to show its mind as to what is a reasonable time. To my mind, a week or 2 weeks, unless the bill is very complicated, is a reasonable time. Ultimately, a governor is really a titular authority. The governor's role is only to act on the advice of the Council of Ministers. So he has this authority and the power under Article 200. But as soon as possible, even say in suits of specific performance, are saying 2 months. I think even that is too long. There may be a bill which was crying, which may be part of the manifesto of a party. And it's crying for being decided one way or the other. So the governor cannot but act with great expedition. And I would have thought that in the reference, this opportunity of setting things right or laying guidelines, because why do we have 3 wings of
governance.
So an opportunity lost, Ms. Luthra, is how you're describing this opinion that the Supreme Court has given. We're running out of time. Mr. Dave, I'll come to you for the quick closing comment. Do you see a silver lining? What happens to parties like the DMK who are ruling in the Tamil Nadu? What happens to them? We've seen previously that they had to knock on the doors of the Supreme Court. Has that door been kept open by the Supreme Court giving an opinion that the governor needs to act without inordinate delays, and that is the open door for opposition-ruled governments to actually come to the apex court and say that, look, we need relief, we need our bills to be passed? Is that a legal remedy, a legal relief that is now available to opposition-ruled states?
I think the judgment sounds death knell on parliamentary democracy. And it's really a sad commentary on Supreme Court that it has lost opportunity, as Ms. Luthra rightly points out. If you look at Article 154 or 163, both say that governor shall act as per the Constitution and shall act as per the advice of the Council of Ministers. These are words mandatorily used. So, principle of constitutionalism requires governor to act as quickly as possible. And if the governor does not, then Supreme Court is wrong in saying reasonable period, because reasonable period is a completely vague term. So to my mind, Supreme Court's judgment is most unfortunate, although I must confess that I did expect this opinion from the 5 judges.
Strong language there, Mr. Dave, but I'd like to thank all of our panelists for joining us and sharing their perspective. Ms. Luthra, Mr. Dave, Mr. Salem, thank you so much for sharing insights on what was, again, a landmark opinion that the Supreme Court has given with respect to the powers of the governors, the conduct of the governor, as well as the president. The Supreme Court doing a balancing act, trying to say that on one hand, you can't have a 3-month deadline being given to them, but in the same breath saying that they need to act within a reasonable period of time. That's unfortunately all the time that we have. We're heading into a very short break. We'll continue and bring you more. And this is on AI. AI has been all the buzz. But what about safety? I spoke with Evan Kotsovinos, VP of Security at Google, who says that deepfakes are the biggest challenge. That interview is coming up shortly. Welcome back. Now, AI has been a buzzword for the last few years, but today we look at AI from a safety lens. I spoke to Evan Kotsovinos, the Vice President of Privacy, Safety and Security at Google, and he believes that one of the biggest challenges with AI is deepfakes. I asked Evan earlier today and started by asking him about safety concerns around AI and how watermarking can help tackle deepfakes. Listen in.
We're excited about the enormous economic opportunity that comes with AI, both in India and globally. And we see safety as absolutely foundational to that opportunity being realized. Like any big technology change, AI is used for good and for bad. And so we're seeing several areas where there is increased risk and increased threats with the use of AI. The most obvious one is probably deepfakes. If you think about things like the digital arrest scam here in India, which is very common. That's clearly empowered by AI. We're seeing hyper-personalized spear phishing. We're seeing AI being used for cyber attacks increasingly. So there are multiple dimensions where we're doing some really committed, dedicated work to address these and to stay ahead of the bad actors.
Let's talk about deepfakes. That's, of course, one of the areas as well that you're trying to address. I just want to bring in, of course, what the government's thinking is. The government is very concerned about deepfakes, the impact that this synthetic content, AI-generated content has on public conversations, public sentiments, how it influences elections. You mentioned digital arrests. That's something that the government is very, very concerned about. They've proposed changes to the rules as well to ensure that there is watermarking of AI-generated content. How far along are we in that journey?
Watermarking technologies are evolving quickly. We are investing and adopting those technologies in our products. Anything you generate with Gemini will be watermarked. And we'd like to see the rest of the ecosystem do the same. So in spirit, we're in support of the direction the government is going. But I think watermarking and provenance technologies are going to be part of the answer, not the full answer. To your point, the reality is that it will take many years for watermarking to be adopted across all of the models, if it ever happens. And so we need technologies that detect media that is AI generated. Sure. And then we need to incorporate all these things into the delivery surfaces that the users are using. So for example, the phone, right? If you're on the phone and you're in a digital arrest kind of situation, and there's a way to detect that, we need to alert the user on the phone that this is happening. So all these things need to come together for the problem to actually be addressed. And it's not something we can do alone. It's something that we need the whole ecosystem to stand behind.
When you talk of bringing the entire ecosystem together, is there a case to be made that whether it's at the phone level, at the manufacturer level, or at the level of, say, perhaps a Google or a YouTube or a platform that is provided, for there to be perhaps some inbuilt tools which can help alert users to such AI-generated synthetic content? At least can that be a start?
Platforms have to take accountability for the safety of their users. So there's a fine line between the platform being responsible for the content that's being uploaded to the platform and the platform being responsible for the safety of the users. Right? There's a fine line between those two, but they're also distinct. In my mind, platforms have responsibility for the safety of their users. We certainly approach it that way. And it's important that everybody else does as well. And we coalesce on watermarking and provenance. We coalesce on keeping users safe.
Is there a need for perhaps a dedicated mechanism or a dedicated AI audit or safety office here in India as well that will give more clarity, more direction in terms of what are the steps that perhaps need to be taken?
You know, I'm not super clear on the organizational structure of the different bodies that provide governance and sort of control and regulation in this space in India. So I can't comment on the structural question directly. But I think certainly to the extent that clarity can be provided and that clarity can be durable, that is very helpful. One of the challenges with regulating AI right now is it's changing so fast. Regulatory timelines are long by necessity, by nature. They go through public consultation processes and so on. And so trying to regulate such a fast-moving space is not straightforward. So I have respect and admiration for the regulators who are trying to do that.
There are a recent set of regulations that have been introduced here in India which talk about ensuring parental consent, where platforms like Google will be required to, while processing data of children, will require parental consent or parental authority. Is that a workable mechanism? Do you feel that that's something that can be implemented not just in letter, but also in spirit?
So I would say a couple of things there. First of all, I'll get to consent, but before I get to consent, it's important that age is assured across different platforms. What I mean by that is that different providers of content don't just take the user's word on their age, but they actually take some steps to assure that the age of the user is what the user says their age is. Because without that information, you can do all the consent that you want. If a child claims they're an adult, all bets are off. So it's very important that the ecosystem, again, invests and focuses on age assurance. We're doing that in a very committed way. We're rolling out age assurance technology globally to make sure that we understand whether our users are adults, minors, or children. Consent-based solutions generally are common and workable. Of course, the specifics depend on how the requirements are exactly defined and worded, and how the age limits are sort of tuned and so on. So, we'll have to look at the specific proposals to comment more concretely. But in principle, we have no problem with consent-based approaches. We use consent heavily in a number of different contexts, and it's a constructive direction of exploring towards the right solution.
When we're talking of user harm, a lot of the conversation slowly crawls back and travels back to some of the algorithms that are used. Is there a case to be made for perhaps some form of audit of these algorithms to check for user harm?
We will do what we have to do to comply with whatever the regulators require us to. We operate within the boundaries of the law in India. India is a sovereign country that will decide what is right for India, and we'll comply with whatever we have to do. So I would say our concern is not whether this whether the inspection of the algorithms will touch on intellectual property or not. We will comply no matter what. We'll do what we have to do. I think the question is whether it's effective. And given the complexity and the scale of these algorithms and the way this content is delivered to users, I think it will be an enormous challenge for that to be regulated effectively. In terms of at the level of the algorithm, right? I think it's more likely to be effective if it's regulated at the level of the outcomes, and seeing the safety outcomes that we expect to see for users.
Fair enough. While we're on the subject of safety, that's again an area where a direction that appears to be not just here in India but broadly across various geographies, there is an inward-looking approach that as long as it's personal data, we want that data to reside in the local country, domestically. That's a concern. Is that changing conversations for you from a safety standpoint, from a strategy standpoint? Because there was a time when we used to talk about if data is not allowed to move smoothly, then that'll come in the way of innovation. That'll be that'll be an anathema to cloud computing. But now we increasingly see more countries saying that, look, we want data to be localized here. We want that to be stored here, especially when it comes to sensitive personal information.
Yes. No, I don't think it necessarily stops innovation. We've made big investments in this space to try and deliver sovereign solutions that move in that direction. For example, in our cloud, we have our sovereign cloud solution in France and Germany, and we're piloting in other countries, which is a fully third-party operated solution. It uses Google technology, but it's completely detached from Google operationally. And we're working on federated learning technologies, which allow, in a privacy-preserving way, allow training models while keeping user data not just in the country, but on the device of the user. So I don't think it's necessarily a showstopper. It introduces new technical requirements, new complexity, but we're investing heavily in making sure that we marry innovation with sovereignty and with privacy in the appropriate way.
Well, with that, it's a wrap on this edition of News Center. More news and updates will continue right here on CNBC TV18.
Hello and welcome to the Medicine Box. Today we're diving into a subject that often feels more like science fiction than medicine: longevity. The quest to live not just longer but healthier. Recent headlines have pushed this conversation into the mainstream. Indian entrepreneur Dipender Goyal has invested $25 million of his personal wealth into a new scientific initiative, Continue Research, whose first hypothesis suggests that gravity itself may accelerate aging. Hence, an increase in average brain blood flow could help. Globally as well, longevity has become a frontier of bold ideas and even bolder spending. Biohacker Brian Johnson pours over $2 million a year into reversing biological age. Investor Peter Thiel calls death a technical problem waiting to be solved. The X Prize Health Span competition has put up $101 million for innovations that can improve healthy aging, and in March 2025, even the Vatican convened a summit on the future of longevity, underscoring how universal and urgent this topic has become. Meanwhile, research continues to advance rapidly, with new work emerging on drug repurposing and multi-drug interventions that could slow age-related decline. All of this, the capital, the curiosity, and the controversy, raises fundamental questions. Can we safely manipulate our bodies, our biology? Who will actually benefit? And what ethical boundaries must we respect as we push the limits of human lifespan? To help us unpack these ideas, we have with us Dr. Hemant Thakkar and Dr. Sahil Kohli joining in for this discussion. Well, Dr. Thakkar, I'm going to start with you, and let's begin with the headline that everybody is discussing about the fact that this gravity hypothesis by Dipender Goyal's research company, that anti-gravity can actually help in terms of reducing your age or reducing aging and helping in longevity.
I like the term hypothesis because it is a good hypothesis, but still a hypothesis. There is some truth that vascular health and brain health go hand in hand, and that if you stand up, the cerebral circulation drops by 10 to 20%, or if you have diseases like high blood pressure or diabetes, you compromise cerebral circulation, which can cause cognitive decline. But where it remains a hypothesis is that there are no biomarkers to this effect. And the inversion phenomena, even done by NASA, does not show anything to prove that the cerebral blood flow is the lifeline of longevity. So one has to look at it carefully. I agree this is a good hypothesis he has come up with, and one needs more facts.
Okay. Well, Dr. Kohli, this entire conversation about anti-gravity ties into the fact about the discussion about longevity, which is actually picking up so much pace. So when we talk about longevity, Dr. Kohli, what exactly does it mean to doctors such as you?
Longevity means adding life to your years. It doesn't mean adding years to your life. So the good quality of life where you are doing everything on your own, not dependent on others, able to travel yourself, able to cycle yourself, and do most of the things yourself, that is actually good longevity.
Okay. But Dr. Thakkar, when we talk about that, what does longevity mean to you? Because now we have a whole host of people who are almost celebrities becoming longevity advocates, experts. So what, according to you, is longevity?
See, science tells you that living long is not enough alone. You must live well. It's not the quantity of life alone, but the quality of life. If you have life backed with good, vibrant, holistic and science-backed lifestyle maneuvers, which do not give you cognitive decline or chronic illnesses, that's it. If you have a decade longer, but in that decade you're struck with cognitive decline, chronic illnesses, and you have to fight that last decade of life, it is of no use. So a decade long versus a little less but quality, that is, you have to change and chase health span, not lifespan. Health span over lifespan.
Okay. Well, just talking about that, there is data which shows that lifestyle changes itself can add around 12 to 14 years, disease-free years to a person's life. So what are possibly the 3 most evidence-backed changes when it comes to lifestyle in order to possibly extend your health span?
Excellent. Your data is correct. What goes in from the lips, what you eat and drink is most important. That's one. How much you can walk away from aging, which means exercise. Exercise in any form, isotonic, isometric. And 3, the mind over the body. If you sleep well, you have a relaxed mind. If you interact, you have positivity. If you're happy, you have a healthy and heartful, long, lengthy, happy life. So you must look for those 3 things. And if you adopt these 3 lifestyle changes, that's the best way. Of course, there is a genetic component which is there. But you can override this genetic component and live quality life, may not be longer, by practicing these 3 golden rules of lifestyle changes.
Okay. Well, Dr. Kohli, I'm just going to toss that over to you as well, because in your practice, in your practice itself, you must be probably seeing a lot of patients with early onset dementia, early onset Alzheimer's. So in that sense, how much of it is possibly lifestyle related? How much of it is genetic? And what do you tell your patients who are aging in terms of the best habits that they should probably adopt?
What we have to understand is that aging is a normal process. So once a patient of dementia comes to us, we usually try to see, is there a reversible cause of dementia which is sitting there? So there are some vitamins like vitamin B12 deficiencies, vitamin D deficiency. Some people who have other deficiencies can have, dementia. But more oftenly, the people who have comorbidities like hypertension, high blood pressure, high cholesterol, and who are obese, they are more likely to get it. On the other hand, if we are physically active, as Dr. Thakur has clearly told, we are checking on what we are eating. We are not ordering food from outside. We are eating home-cooked food. We are being physically active. We are catching enough sleep. And we are having a good social, circle, which motivates to do things better, like maybe going for a walk together, going for a cycling session together. That usually adds to your dementia prevention or aging prevention.
But how much of it is probably lifestyle related? When somebody who is, say, 70 years old, 75 years old comes to you, you see that they have early onset dementia. How much of that is possibly what they've done in their early years, say in their 40s or 50s or maybe even 30s?
See, that is also very important because, see, the diseases which we see in 60s usually start in 30s. If somebody continues to have overweight in their 20s or 30s, they are more likely to have hypertension and diabetes. If somebody is not being physically active and being sedentary, that again adds to, inflammation in the body and overall leads to less cognitive, ability. So those people who continue to have obesity, don't take care of their hypertension, don't take care of their blood pressure, they are more likely to have it.
Okay. Well, Dr. Thakur, just coming to you with regards to that, 80% of chronic diseases, again, according to data, shows that it begins in the 20s and 30s. So when we are talking about longevity, when should we actually start thinking seriously about longevity?
The seeds of aging are sown as early as the 2nd and 3rd decade of life, because there is erosion of organs, of cells, of hormones and everything else. So which is why you have to practice regularity, punctuality, limited indulgence, and a disciplined exercise, diet, sleep regime. That doesn't mean that I'm sounding like a priest who's going to only preach. You do have lacunae where you can have the sporadic bursts, what we call a diabetic date in our diabetics. But all in all, you have to follow the rule of lifestyle. If you start early, a stitch in time gains 9. So you have to start early So you don't bring on the diabetes, the hypertension, the lipids, which are accelerators of aging.
But who's thinking about all this when in their 20s and 30s?
We have to think. We are today talking not only for our 70-year-old citizens. We are talking to them so that they can advise their 20 and 30 and 40-year-old relatives or friends to begin early. Because if you want to reap the fruits, you must have a good harvest and a good sowing season.
So what should they start practicing in their 20s and 30s, or what should they refrain from?
You know, Saturday nights in our country means party, late night, binge, everything else. Saturday night in some countries means sleeping early, so you can go rowing, you can go camping, you can go sporting the next day. So you have to cultivate this art of sleeping well to do physical exercise, of eating healthy. That doesn't mean you don't party. And if you have good interaction with happy, healthy, not chasing target lifeline, that sows the seeds and you begin early.
But how much of this is probably genetic, aging?
Definitely 20%, maybe 30%. Because if you have the genes passed on to you, which tell you that, look, in your family, this is the programming of the chromosomes, then you have a 70% chance of altering your lifestyle to not pamper the bad genes, but to play to the gallery of the other genes and slowly work towards lengthening it.
That just brings, it just sort of gives me an example of cardiovascular diseases as well. A lot of people have genetic cardiovascular risks as well. But there is this whole condition of VO2 max, which is basically trying to see the endurance that you have in, or the maximum amount of oxygen you intake when you are exercising. Have you looked into that? Are patients talking about it?
In fact, you will find that the knowledgeable ones and the enlightened firms are all inculcating gyms, health programs. At one of the leading media houses where I am attached to, they have a canteen which gives health food. The servings are all programmed from that point of view. At offices where I am advising, they have a gym in the office. So if you can't walk and work out in the evening after a long day, you get that 30 minutes in the daytime. So you can begin. It's not impossible. Where there is a will, there is a way. And if the will tells you that you want to burn the candle longer, then you need to work brighter on the candle so you can enjoy longevity.
Well, Dr. Kohli, just wanted to come to you about preventive testing, because when you speak to, most of your peers or your friends, they say, oh, nothing's wrong. I don't need to get any sort of preventive testing done. Hum to theek hai, until something goes wrong. What do you tell your patients? What is the checklist of, say, preventive testing that you subscribe to your patients, and at what age would you prescribe it, rather?
See, we have to see the diseases like hypertension, diabetes, high cholesterol. They are very important and they are not picked up. So there is a saying about hypertension that only 50% of the people who have hypertension, that they know they have hypertension, out of which half of them do not even get treated and half of them are undertreated. So conditions like hypertension, if there is a family history, and even if there is no family history, they have to be regularly checked. So at least once a year, there should be a checkup where we check about how is our thyroid doing, how is the blood sugar doing, and there should be regular monitoring of blood pressure as well. If there is we are being overweight and BMI is high, that also needs to be monitored and the weight needs to be reduced.
Okay, so if you had to if you had to recommend maybe the lowest effort, highest impact change in lifestyle, what would it be, Dr. Kohli? Because, some people say that 8,000 steps, 10,000 steps, or even 12,000 steps reduces your mortality risk significantly. So what is it that you would recommend as a doctor?
See, it depends upon what person likes, which they don't feel burdened to do it. So it has to come naturally and effortlessly. So it can be as simple as walking 7 to 8,000 steps in a day, or maybe doing some kind of aerobic exercises, or doing some kind of strength training 1 to 2 times a week, or going for a cycling 30 minutes for at least 2 to 3 times a day. So any kind of physical activity which they do regularly and persistently over a period of time will actually help them.
Okay, so you would put exercise at the top of the list?
Yes, exercise, yes. And dietary, definitely the second one, because diet is also very important. We are eating all kinds of processed foods which are having high refined carbohydrates and not eating proteins, especially in our Indian population, which leads to ultimately sarcopenia and low muscle mass, because muscle needs proteins to grow up. And once the muscle mass is less, there are more chances, you're becoming more vulnerable to have infections, you're more vulnerable to have falls, you're more vulnerable to, not recover very well from the illnesses, and the cardiovascular as well as your brain health deteriorates because.
Okay, but there is a whole set of people who believe in a plant-based diet and who believe that, vegan diet results in longevity as well. So how do you balance the protein part of it there?
So they have to take supplements for that, and they have to be more physically active, and they have to make sure, especially those people who have a family history. So they have to be more physically active, and even the vegan diet is okay, but then they have, for making proteins, they have to take some supplements also. And on top of that, they can go to, the strength training can be a major part for them so that their muscle mass gets maintained.
Okay, so is strength training possibly more important as we age? If you could just give us more details in terms of how important strength training is and from what age especially.
So strength training is very simple. More strength training means better muscles. Better muscles means we are able to endure more and we age slowly. And the strength training should begin early, even if, ideally it should begin early, but even if we are in 50s and 60s, we do some kind of a moderate strength training, which can be, the functional training part also without using weights. That also adds up to making muscles, toning up the muscles and falling less sick.
Okay. All right. Well, Dr. Thakkar, we've spoken about exercise now, and that probably is one of the top of the list in terms of increasing your longevity. But a typical Indian diet is quite high in terms of carbohydrates. So how important is diet when it comes to aging, or diet when it comes to longevity? And what would you recommend for the Indian diet?
So diet is probably the most important, because depending on what you eat, you will make in the body, and what you don't make in the body, you will accumulate in the body. As my colleague said, proteins are extremely important. In the formative years more, in the later years also important, because if you're doing some strength training, the protein requirement also is high. So you need a significant amount of good first-class protein, which you have to moderate in your diet. You also need non-trans fats. And then the Indian habit of having carbohydrates for everything has to be toned down. I'm not saying don't have carbohydrates. And whatever you have should be easily assimilable and easily expendable. The Indian habit of celebrating everything with sweets is something which is a very crushing phenomena to the body as a hormonal system. It's a very lovely phenomena to the tongue and the eyes and the taste buds. But you have to be careful regarding how you balance the proteins and carbohydrates and fats. And having said that, especially for the aging population, nutritional supplementation, micronutrients, essential supplements, from magnesium to zinc to so many other components are extremely important. And they come into play not necessarily in the age of 50s and 60s, but omega-3 fatty acids, B12, vitamin D3 are all important constituents that you need at every phase of life.
But you must do a possible blood test before you get it done to see what your levels are and go to a physician.
If you do a blood test and you know what your levels are, then you can implement a regime.
Correct.
And if you are punctual and loyal to the regime, you don't need frequent blood tests. After the 5th decade, you need annual tests. But I wouldn't tell my 30-year-old necessarily to go and do a test every year. He can do it every other year.
Now, just, you spoke about celebrations. So one of the other points which is widely spoken about is about how relationships and social connections, in fact, play into longevity. And of course, we have the Harvard study which identifies that. And it is expected to be a top predictor of long-term health, even above smoking alcohol. So how important is social connections for longevity?
Very important. Companionship, camaraderie, social interaction, wanting to be with somebody, belonging somewhere, interacting with different people. It not only stimulates the mind, but the neurotransmitters thereafter go and help in keeping. Remember, a happy person is a healthy person. We have patients in the hospital who are happy, who heal earlier and go home a couple of days early. The same logic implies, rather than a grouchy, solitude, isolated person, a healthy, happy person who mixes, who probably has a shoulder or many shoulders to lean on, to talk with, those interactions are as important as food.
Just a few minutes left, so we have a rapid fire. So I'm going to just ask Dr. Thakkar as well as Dr. Kohli a couple of questions. And if you could just answer them in, maybe a word or so. So Dr. Thakkar, I'm going to ask you first. Aging, can it actually be slowed? Yes or no?
Yes.
Okay. Dr. Kohli, one test every Indian above 30 years of age must do.
HbA1c and thyroid levels.
Okay. Dr. Thakkar, one daily habit that adds the most years to life.
Walking.
Okay. And is 8,000 steps enough, or do we really need 10,000 or even 12,000?
8,000 is enough. 7,500 is also enough.
Okay. All right. Dr. Kohli, what's more important for longevity, sleep or exercise?
Both. Sleep early, get up early and go for exercise.
Okay. One food, Dr. Kohli, Indians must cut down on immediately.
Mithai.
Okay. Dr. Thakkar, fasting, is it a longevity booster or is it just a trend?
Intermittent fasting is a trend. Regular fasting that you do for 12 hours when you eat early and sleep early is healthy.
Okay. One supplement, Dr. Thakkar, that's overrated.
One supplement that's overrated, General B complex vitamins.
Okay. And one supplement that actually works.
Vitamin D.
Okay. And Dr. Kohli, I'm going to end with you. Is longevity expensive, or can most of the gains come from free habits?
It can come from free habits.
Okay. And what would be the top habits?
Watch what you eat, get physical activity going, take less stress, have a good social circle which motivates you, and get your regular checkups done. And yes, it can be, prolonged.
Okay. All right, Dr. Kohli as well as Dr. Thakkar, thank you very much for joining in and speaking with us on CNBC.
Hopefully, we'll meet 40 years from now because we are going to practice what we preach on the same program.
Absolutely. That 100%, Dr. Thakkar. Thank you very much for joining in.
Hello and welcome to Business 360. I'm Arundhati Ramnin and here are the headlines that we're tracking for you this evening. Nifty hits a 52-week high and comes within 30 points of the record high. Sensex gains nearly 500 points. Nifty Bank and Midcap Index hit a record high before giving up some gains in late trade. Nvidia reports record sales and profit in the third quarter. Growth outlook also beats estimates, soothing frayed nerves on Wall Street, dispels fears over AI valuation, at least for now. United States approves the possible sale of Javelin missiles and Excalibur projectiles to India worth nearly $93 million. This comes just days after India signed a deal to buy cooking gas from the US, accounting for 10% of LPG imports in 2026. M&M targets organic growth of 15 to 40% across businesses till 2030, aims to be the world's fastest growing SUV brand and the top light commercial vehicle brand. Mahindra Holidays invests 1,000 crore rupees to foray into leisure hospitality. Starbucks CEO Brian Niccol says India sits at the heart of their global strategy as it brews its 500th store in the country in partnership with the Tatas, highlighting that US tariffs has not impacted sourcing as India has a localized supply chain. That's an exclusive. Supreme Court refuses to prescribe timelines for governors and the President of India to clear bills passed by state legislatures, signals limited judicial scrutiny for prolonged, unexplained and indefinite delay in granting assent to bills.
मैं नीतीश कुमार सत्यनिष्ठा से प्रतिज्ञान करता हूं
JDU Supremo Nitish Kumar takes oath as the Chief Minister of Bihar for the 10th time after NDA's landslide victory. 26 other MLAs, including BJP Samrat Chaudhary and Vijay Kumar Sinha, sworn in as well. Prime Minister Modi, Home Minister Shah and top NDA leaders attend the ceremony. Any peace plan on Ukraine must take Europe and Kiev on board, say EU officials. This after US and Russian officials draft a peace plan which will require Ukraine to give up some territory and downsize its military. 28 people were killed in Ukraine after Russian strikes yesterday. At least 32 killed in Gaza in 24 hours in Israel's latest violation of the US-brokered ceasefire. Dozens injured as per Gaza's media office. Over 280 have been killed and more than 650 injured in nearly 400 Israeli violations since the October 10th ceasefire. Those were the headlines that we're tracking for you this evening, but straight to the day's market action. Sensex and Nifty hit 52-week highs after a steady session on Dalal Street. In fact, the Nifty was just 30 points away from its record high during intraday trade. Both indices did give up some gains in late trade. Nifty Bank and the Midcap index hit a new record high before seeing some profit booking. The Midcap underperformance kept the market breadth in favor of declines. Surbi Upadhyay is here with all of the action from Dalal Street. Surbi?
Let's dissect what really transpired today. So today, if you talk about the leading sectors, then defense, infra, oil and gas for sure, thanks to Reliance, capital markets, autos, and even banks. Banks didn't lead from the front, but they did chip in, and I'll get to more of this in just a bit. The lagging sectors today, real estate, pharma, healthcare, and PSU banks. Let's see how this translates into actual Nifty stocks. So Nifty gainers, Reliance Industries, like I'm saying, and the other heavy hitter, HDFC Bank, contributed quite nicely. Axis Bank was up and about, and auto stocks had a pretty good session, specifically some of the two-wheeler names like Eicher Motors as well as Bajaj Auto. Both those stocks up between 1 and Eicher, the Nifty winner, actually going up to almost 3% gains. The losers then, some consumer stocks like Asian Paints, Titan seeing profit taking. Lever was also down, and some of the tech names that did very well yesterday, they cooled off today. So names like Infosys and HCL Tech, to name a few. Now let's come to the mid-cap part of the market, and that was the only grudge, so to speak. Because mid-caps underperformed large caps, the index was more or less flat, and the advance decline ratio was also negative, more declining stocks than advancing stocks in the market today. So let's talk about the movers, the big listings or the recent listings. Today was a day to come down to gravity. So Growth, second day running, managed to see a cut, 6-7% down on Growth. Physics Wala was also slightly lower. Hyundai had a bit of a rough session, 3% down on Hyundai Motor. Biocon, and like I said, IT, not just large cap, but even mid-cap IT, which was sizzling yesterday. Today was some profit taking on names like L&T Technologies. There was Coforge and Intellect Design. Let's talk about the gainers on the upside. Today, Mahindra & Mahindra, the group had its investor day. So some of those group stocks were really surging. M&M Financial, for instance, 4-5% higher. Mahindra Holidays, which is also getting into the leisure and hospitality space. Now, that stock was up about 3.5% as well. Beyond that, there was Radico, Khaitan, Netweg surging thanks to the strong performance from NVIDIA. And then some other names like Canara, Robeco, AMC, 9% higher on this one. And even IEX had a good session, 4% up.
Right, Surbi, many thanks for those details. Now, chip maker NVIDIA quelled fears of an AI spending bubble with a strong third-quarter performance that surpassed Wall Street's expectations. Net income rose 65%, riding on the back of a 66% year-on-year increase in its crucial business data center sales. The world's most valuable company's guidance for the fourth quarter sales was also stronger than what the street had factored in. Hormaz Fatakia is here with all of those details. Hormaz?
Too good to be true. That's not possible. Mano ya na mano. You can use all of these phrases when you look at NVIDIA's results this quarter, but the numbers don't lie. It is what it is. Now, yet another blockbuster quarter from the world's most valuable company, and markets across the globe are breathing a sigh of relief. Now, we all know NVIDIA's results were a beat on expectations, but that's not it. Here's a bigger picture. Now, for the first 9 months of the year, NVIDIA has reported sales of close to $150 billion, profits of close to $80 billion, and for the fourth quarter, it has made a projection of $65 billion in sales, despite the issues in China. Now, if this guidance holds, the company could well end the year with sales of over $200 billion and profits in excess of $100 billion. But how big is too big? Here are some illustrations to show how big NVIDIA actually is. For the first 9 months of this fiscal, NVIDIA's profit is $77 billion. Now compare that to the sales reported by its closest competitors, Intel and AMD, for the same time frame. That is close to $60 billion. This shows that NVIDIA is earning more than two of its closest rivals put together are managing to sell. Now that is some statement. Now, more than the results, the global markets are also breathing a sigh of relief from Jensen Huang's remarks. He mentioned on the earnings call about the AI bubble, saying that from their vantage point, they see something very different. And when the CEO of the world's largest AI chip supplier says all is well, the market surely takes note of it. NVIDIA recently hit $5 trillion in market cap. You heard that right, $5 trillion. Now, the journey from 4 trillion to 5 trillion happened very quickly. It took only 79 trading sessions. We hit 2 trillion in Feb of 24, went to 3 trillion in June of 24. Then we had a bit of a sell-off. Then we hit 4 trillion in July of this year. And then we hit $5 trillion very recently. Now, the last time when the stock had hit $4 trillion, we tried analyzing what if NVIDIA was a country. Today, we tell you what if NVIDIA was a stock market on its own. After a brief post-listings, post-5 trillion slump, the market cap is now below that $5 trillion mark. But even at 4.5 trillion, NVIDIA is only smaller than the stock markets of China, Japan, Hong Kong, India, and of course, the United States. Here's another illustration of how big NVIDIA is. Out of the 13 quarters of the fourth quarter of FY23, NVIDIA had sales of around $6.5 billion. Now, for the current ongoing fourth quarter of FY26, the sales projection is $65 billion. That's a 10x jump in just 3 years. The exponential growth shows up in the stock price as well. Between 2020 and 2024, NVIDIA stock has doubled or even tripled in value in 4 out of the 5 years. Even this year, the stock has more than doubled from its tariff lows, but such was the damage that even today, the year-to-date gain is only 35%. CLSA has retained its high conviction outperform rating on the stock with a target of $270. Despite this surge, only 1 out of the 79 analysts that track the stock has a sell rating on it. If CLSA's target is higher, there are targets even higher, as high as $350 on NVIDIA. So in this battle of David versus Goliath, the Goliath keeps getting bigger and better, and the Davids around it are also cheering the results with share price moves of their own. NVIDIA has categorically stated that the AI boom is here to stay, and it wants to have the largest share of that pie, one chip at a time.
So in NVIDIA, they're getting bigger and better. Thank you, Harmas, for those details. Now, the United States approved the possible sale of Javelin missiles and Excalibur projectiles worth nearly $93 million to India. The Excalibur deal is for $47 million and the Javelin deal is for $46 million. The U.S. said that the package includes 216 Excalibur artillery rounds and 100 FGM-148 Javelin missiles. This comes after India signed a deal to buy cooking gas, indicating a potential easing of trade tensions. Federal Reserve officials were at odds during the October meeting over cutting interest rates. According to written records of the meetings, the officials were also divided on whether the central bank should cut rates next month. The minutes indicated that most participants felt that further rate cuts were warranted, but not necessarily in December. However, participants does not denote voters. There are 19 participants at the meeting, but only 12 vote. And speaking of the Fed, U.S. President Donald Trump said that he would love to fire Jerome Powell. Addressing the U.S.-Saudi Investment Forum in Washington, the president also said that Treasury Secretary Scott Bessent needs to work on Powell to quickly lower rates, indicating that the Treasury Secretary's job depends on it.
Mortgage rates are down despite the Fed. Scott, you got to work on this guy. He's got some real mental problems. No, he's something wrong with him. It's just sweet. I'd be honest, I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. I'm building a ballroom that's going to cost a tiny fraction of that, and it's bigger than the whole thing put together. You got to work at him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Shares of pharma major Zydus Life Sciences rose as the company onboarded 3 investment bankers for a 5,000 crore rupee fundraise. As per a Money Control report, they are Jefferies, JP Morgan and IIFL Capital. Money Control has also reported that the funds will be raised via qualified institutional placement, which is likely to be launched at the start of 2026. Infosys' 18,000 crore rupee share buyback opened today, making it the company's largest buyback to date. The buyback, priced at 1,800 rupees per share, will close on November 26th. Infosys aims to repurchase 10 crore fully paid up equity shares. The company said the buyback is intended to return surplus funds to shareholders in line with its capital allocation policy. Promoters who hold just over 13% will not participate in the buyback. Investors continued to book profits in newly listed broking firm Grow, which fell 9% today. The stock, which had rallied nearly 90% since listing, has now slipped 18% in just 2 sessions. This amid stretched valuations and shorting by traders. The stock's market capitalization now stands at 98,000 crore rupees. The Mahindra Group hosted its annual Investor Day. The conglomerate is targeting organic growth of 15 to 40% across businesses till 2030. The group aims to be the world's fastest growing SUV brand and the top light commercial vehicle brand. Mahindra Holidays is foraying into leisure hospitality by creating a wholly owned subsidiary with an investment of 1,000 crore rupees. CNBC TV18 spoke to the CEOs of all Mahindra Group companies, and that special show will be broadcast at 6:30 a.m. tomorrow. Representatives from the tourism and hospitality sector are with Finance Minister Nirmala Sitharaman for pre-budget consultations. Sources say the sector has sought industry status, which has been a long pending budget demand. They have also sought clarity on GST treatment, especially on how rates apply to room tariffs amid dynamic pricing. Single window clearance system for the hospitality sector is also one of the key demands. Starbucks CEO Brian Niccol has said that India is one of its fastest growing markets as it gears up to open its 500th store in the country. In an exclusive interview with CNBC TV18, Niccol outlined their India growth plans. He said that they were in India building a coffee culture for the long term. Starbucks runs its India operations through a 50-50 venture with Tata Consumer Products. On that note, it is time for us to head into a short break. But coming up next, Supreme Court refuses to prescribe timelines for governors and the President of India to clear bills passed by state legislatures. More details on the other side. Stay tuned. Welcome back. The big national story today. JDU Supremo Nitish Kumar took oath as Bihar's Chief Minister for the 10th time after a landslide NDA victory in the assembly elections. The 74-year-old is now India's 8th longest-serving Chief Minister. 26 legislators, including BJP Samrat Chaudhary and Vijay Sinha, took oath as well. The contours of the new cabinet are yet to be formalized. The majority of the MLAs who took oath along with Nitish were from the BJP. Prime Minister Narendra Modi, Home Minister Amit Shah and top NDA leaders attended the oath ceremony at Patna's Gandhi Maidan. The Supreme Court has refused to prescribe timelines for governors and the President of India to clear bills passed by state legislatures. But the top court signaled limited judicial scrutiny for prolonged, unexplained and indefinite delay in granting assent to bills. This comes after a rare presidential reference was made to the court over its verdict in April, which imposed a 3-month deadline on dealing with bills passed by state assemblies. Ashmit Kumar is here with more on the court action. Ashmit, explain the Supreme Court's observations today and its implications.
Well, first up, it was in the month of April that a bench of the Apex Court itself had granted this order, had directed for a 3-month deadline to be imposed on the President as well as the Governor. It is in response to that we had a presidential reference, which is in the nature of a question. The President is asking a question from the Supreme Court that can such a deadline be imposed by the Supreme Court on the President who happens to be a constitutional office bearer. Now, that was the question, among others, that was being dealt with by the Apex Court. And then, as a part of an opinion, today's the findings that the Supreme Court has given is an opinion. It is not binding on the government. It is only, it has a guiding force, but nonetheless, coming from a bench of the Supreme Court of no less than 5 judges, it does carry a significant amount of weight. Now, what does this opinion to the presidential reference say? Well, this opinion clarifies that as far as deadlines are concerned, timelines are concerned, that is simply not the court's power. It simply does not have the remit, the power, the jurisdiction, the scope to start telling the President and the Governor that, look, this is a timeline within which you have to decide on bills that are being sent to you by state assemblies. That's one. But having said that, there are a number of caveats that the Supreme Court has given with respect to powers of the Governor. All of this issue, of course, arose with a number of opposition-ruled states, the likes of Kerala, Tamil Nadu, Punjab, raising the issue before the Apex Court that bills are being passed by the state assemblies, the governors are sitting on them indefinitely. To that end, this opinion by the Apex Court has clarified that, number one, the governor has 3 options. He can either agree, he can send the bill back to the state assembly or refer it to a president. What the Supreme Court today clarified is that the governor cannot sit on it indefinitely, cannot defeat the entire legislative exercise, that it is the cabinet, the elected government that needs to be in the driver's seat, that this is something that the governor cannot do. What the Supreme Court has also said, that as far as deciding of this granting of assent is concerned, to that end, while the Supreme Court says that no deadline can be prescribed, the Supreme Court also says in the same breath that there needs to be a decision by the governor in a reasonable period of time, leaving the door open that tomorrow, if there is a situation that a bill is being passed but is awaiting the governor's assent, the governor is sitting on it indefinitely, there is a window now available for opposition-ruled governments to actually come and approach the Apex Court. So clearly, the Supreme Court trying to do a balancing act, on one hand saying that no timelines can be prescribed, but also in the same breath saying that governors cannot sit on these bills that are being passed by the state assemblies indefinitely. They need to take a decision, and they need to do so in a reasonable period of time.
All right, Ashmit, many thanks for those details. Now, India's Commerce Minister Piyush Goyal is in Tel Aviv on a 3-day visit to push for the long-pending free trade deal with Israel. He is leading a 60-member delegation to focus on deepening trade, investment flows and innovation partnerships. Abhimanyu Sharma reports from Tel Aviv.
India's Commerce and Industry Minister Piyush Goyal is on an official visit to Israel. He's expected to meet Israel's Minister for Science and Technology as well as Israel's Minister for Economy, Nir Barkat. In course of the next few days, there are B2B engagements expected between the Indian and the Israeli industry since a 60-member delegation from India from across several businesses is already present in Israel. There is also a likelihood that a potential FTA between India and Israel may also be discussed as part of the ongoing engagements. India is looking for more collaboration with Israel in several areas, particularly in areas of technology, innovation, wastewater treatment, and several possible joint ventures between both the sides. Now, several Indian companies are already invested in Israel and vice versa, and both the sides are looking to increase this engagement and possibly elevate this engagement by means of a free trade agreement between India and Israel.
I can assure you, friends, our first quarter growth was 7.8%. Our second quarter numbers are expected soon, will be about 7%. And I think at the end of the year, our year ends on 31st March 26, we will be growing at 7%, well above the world estimates.
Israel is a great startup nation, India is a great scale-up nation. So how do we, the real conversation was how do we combine the technological leverage that Israel has versus, and using that technology to do advanced manufacturing in India, to partner on AI and other advanced technologies, to look at sustainable things like sustainable areas of sustainability, like particularly in water, agriculture, and obviously energy transition.
And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
biggest risk that you've ever taken?
Quit a well-paid job and start ID along with my cousins.
First business lesson that you remember?
Cash is reality. Everything else is vanity or sanity.
Rapid growth or sustainable growth?
Sustainable growth.
What is the greatest lesson of your life?
Don't wait for tomorrow. Tomorrow never comes.
Who inspires you the most and why?
My dad. He worked in a farm, ginger farm, for 12-13 hours every day to feed us. My dad skipped one meal every day to educate me. If my dad can take me to where I am today, all of us can do wonders in the world. That's why he is my role model.
Your forever hero.
Superhero. He still goes to the farm. That's exactly the same thing that he used to do earlier. No change.
So is there something that he said to you that is the compass, the moral compass for you in your life?
Do good things. I learned the power of determination from my mother. During the difficult times, my mother used to go to the forest, collect the wood and come and sell in the street to support my dad. I don't think I can find better role models than my parents.
What was the first thing that you made in the kitchen?
Papad.
Papad, of all things. That was the first thing that you
fried, yeah.
What was tougher, the first fundraise or making the first dosa?
Dosa. I still don't get my dosa right. When I make dosa, it takes the shape of Australia. Even now.
Is there an innovation coming there?
Yes. Coming soon.
Coming soon? How soon?
Dosa spread is coming soon.
You know.
Work in progress.
Work in progress, so a couple of months?
Maybe one more year.
Your favorite ID Fresh batter and why?
All of them are my babies, right? So I don't think I can choose.
From a 50-square-foot kitchen in Bengaluru to kitchens across the world, ID Fresh Food has redefined convenience, authenticity and trust in India's ready-to-cook space. Hello and welcome to the Young Turks Reloaded podcast. I'm Shireen Bhan. Built with 50,000 rupees as seed funding and a family recipe, the brand today reaches millions of households across India, the UAE, the US, UK, Singapore, and even Saudi Arabia, powered by 5 manufacturing hubs and a 680 crore rupee top line. With clean label innovation at its core, from idli dosa batter to parathas and chutneys, ID has turned everyday staples into a national fresh food movement. And now it's gearing up for its next phase of growth, ID 2.0, with plans perhaps for an IPO. At the heart of this journey is PC Mustafa, the son of a daily wage worker from Wayanad in Kerala, who went from failing class 6 to graduating from NIT Calicut and then IIM Bangalore, and then building a 5,000 crore rupee brand that's redefining India's fresh food story for the world. PC Mustafa, what an absolute pleasure to have you back with us here on Young Turks. Thanks very much for joining us.
Thank you.
17 years, Mustafa. There are memories that, in hindsight, define who we become, shape our journeys. If you were to go back in time, are there those points that you can identify that kind of have defined your journey so far?
There are many such, defining moments in the history of ID. One such incident was, maybe around 2013 time. We were doing a business and reasonably doing well in Bangalore. We thought we are wasting our time in Bangalore. We are not in the Chennai, the Mecca of Idli. So we went ahead and started a factory in Chennai. Almost 7 years of our profits were invested in setting up a factory in Chennai. After launching the batter in Chennai, we learned that Chennai is a very, very tough market. We were trying to sell batter at around 40 rupees a kg. That time, the local batter in the market was available for less than 20 rupees a kg. It was not even my raw material cost. What we learned was that there were a lot of unethical, unhealthy practices being practiced by many local players in the market. They were buying this 1 rupee rice available in the name of politician, adding chemicals and soda in it, making idli dosa batter and selling it so cheap. We were not able to compete with those local players in the market. We started losing money. Salary payment was delayed for almost 6 months. Many of our key employees left. ID was on the verge of shutdown around 10 years ago. That time we had 3 options in front of us. Option 1 was to follow the local practice that is being done by local players in the market, which was to buy the 1 rupee rice, which was illegal, and add soda chemicals, unhealthy, and sell at a cheaper price. We said we didn't want to do that. The second option was to borrow the money from the bank on an interest-based transaction. ID, even today, we are a zero debt, zero liability company. We don't pay interest, we don't take interest. We didn't come from a rich family background. Idli business was not a fancy business for somebody to come in and invest at that time. So we had only one option left, which was to shut down the factory. So we decided to shut down the Chennai factory, sold the assets, cleared the salary payments backlogs, came back to Bangalore and started focusing on business in Bangalore. After shutting down the Chennai factory, I felt crying. I felt crying not because we lost our 7 years of profit. I felt crying not because I had to vacate Chennai market. I felt crying because the Almighty God gave us the courage to take the toughest decisions in the most difficult time in our life. It's very easy to make money, but making money without taking shortcuts, making money without adding chemicals and preservatives in the food is not easy. We decided to travel that path less traveled.
You know, you talked about the fact that people didn't think of getting into the idli making business or the idli dosa batter business. Why did you decide to bet your life on that?
So there were two reasons for us to look at it. First of all, the journey of ID was started in a small setup at my cousin's place. My cousins were running a small time kirana store in a place called Intra-day in Bangalore. There was a idli batter vendor who was supplying idli dosa batter in a plain pouch with a rubber band on the top. You will still see in some part of Matunga in Mumbai now, right? This had all sort of quality issues, service complaints and hygiene issues. My cousins tried to fix this issue with the vendor multiple times. It didn't work out. And that's when we thought, why don't we do it ourselves? And that's where the journey started. When we started this, we wanted to test it with 20 stores. Objective was to sell 100 packets in 20 stores. It took us 9 months to sell 100 packets in 20 stores. But
almost
then we
like
didn't
having a baby.
almost like a baby. Yeah. So, but we didn't give up. If you look at the atta business at that time, the chakki atta business, chakki atta was actually getting popularity into the packaged form, right? And there were many such category which was getting branded, pickles, right? Masala powders, paneer, curd, all of them are getting branded and branded price organized, right? That's when we thought, if it can happen for atta, why not for batter?
You know, it's not just the fact that you decided to get into pre-packaged batter. You also decided to bring in innovations which have really changed the way that women, and now men of course also, use the batter in their kitchens. Take me through that journey of this frugal innovation that is really core to the ID Fresh success story. And who came up with the idea?
So it was again a team effort.
And all of you are still together, all
yes,
four of you.
All of us are still together. Innovation in the idli batter packaging came from a customer complaint. I was getting a lot of customer complaints saying that there is foreign particles in the batter. Even though we were small at that time, we were maintaining our factory like an operation theatre from day one. There was no way a foreign particle could come into the food. And it was like a regular complaint. So what we've learned during the journey was that customers were, or initially if you look at the ID batter pouch, the regular pouch that you get, they had to cut open and then transfer into a vessel, make idli or dosa out of it. We try to educate the customers saying that, wash the pouch before use. Doesn't happen. So if it is not washed properly, there could be foreign particles on the packet outside because the product is kept along with vegetables and other things. So those foreign particles get into the final idli. We had to solve that problem, and that's where we came up with this concept called a different kind of packaging. And the real inspiration for the packaging came from the transformer. You know the transformer which becomes a car and then Superman, right? So we said it should be a pouch during packaging, transit and storage. But once you open it, it should become a vessel so that you don't have to transfer the contents to another vessel. And that's how this innovation came up.
So the idli batter packaging got its inspiration from the Transformers. Is it really? I mean, one would never have imagined. One would never have imagined that. But then you did the same as far as vadas were concerned.
Yes.
And how did that happen? Was that also based on customer feedback?
No, vada was completely different innovation for us. If you look at the vada batter packaging, it was easy for us to make vada batter because we are doing idli dosa batter. Getting vada batter right was not that difficult for us.
Yeah.
But even if I give you vada batter, you still can't make vada at home. Vada batter is as sticky as a super glue. You know, it's a messy job to make vada at home.
Yeah.
You can't get the shape right. You can't get the size right. And most importantly, the hole. Today, a homemaker can make vada at home in less than a minute using the ID vada batter pouch.
Can
By
you?
QC. You can.
No, can you?
I can.
Do
Even-
you?
Yeah. So even I can make. But then it took us hundreds of failures and 3 years to build a hole for the vada.
3 years and before you actually managed to perfect that.
Yes.
What was the complicated aspect of the
When
most
you-
complicated aspect
When
of
you
it?
get the shape right, you won't get the size right. When you get the size right, you won't get the hole right. To get everything right, you have to get the pricing right.
Huh.
It took us close to 3
Clearly,
years.
vada making is rocket science. But
It was.
Yeah.
Now, vada for dummies.
now vada for dummies. You know, you talked about the fact that right from day one, you wanted your factories to be, in your words, like operation theatres. What did it take for you to set up a factory that was almost like an operation theatre right at the very beginning?
I don't think we had the large setup during the initial days. What I mean to say is it was a small kitchen.
Yeah.
Right? But we maintained the hygiene like an operation theatre. That's what I meant. I think the best thing that happened to ID was when we went to Dubai to set up a factory. We thought we can set up the factory easily, but the approval process out there was very, very complicated.
Harder than India.
Yeah, when I said approval process, the guidelines that they set for you to get the final approval was very, very difficult. But we managed to get the final approval. But that is a good learning for us. Then we thought, why don't we replicate this model across other plants? And that's how the modernization of the factory happened. I think I want to clarify one more point to you when I said the operation theatre model, right? So 3 things that we do we have been the pillars in the decision making for ID. 1, if you walk into my factory, you will not find any ingredients that my mother will not use in her kitchen. Whatever goes inside the food should be exactly same set of ingredients that my mother used in the kitchen, nothing else. Second, a factory should be as hygienic as an operation theatre. Third, before I send any products to market, I test it with my own boys, my kids. If they're comfortable, if they're healthy, then I send to the market.
Have they ever rejected anything?
There are many.
Really?
Yeah.
How instrumental has your mother been to the ID Fresh story? You said every ingredient in the factory is a replica of what your mother has on her kitchen shelf. And was it her recipe that got things started?
My batter is better than her batter.
Your batter is better than her batter. Does she agree with you?
She has to agree because that's a fact. But unfortunately, she still makes batter at home.
She's not using ID Fresh.
She still makes batter at home.
So where did the original recipe come from?
My cousins, figured it out. It was from our own family and, the roadside vendors that we reached out to. There's no rocket science in making idli dosa batter. But it took us 1 year to get the consistency right. Right set of ingredients, right proportion, right fermentation level. And we didn't come from a, food technology background.
Yeah.
So we had to experiment ourselves and make a lot of failures and learn from that.
So what is the hardest part? And, I think a lot of people who are looking at getting into the food business and what is the hardest part of going from idea to actual execution in light of the experiences that you've had?
I think the most important aspect is to get the product right. If you don't get your product right, don't waste your time. Because at the end of the day, the product has to be the hero.
Standardizing and then scaling it up across different locations. Have you been able to put together now a template which you can share with people?
Yeah, now we are able to replicate it very well. In fact, we are now starting our Saudi factory. I just went to Noida factory today and told Murthy that just replicate this factory in Saudi. You don't need anything else.
Just replicate this factory in Saudi. You make it sound so easy, right? How does Murthy replicate this factory in Saudi? Please tell us.
So Murthy has a playbook to get it right.
It takes me back to 2021. And that's the last time that you and I spoke.
Yes.
Where there was a massive backlash against ID Fresh.
Yes.
Because of messages that went viral on social media accusing ID Fresh of using animal extracts in your batter. And we spoke then, and you of course came out and denied all of those allegations. You battled all of the accusations that came the way of ID Fresh. You opened up your factories, I remember very distinctly.
Yes.
You opened up your factories. Virtually people could visit an ID Fresh factory. But for a company that based its entire philosophy, its ideology, its USP on the fact that you were anti-chemicals, anti-preservatives, to now have to deal with the fact that you were putting in animal extracts into your batter. How challenging was that crisis for you as you look back at it today?
I look at every challenge as an opportunity. That initially was a challenge. Initially I thought it's some random messages, but as you mentioned, it started going viral. It started getting coverage in different media as well. And that's when, we had to come up and deny the allegations. But I think that did a lot of good things for the brand ID. Many of my customers and people like you came in support of the brand. And they had visited the factory, they had been using the product. And most importantly, it also gave me an opportunity to demonstrate to the world what ID is. Right? Until that time, I was talking about preservative-free, chemical-free, soda-free batter. People wouldn't believe. During that time, that crisis, we used an opportunity. We put up our factory live. We were the first company in the world, food factory in the world, to live stream the factory. We had nothing to hide. 8.32 lakh people visited the factory, live stream. Even today, we get visitors to the factory. We get grandmas and school kids coming in to audit the factory.
Let's talk about ID 2.0.
Yes.
17 years on, plenty there in terms of milestones that you've been able to achieve. What next now? I mean, an IPO is something that you're now actively considering?
Yes. We are looking at an IPO in 2 years. October 27, 2 years from now.
That's quite specific.
Yes.
Why October 27 particularly?
That's how the planning is done. Right? All set, planned. The process already started. We should be completing the IPO process by October 27.
And what do you intend to do with the money? How much money would you like to raise?
Yet to finalize. We haven't thought of, raising primary in that round. Let's see. ID is a profitable business. It has enough, reasonably good cash in hand. So we won't need any primary immediately.
So why then the need to IPO?
IPO was a dream. When we started, it was a dream. And hopefully in 2 years, we will be there.
So the dream was to be a listed company? Because clearly it's not about the money.
Dream was to be a listed company and become a role model for the world by doing ethical business. Without taking any shortcuts, without taking any compromises. Can it be a $1 billion business?
Can it be?
It can be.
By when?
2 years.
2 years? So to coincide with the IPO?
Yeah.
What are the milestones that you're now working towards? You're in a bunch of countries at this point in time. You're expanding your India business. You've expanded your product portfolio as well. So what are the next milestones that you're hoping to hit? What are you working towards?
As I told you, to build a clean label fresh food for the world from India. Maybe something like a Nestle from India, right? Could be the ID's next milestone for me.
Now, you're crossing many roads across many parts of the world at this point in time. So Saudi is going to be the next place where you set up your factory.
Yes, coming
what
soon.
What else in terms of your global ambitions? And what has been the most exciting but also the most challenging aspect of going global?
We have been trying to start our operation in US. I've been trying it for a couple of years now. I don't think we have been very successful in getting the operation done or started properly in US. I've recently hired a CEO for international business. Shobit has joined us recently to build this business or expand this business globally now.
Why has US particularly been so hard?
US is a large business opportunity.
But it's also a large
market. Large
yeah.
country,
yeah.
right? This product are highly perishable fresh food. With all those things, it is not that easy to get it right. And then the most important problem would be bandwidth as well, right? I mean, it was easy for me and my cousins to start in Bangalore, then go to Chennai and neighbor places. Other markets, we will need experts like Shobit and Rajat to take the journey forward.
So now, on the execution side, you have the professionals.
Yes.
So what occupies the founders today? What occupies you, for instance?
I look at technology, one aspect. I look at some innovative products, etc. That, and some disruptive ideas. That's my area of focus.
You're
now.
the disruptor in the band, is it?
Sort of.
What are you hoping to disrupt next?
We will disrupt any category of food where people are adding chemicals and preservatives and artificial flavors.
Is there anything in the pipeline, anything that we can expect to be out on the shelves anytime soon?
One thing that we are testing now is a clean label noodles.
Noodles? It's a highly competitive market. You want to be the Nestle, you want to be like the Nestle from India.
I said fresh noodles.
Fresh noodles, okay.
Clean label, fresh noodles.
Fresh noodles.
That's something which we are testing now.
Mm-hmm.
The way the new products work is 1 out of 10 becomes a super hit. So unless I try 100, I'll not get 10 right. So we will try multiple things. One such product would be this one. Another thing that I'm very confident that we will get it right this next time would be the tender coconut.
Tender coconut, which you're not giving up on. No. But I also want to ask you, we're living in a world where the GST environment has changed. In fact, GST as far as parotas were concerned was a national debate, raging national debate. How are you looking at it from your vantage point?
We were paying VAT initially, it was 5%. In the initial GST thing, it became 18%. And we appealed. I think that is still in the judicial process. So no comments about it. Now the government has made it 5%.
Yeah.
No, 0% now.
Yeah.
So even better for everyone.
So do you see that impacting demand in a significant way? Yeah.
Hopefully it will.
So you see that as a game changer?
I wouldn't say game changer, but an enabler.
PC Mustafa, always a pleasure. Thank you so much for your time again today. We look forward to ID Fresh 2.0. We look forward to seeing you being listed on the Lal Street and creating a multi-billion-dollar fresh food business here from India for the world.
Thank you.
Thank you very much. Well, with that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast. If you enjoyed this conversation, do send us your feedback and your views and suggestions. We always like to hear from you. From all of us here, for now, from the team, goodbye. Many thanks for watching.
Hello and welcome to a special Market Masters edition that coincides with the end of the second quarter earnings season. The question we're asking our guests is whether the results season shows a clear recovery in Indian earnings and hence will the foreign investors return. Our guest today is Timothy Moe, co-head of Asia Macro Research and Chief Asia Pacific Equity Strategist at Goldman Sachs. We have invited him because Goldman Sachs has just turned overweight on India from their underweight position almost 13 months ago, since October 2024. Timothy, thank you very much for coming into our studio. That's
thank you
making
very
it
much.
all the better. Okay, well, straight away, why have you turned overweight on India?
Really, Lata, the reasons are that the causal factors for engendering our downgrade 13 months ago, as you mentioned, have dissipated and look as though they're turning aside. So to be specific, we downgraded for two main reasons. One, that a lot of India's good news got priced into the market valuation in September, October of last year, when the market was trading about 25 times forward earnings. So we've been very positive in India, as many people have been, but felt a lot of that was in the price. So that was number one. And number two, we had a developing conviction that there would be what we were terming a mid-cycle slowdown in the economy and in earnings. And as I'm sure you're aware, when you have a richly priced stock meeting a downgrade, you tend to get some hyperactive move to the downside. So we just felt, look, let's step back here and take our foot off the accelerator and take our view down. And we're fortunate that our timing was reasonably apt. And since then, India has underperformed by the most in a decade or two, particularly compared to China, which has come out of its doldrums and has had a very good year. So if you look at the scorecard for year-to-date market performance, China's up 35%, and India just recently was up only 2-3% in dollar terms. And that's MSCI India, but Nifty pretty much the same. So what we figured, to your question, is, well, number one, there's been some moderation in valuation. Not colossal, but the market was coming down to maybe 22 times. So it kind of grown into its valuation to some extent. Number two, quite clearly, the economy had slowed down, but was showing signs of stabilization. And in fact, even has printed above expectation numbers for second quarter of calendar year, first quarter fiscal year. And we've been toning up numbers overall. And then at the market level, there's clear signs that the persistent downgrade cycle for earnings has really stabilized. If you look, for example, at a measure of breadth, number of analysts downgrading versus upgrading, and this is your zero line, we got to really, really deep. Almost everybody was downgrading. Now it's basically flat, and even there's a touch of upgrades. And if you look at the most recent quarter, which you mentioned, the expectation coming into that was about 9% year-on-year growth for the full market. It's actually going to come out more like 14, about 5 percentage points above. So it really, there are signs at the earnings level that things are coming into play. So you put all that together, and we just feel that the risk reward for India is now turning more favorable, especially because foreign investors have sold, since they started selling last year, about $30 billion in this downgrade, this down selling time, which is the second largest in absolute terms and relative to market cap on record. And even year to date, there's about $16 billion in net selling, which has gone on. And so if you've got lighter foreign positioning, you've got an economy which is stabilized, looks like it's picking up a little bit. Earnings, we think, will grow on a compound basis, maybe 13, 14% next couple of years. Market valuation is still rich, but acceptable. We did a bunch of work on that. We just feel risk reward looks better for India. So we figured it's time to pull the trigger.
Very good. That suits us. But do you, which sectors are you impressed with? Are you impressed mostly with consumption? Because that's where the government has given everything it can. Rate cuts, tax cuts.
Indeed, Lata. So we very much like the mass consumption theme. So I'll answer your question this way. There are a number of themes that we particularly like, which, as I said, to start with your question, would be mass consumption, because obviously the underlying dynamics, demographics, large population, per capita incomes are rising, people's consumption habits change. This is your classic sort of developing market or developing economy story, and we think that India has much to play for in that regard. Additionally, we like the theme of self-sufficiency, and this plays into defense, into energy sufficiency, and so forth. So there's a lot of aspects there. Our analysts just did a very large report, 140-page report on initiating on the Indian defense sector. And defense is a theme which we've liked regionally and globally, and I think for many reasons, which I'm sure we'd all agree with.
Yes.
In a fractious geopolitical environment, which we find ourselves in today, the theme of defense is one that's played very well, and we think India has some catch-up to go in that. And so we're quite excited about that theme, along with the theme of energy sufficiency. We also like the theme of the new economy. This is leaning into the digital economy and more delivery.
E-commerce.
Correct. Yeah, e-commerce, fast delivery, all that sort of stuff, where you see a transition from your analog to digital economy. It's not a theme unique to India, but there's a lot to play for in that regard. And then just simply the theme of high growth, where we find there are many companies that are offering good growth opportunities, particularly in the smaller mid-cap space, where you've got early emerging companies that tend to do better. So we like those four themes. And then from a sector perspective, that will be manifested in a number of the consumer areas in terms of durables. Some of the financials, the banks have particularly come out of a period of credit constraint. And so we actually initiated an investment view of longing financials versus Nifty. We thought that was an interesting catch-up performance trade for the banks. And then some select higher growth areas as well. So that's sort of our view within the market.
Okay. Just zooming out, what would be your pecking order, since you specialize in all of Asia? What's the pecking order in terms of countries in Asia?
Well, it's a great question, and frankly, we're a bit spoiled for choice here, because we like a lot, and I think the trouble we're having in terms of finding things that we don't like as much is, I think, an indication that the broader appeal and potential for Asian equities actually still looks pretty good, even after a very strong year. MSCI Asia Pacific ex-Japan Index is up 25% this year, and 40% off the lows in early April. And so we think that can continue into next year for reasons we can explore a little bit later. And as I said, we're somewhat spoiled for choice. So to be more specific, we've had a very positive view on Korea, which is the superstar this year.
Because of the AIs.
Yeah, stratospheric performance. It was actually up 90% nearly in dollar terms. And it's had a bit of a correction, but still up roughly 80. And one might think, well, after that, it's probably going to cool off. But even with that significant performance, Korea is still trading at 11 to 12 times earnings. And a good part of that is that, number one, the earnings delivery has been very strong because of the AI theme and so forth. But also, we're having a re-rating structurally of Korea because of better corporate governance, which I can get into further if you wish. But the point is that this rally in Korea started literally from 8 times earnings. So even if you're up a lot, you've only reflated to 11, 12 times earnings, which means there could still be plenty more to go for. So we like Korea. We like China. We just put out a view that over the next 2 years, we think China can go up 30% in price terms, maybe another 5% in dividend yield. And again, we think there's some structural reasons there. Taiwan, which are market weight on, but also looks good because you've got a very strong AI component there and some broader tech elements. So North Asia, we think, still looks good, including Japan, by the way.
Okay.
But then India, we like also. Maybe it's a bit early, and maybe it's going to take a little bit of time to catch up, but we like India as well. So those would be our top picks. To balance that out, in an Asia perspective, we're underweight Australia because it's richly valued and doesn't have as much growth. Not that we're necessarily outright bearish, but think it still will perform less well than the others. And then trying to be underweight as much of ASEAN as we can. These are the smaller markets, Indonesia, Malaysia, Thailand, Philippines, and so on. because they just don't have as much of that tech-focused driver.
Yeah. Clearly a developed country choice more. But, you know, the start of this year, not start, maybe after the Liberation Day, after February 1, announcements from Trump, economists actually turned very negative on global growth because of uncertainty. You won't know where to invest in which product because you don't know when you will be hit by how much tariffs. That was the narrative we got. But in your report, you'll have upgraded growth forecasts for practically every region, for the world, for the US, for parts of Euro area, and of course for Asia, in a big way, even for India.
Yeah.
Why did it change?
So great question. So first of all, we and many other economists are upgrading our forecasts on a fairly dynamic basis, given the information which comes in. And so the point of reference that you took just after Liberation Day was the nadir, the worst part of the forecast, because at that point we were looking at very, very elevated tariffs. And of course, there was this sort of tit-for-tat escalation between the US and China, where you had such colossally high tariffs that it basically was equivalent to an embargo in trade. And of course, that would have been very, very damaging for both economies. So we marked down our growth views dynamically quite aggressively. And just to give one or two numbers, we started this year, taking China as an example, with about a 4.8% GDP growth forecast for the full year. And that got marked down to about 4.1 in early April. But then, of course, as some of that tariff increase was walked back, and in China's particular case, we saw exports doing much better than we had thought, and I think consensus, we progressively marked up our numbers, so much so that today we're actually standing at 5% GDP growth for this year. And we just did the biggest upgrade to our China forecast in probably a decade, adding 50 basis points and 70 basis points to our 2026 and 2027 numbers. Now, because of this leaning into high-tech manufacturing and China's export competitiveness, and also the leverage they've got through rare earths. So the point of all this is that we've seen kind of a walking back of some of the worst fears, number one. Number two, to your question, that sort of reduces at least some of the uncertainty and makes it a little bit better environment for investment. Number three, a lot of that investment has come in, particularly in the U.S., in the hyperscalers and AI, which is really separate from the whole tariff area of concern. And then number four, just if you look at the data which has come out, just empirically, the world seems so far to be doing better than one would have thought, given the higher tariff levels. So people are just learning to live with it to a better degree. So all of that contributes to that increase in the growth forecast.
What do you think will be the catalyst that other foreign funds will wake up to the change in sentiment over India? Do you think this catalyst could be only the trade deal? Unless that happens, people are not going to come in?
So I think it's a few things like that. So if there is an announcement between the U.S. and India, as seems to be rumored, of course, the market would look at that as a good thing, because if this extra, for example, 25% tariff surplus is eradicated, and maybe there's even agreement to go to something along the lines of what both Korea and Japan have arranged bilaterally with the United States, which is about a 15% base case, with maybe, in each case, Korea or Japan buying more from the U.S. and then also investing more in the U.S. If there's some sort of agreement along those lines with that sort of flavor, I'm sure the market would take that well. Now, I don't think that the full 25% additional tariff surplus has been fully priced in, because most investors thought, well, it's probably not going to last for a long time. But the market has certainly expressed and priced some sort of concern over that. So if you know for sure that's not going to be there, that's going to be a positive. So I think that in terms of near-term catalysts, that's one which we can look to. But the other ones, I think, from an India-specific perspective, really would be delivery of growth, because I think the broader picture for India is that valuations are full. I mean, 22 times earnings, hard to argue things are on sale. We did a big piece which looks at valuations from a variety of different perspectives, and the punchline is that we think that these valuations are defensible, but we're not calling for an increase here. We think there may be even a little bit modest decrease, but roughly speaking, we could hold on to the current level. Ergo, in order to really power India and to rekindle foreign investor interest, India earnings have to come through. So I think it's really earnings delivery as we go through time will be the catalyst to get interest coming back.
A final question, and this is a macro market conflict I have in my head. India's macros have improved. We were a country up until 2013 with a 6% inflation on average. And because we adopted inflation targeting and went after it, Now we have, constrained our fiscal deficit and inflation is averaging about 4%. That is reflecting in lower nominal GDP and probably impacting earnings. But that's a good reason why earnings and nominal GDP are lower, because we controlled inflation. Don't you get brownie points for that? Or do investors like you only look at the earnings number?
No, it's a great question. I concur with you. I think that if you have an environment where you have better real growth or very good and solid real growth and inflation under control, that is a much healthier environment. And I think full credit to India for the fiscal consolidation, which has taken place, but it's been done in a gradual manner, so you kind of thread the needle between wanting to be more prudent fiscally without doing so much that you then hurt growth and have a negative spillover effect. So I think that the policymakers have done a very commendable job in that regard. I think that the silver lining, as you said, in that slight cloud of lower nominal GDP is that a lower inflation environment certainly allows the RBI to be more accommodative. And I think it also may calm fears about currency weakness. So if you get a more stable rupee and lower interest rates, well, lower interest rates are obviously good for markets through valuation. So I think that there's that positive pass-through effect from lower rates, which may mitigate the lower.
No, you're right that the inflation differential narrowing so much between India and the US is not reflecting in the currency just yet.
Correct.
But do you think the rupee's worst is over?
So our overall view, as I mentioned earlier, is that the US dollar should weaken on a structural basis. India's had some challenges this year, and the rupee's been on the weaker side, along with the Indonesian rupiah. But we think here it's sort of probably roughly range traded stable. So we don't think it appreciates as much as some other currencies, for example, the Korean won, which I think is very undervalued here. It should rise, and the Taiwan dollar as well. But we think it can sort of hold its own. So I think from a U.S. dollar investor perspective, you're probably okay in U.S. dollar, keeping score in U.S. dollars. And then the real heavy lifting will have to be done by earnings delivery and growth.
Thank you very much, Timothy Moe, for your views and for dropping into our studio today. I do hope other funds follow Goldman Sachs' view and change their view on India and rate it overweight. Well, we have to take a break on that note, but I'm back with another guest on our Market Masters edition. Leif Eskison, the chief economist from CLSA, will join us after the break. Welcome back to Market Masters. So, the show where we are asking if India is on the cusp of a re-rating. My guest now is Leif Eskison, the chief economist at CLSA. Leif, good morning, and thank you very much indeed for joining us. Well, let me start by asking you that India's second quarter, what we call second quarter, July, August, September quarter, GDP number is due in a week. Has there been a recent upgrade from CLSA? What's the number we should be prepared for?
Yeah, so if you look at the current fiscal year we're looking at growth coming in just a hair below 7%, so 6.9% to be exact, right? So relative to the first quarter of the fiscal year, it does, you can say, imply some slowdown in growth during the remaining 3 quarters of the fiscal year. That sort of slowdown, I would say, is sort of driven essentially by 2 factors. One is because the government has to sort of rein in to some extent, you can say, spending to meet the deficit target. We think there'll be some sort of slowdown on that side, maybe sort of government-led infrastructure type investments. And then also the sort of, should we say, lagged effect of the higher tariffs that got imposed on India from the US. And also a slowdown we're seeing in global trade in the, should we say, in the incoming quarters as well, would be the 2 factors that will drive that. I guess if we start to see the effect of some of the GST reform, that could provide a bit of a lift to the consumption side of things, right? So that's why the slowdown we are looking at in the remaining of the fiscal year is not that significant. So as I said, full year fiscal at 6.9%.
Would you put an upward bias to that 6.9? Because of the GST cuts and the probability of a trade deal with the US?
Yeah, I mean, certainly, I think the the chances of a trade deal have gone up, right? I mean, Trump has certainly indicated as much, and the two sides are still negotiating on that front, right? So whether it happens on this in this calendar year or in the beginning of the next calendar year, so the last quarter of the fiscal, we will have to see, right? But I suspect that we could move towards a deal, right, where maybe the tariff rate that's imposed on India lands at something similar to what we're seeing for other Asian economies, to say around 20% thereabouts, right? And then, of course, there'll be some give and take also in terms of purchases and opening up for certain sectors, that will be part of that broader deal, sort of in similar fashion, but not quite the same as we've seen from some of the other Asian economies, right, where they've entered deals with the US.
Okay. Well, is there any, I mean, this is not really an economist's question, it's more your equity strategist question, but do you see the global view on India changing? We've seen the largest amount of foreign investment outflows from India. But now, as you know, the GST cuts and the income tax cuts in India work in and earnings improve, and probably the trade deal comes in, do you see the movement of funds back into India? I mean, a lot of the rupee depends on that. That's why I'm asking.
Yeah, I mean, so I think, given our view on, should we say, U.S. equities being quite frothy, right, and should we say a little bubbly, if you will, right? I mean, we do also see a relatively high probability of a correction in U.S. equities, and that also would imply, should we say, more of a sort of less risk appetite, more broadly speaking, globally, right? So I think it will be hard for Indian equities to sort of buck the trend in that type of environment. But if you look, should we say, beyond that potential correction, and if there's also maybe some further correction in India in the context of that as well, right, and valuations are maybe somewhat less, should we say, challenging to the extent they are now, then maybe there could be a bit more scope if we start to see the GST reform adding to the growth impulse in India, right? And if growth holds up relatively well, that there could maybe be some resumption on the other side of this of equity investors coming in, right? But I think valuations still are quite high. I think positioning domestically is still quite long in the tooth as well, right? So I think that is still something that does pose, I guess, challenges from the point of view of foreign investors in the near term, right? So maybe a healthy correction could be a good sort of starting point, right, for seeing flows coming back in.
Okay. Well, just a final word. How many rate cuts do you see from the Reserve Bank? Is it just one in December or, more?
So we currently have two. 25 basis points in each of the two following meetings, right? So we're not buying it. We're not looking for 50 basis points in December, which I think came up after the latest inflation number, right? But I think what you need to look at is, if you look at core inflation, right, in India, still added around the target, right? So I don't think there's necessarily a case for cutting by 50. So 25 basis points in December, and then subsequently another 25 basis points.
Okay, got that. Thank you very much, Lee Feskison, for joining us and giving us a view of both the US economy, the global economy, and where Indian rates are headed. Thank you very much for joining us in this special edition of Market Masters.
Well, hello and welcome to Finding Alpha. I'm Nigel D'Souza in the Mumbai News Center. Today on Finding Alpha, we decode the big shifts shaping India's consumption universe, the leadership transformations, intensifying competition, and sector cycles, all of them at play. The questions that we're asking: are the major headwinds easing for paints? Can Britannia maintain its momentum post Mr. Varun Berry? And is Titan ready to sparkle again despite competition? Joining us to break all of this down for us is Mihir Shah of Nomura. Well, Mihir, thanks a lot for coming down to the studio. Good to have you in person. And, before we get to discussing all those topics, congratulations on that big call on paints as well. Let's discuss all things consumption. Mihir, thanks for coming down.
Thank you, Nigel, and pleasure to be here.
Well, let's get straight then to the hot topic, paints, right? Now, at the start of November, you had this anti-consensus call. You went ahead and you upgraded both Asian Paints as well as Berger Paints. Could you tell us what were the key factors that led to this kind of shift in view, and what changed fundamentally in the industry or maybe on a company-wise data point? Tell us what made you take this bold call.
Absolutely. See, the paint sector was, going through some overhang, largely because of fear of competitive intensity, disrupting the growth profile and margin profile. This actually came into light after Bilaupus had actually highlighted a very significant large investment of 10,000 crores. Now, historically, there have been many other paint companies that have, forayed into paints, but such large capex was never announced. So it remained to be seen whether it will be impacting the sector or not.
Yeah.
So that was the key overhang the sector was facing. What we have realized over time, over the past 2 years since the launch, is going to be just a few months away from their second anniversary of launch. We saw that the disruption that was expected or there was fear, we saw, it was not materializing enough.
Yeah.
If you see the product prices, the product prices are very similar to the other legacy players. They were giving some introductory offer of 10%. If you see the dealer margins, again, a shade higher, but nothing significantly higher to cause any kind of disruption. If you see the impact on margins of Asian Paints or Berger Paints from the